US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Lots of you writing in, lots of you publishing. This is the latest from Evercore and Krishna Gua off the back of this court decision here in New York. It's risk-friendly, but does not mean an end to Trump trade wars, with the administration likely to backfill with actions under more conventional and legally secure authorities. That's the consensus building on Wall Street this morning as the gains fade in the equity market on the S&P 500 at the moment. Still up nicely, but NVIDIA in the mix here in a big way. The S&P 500 up by more than 1%. The Nasdaq up by 1.6. Under surveillance this morning, Trump's tariffs under threat.
Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threat.
And, you know, if I set a number at a ridiculous high number and I go down a little bit, I chicken out. I've never heard that. You mean because I reduced China from 145% that I set down to 100 and then down to another number, and because I gave the European Union a 50% tax, you call that chickening out?
Here's the latest this morning. A federal court blocking President Trump from imposing his sweeping Liberation Day tariffs. The White House is vowing to appeal. Libby Cantrell of PIMCO joins us now for more. Libby, good morning.
Good morning.
What's the message from you to the clients this morning?
Yeah, I think what the message is that the worst case has been avoided for sure. I think that, like your previous guest, we are not going to see, unlikely to see 145% tariffs rolling back on in China. However, it is not an all clear, and that's for the very reason that you just mentioned, which is that the president has wide latitude using other statutory authorities, whether it's something called Section 122 of the 1974 Trade Act that allows him to impose up to 15% tariffs for 150 days. I would not be surprised if we saw him actually move forward with that, replacing that 10% baseline that was just obviously rolled back by the courts and using that authority. He also has Section 301, which he could impose tariffs on China immediately. That's a live, active investigation. And there's something called Section 338 from the 1930 Tariff Act. So I think the upshot here is that IEEPA provided him with a lot of flexibility, a lot of negotiating power, because he could roll tariffs on and roll tariffs off. These statutes are more limited, usually require some investigation and what have you. But the upshot here is that there is not an all clear from a tariff policy perspective. We will see additional tariffs. And again, I would not be surprised if we didn't see them over the next few days or so.
Well, let's explore the 122, which everyone, even this court, thinks Trump should have used. Is that the end destination, or is it bridged to another authority like a 338 or 301?
Yeah, I mean, I think that's an excellent question. Because Section 122 does have these sort of limitations, you can only impose them for 150 days, and then they have to basically go back to Congress to move forward. You know, I think that it will look likely a bridge to something else, probably to Section 301. Again, I think that if you kind of go back to January 20th, when President Trump was inaugurated, those were the authorities that I think many of us thought he was going to use. I mean, there was wide question about the legal ability for him to use IEEPA in this very broad-based way, and then, of course, to use them on countries with whom we have trade surpluses, I think did call into question whether this was sort of a national emergency and what have you. So I think if you, again, all those authorities that were available to him January 20th that we thought he was going to use, I think those seem more likely. But again, those do have some guardrails. Some of them do require some investigation, so they're longer based. I would say the upshot, though, is they're more legally durable. So they're not going to be as vulnerable to a legal challenge as certainly IEEPA obviously was.
What happens with the UK right now? Because that is a deal that's already been struck but kept a 10% baseline. Now the court is saying that 10% baseline is illegal.
Yes, so I think that remains to be seen. Now, I don't think, the UK we hadn't really seen that deal materialize. That was a little bit in name only. So I think, again, it's open question what happens to that deal, but then also to all these open negotiations, whether it's with the EU or Japan. I think importantly, though, some of the more punitive tariffs as it relates to, say, Japan, this Section 232 25% tariffs on autos, those stick around, right? So that is a legal authority that is durable, that has not been overturned by this court decision. So that is an important kind of, something to factor in.
If you're a corporate executive, there are a couple different ways to look at this. On one hand, you could say the path of travel is still clear. There are going to be other methods of tariffs that are put on. The other way you could look at it is, this all feels very fungible, changes on the day. If I wait it out for a couple years, I can just keep my plans in place, maybe delay things, but keep everything kind of the way it was before. Which path are they picking?
Yeah, I think that's also an open question. And I think obviously depends on the sector. I think what we've seen from some companies is that they have announced some future investment. Whether that investment actually comes to fruition or not, I think, again, remains to be seen. So obviously a lot of open questions here. But I do think this underscores for a company just how much uncertainty there is around this agenda, and the fact that President Trump is only going to be in office for the next 3.5 years. Regardless of what happens, he is not going to be running for re-election. We will have a different president come 2029. And so if you are a corporate executive, that obviously is going to inform your perspective. I only highlight that because I do think if this were the first few months of his first administration, then those corporations may be more willing to make those investments than they are now, just because of the shorter period of time.
So let's build on that. Each delay, does it matter? In the sense that, it's just okay, 10 days, 20 days, 2 months, it's not that big of a deal if the path of travel is still the same. Or does it? Are some of these delays actually crucial for these companies to understand how to navigate this?
Yeah, and again, I think this is I think we should watch over the next few days, because if they do, move forward with a, say, universal tariff under Section 122, then I think it's going to be a reminder that, again, these tariffs, maybe via different statutory, avenues or what have you, are going to be here to stay. So I do think it matters, but I think the upshot for investors, for our clients, is that the worst case scenario has been avoided. That 30% effective tariff rate that we were all looking at, in those first weeks of April, that is very unlikely to come to fruition just because of the limitations around these other statutes. But again, I think this is not an all clear, and from a financial markets perspective, I think that's a really important message.
Do you think, though, it changes the White House strategy of wanting to get this all wrapped up by July 9th?
Well, yeah, I think that July 9th sort of that deadline becomes a little bit irrelevant, right? I don't know if you're the EU, do you still have that same sort of, immediacy or a sense of urgency in terms of negotiating or making concessions with the Trump administration? Probably not. Now, again, if we think that the Section 122, say a universal tariff, is a bridge to a Section 301 tariff, which could be, deeper and more broad-based tariffs on countries specific, then I think that will bring negotiating partners to the table. But I do think this really sort of changes the calculus. One last thing I will just say, though, and something I think our traders have already asked me last night, is does this change sort of the calculus around the tax bill, right? If you're a member of Congress and you were expecting $250, $300 billion of annual revenue from tariffs, does this make you a little bit more queasy to actually vote for sort of this big, $3 trillion plus bill? I think probably not. I actually don't think this really does change that. But I think intellectually or academically, you might think that it would. I just don't think it does.
Does it change the bond market's response?
I do think, I think, you're seeing a little bit of relief in the bond market. Maybe from an institutional perspective, this sort of reminds, foreign investors in particular that there are some checks and balances on presidential power. I think a lot of our foreign clients had thought, we thought that there was, the Congress and the judiciary. And I do think this sort of reasserts the fact that, yes, there are going to be some limits. The president and his team, I think by design, want to push the limits of executive authority. But there obviously, there are some checks. The bond market, but also the courts, more importantly.
This is actually an argument that Peter Navarro made in an opinion piece just yesterday. He's catching up with us a little bit later this morning, making the argument that he was complaining about the scoring down in Washington, that it didn't account for the tariff revenue, and this might be an explanation as to why it didn't.
And he's still pushing for this idea of the External Revenue Service, this basically what we already have with the customs, to bring in all of that money to offset the tax plan. But to Libby's point, it doesn't really matter.
Libby, just quickly, for anyone playing trade section bingo this morning, 301. unfair trade practices. Why didn't they start there this time around? They did in the first term. Why not in the second term?
Because that does require months-long investigation. It's a little bit of a nuance. There's an open investigation on China, this Section 301 investigation, so they could have imposed tariffs just on China using that open investigation. But for any other country, they would have to actually pursue another kind of months-long investigation. But again, as to our conversation earlier, I think they could use Section 122, a temporary tariff, to get to a broader destination in terms of more tariffs on other country specifics.
Libby, this was a clinic, as we expected it to be. We appreciate it. Thank you. Libby Cantrell there of PIMCO. Sand in the gears. We've heard all sorts so far this morning, but ultimately it doesn't change the president's pursuit of his ultimate objective, which is to put tariffs up on some of our trade partners.
And Libby just said, expect it in the next couple of days. It's not necessarily going to take weeks. He'll just go to other provisions. The key question is, and I think it's a good one, does this change the calculus as far as revenue for the government from some of these tariffs?
Equities positive this morning by 1 full percentage point. That is down, not just to this story, but also to this one. Dan Ives of Wedbush on why he thinks NVIDIA is still fueling the AI revolution. NVIDIA, and that conversation is up next. Live from New York City this morning. Good morning. You're watching Bloomberg TV.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Is this a negotiation or the new rules of the game?
It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly.
There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case, very quickly, becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything.
The bounce is being sold. Equities just about positive by 1% on the S&P, up on the Nasdaq by 1.4%. Overwhelmingly, the takeaway sounds like this morning on Wall Street. PIMCO's Libby Cantrell, it slows them down, but ultimately they won't change course. BMO just moments ago, while the ruling could greatly limit the White House's ability to wage a trade war, uncertainty about future trade policies will remain high. And I mentioned Evercore a little bit earlier on. It does not mean an end to Trump trade wars, with the admin likely to backfill with actions under more conventional and legally secure authorities, which is why some of this fades. A reason why it's not fading, though, is Nvidia's still flying in the pre-market. So let's get you that and more with your morning movers. Here's Danny Berger. Hey, Danny.
Hey, John. Yeah, with this move, Nvidia, when it opens, should yet again become the biggest company in the world, taking over Microsoft's market cap. It was up 6%. It's ebbed ever so slightly to 5.5%, but still decisively up. $45 billion is their expectation for second quarter revenue, and that is despite an $8 billion hit from China. So the news still good there. Also looking at Kohl's, they reported earnings just moments ago. Those shares also up 4.3%. One thing to keep in mind, though, these are down 40% so far this year, so expectations were quite low because they reported comparable same-store sales that were down. They just weren't down as much as expected. It's been a really tumultuous period for them. They've been trying to re-engineer a turnaround given those slowing sales, and they had quite a dramatic exit of their CEO earlier this year, too. We also learned in the past half hour about a new partnership between United and JetBlue. Both those shares up at least 1.5% off the back of that. You'll be able to use loyalty points and cross-book between the two. I think the new program is called Blue Sky Alliance, if I'm not mistaken. As part of this alliance, United will also get to use some of JetBlue's airways in JFK, so they become a little less reliant on Newark, and JetBlue, for its point, will be able to use some of the time slots for United at Newark, although those shares now just turning negative, but United still up 2%, John.
Danny, thank you. Didn't JetBlue do this with American not so long ago, and then the courts basically blew it up?
There have been different tie-ups with JetBlue. Spirit and JetBlue were talking about tying together, and that got blown up by courts. American, I do wonder whether this avoids some of that antitrust concern, given the fact that it's very delicately crafted.
Okay. It's one to watch, that's for sure. On our radar this morning, our top story, President Trump's trade strategy upended. A U.S. court declaring the president wrongly invoked a 1977 law by imposing his Liberation Day tariffs. The White House planning to appeal the ruling.
They're going to plan to appeal, and they're probably also going to plan to find another avenue to keep the tariffs in place, like 122, which we've talked about. Even in the ruling itself, it says this probably would have been a better idea, more legally sound. I want to go back to what you said earlier when you mentioned Neil Dutta. Tariffs are a dial, not an on and off switch, and if you think the judiciary gets to be the one to turn the knob, seek help. AKA, this administration has a plan in place. Yes, there might be a detour in the journey, but the end destination is very clear.
They've got a lot of tools at their disposal. I think you said earlier on the program there's a lot still on the menu. You'll hear people talk about Section 232, national security, that's still aluminum. Section 301, that's how they pursued tariffs in the first term against China. There's a lot this administration can still do.
At the same time, they want to move fast. And some of these other measures take a longer period of time and have bigger caps. In other words, they can't raise tariffs as high. So it raises a question about, again, what people have been talking about, the worst case scenario being taken off the table, some tail risk being taken off the table, because they can't move as fast as they want to, given that this president only has 3.5 years left.
We've all asked this question. I just wonder how it influences negotiations in the coming weeks. How seriously the Europeans say, who are facing the threat of a 50% tariff on July 9th, how seriously they take that this time around.
So I think this is twofold. One is that in Section 122, which is if they go that route, you can only go as high as 15% for 150 days. So the sky-high 20, 30, 40, 50% tariff levels, those come off the table, which you think if you're negotiating with the White House, that gives you a lot more leverage. But Libby made a really great point, Libby Cantrell of PIMCO. When it comes to some places like Japan and the European Union, the 25% auto tariffs, those stay. The court's not saying those aren't legally sound, and that is something that You have the European Union, Brussels, and Tokyo. They want to see that 25% lifted.
That's the latest on trade. We'll be returning to that, of course, throughout this morning. The latest on NVIDIA, delivering a solid sales forecast, ramping up Blackwell chip production, and saying the AI market is poised for exponential growth. But the chip giant expecting an $8 billion revenue hit in its fiscal second quarter on China export restrictions. That stock is still flying by 5.6%. We'll come back to that in just a moment. Wanted to squeeze this in. First buddy, Elon Musk's time at the White House coming to a close. Musk posting on X, quote, "I would like to thank President Trump for the opportunity to reduce wasteful spending. The Doge mission will only strengthen over time as it becomes a way of life throughout the government."
A way of life throughout the government, potentially. Remember, Elon Musk busted into the scene in Washington, D.C. I remember him talking about cutting $2 trillion from the government. He did not do that. It's really a far cry from what he was able to cut, more like in the low hundreds of billions of dollars. And now he's leaving. And I think there's a big question on how much influence he's still going to have in this White House, given the fact that he's going back to Austin. He's really focusing on Tesla.
I wonder if there is a legacy, though, whether it helped reshape the psychology and how we approach spending in Washington, not just for people who work in Washington, D.C., for the country at large. I think this brought a massive light, shone a huge light on how much wasteful spending was taking place in Washington.
There was a lot of popular support for cutting waste. Question is, how do you do that? And my question is, going forward, is there going to be a methodological way to go through, understand which programs could potentially be run more efficiently? And if that's the case, I think a lot of people would cheer that on all sides of the aisle.
That's the latest in the nation's capital. Let's turn back to NVIDIA, the chip giant, delivering a solid sales forecast despite restrictions on China exports.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now.
That was Jensen Huang. Dan Ives of Wedbush has this to say: there is one chip in the world fueling the AI revolution, and it's NVIDIA. The AI revolution is heading into its next gear of growth despite the Trump tariff war playing out. Dan joins us now for more. Dan, good morning.
Great to be here.
What did you like most yesterday?
I mean, look, the godfather of AI, Jensen, delivered yet again. And I think if you look demand, outstripping supply, we believe 8-1. And despite the China tariffs, I mean, I think if you look apples to apples, that would have been a $53 billion number compared to where the street, apples to apples, would have been at $48 billion. I think it just shows there's only one chip fueling this AI revolution. It's Jensen and NVIDIA.
There's a question of whether they'll be allowed to fuel that AI revolution. In other words, if they will be allowed to move into China in the way that they kind of need to longer term in order to maintain that dominance. What about yesterday gave you that confidence, given the fact that there still are some pretty existential risks about their ability to operate in China?
Yeah, I know you'll talk to Navarro after. Look, the reality is that Jensen and NVIDIA are essentially giving away their China business. On a silver platter, Huawei, here's our business. And that's the reality. And I think more and more, there's going to have to be some negotiation where they're enabled behind, right now, back against the wall. They need to have a chip that U.S. sanctioned that they could sell into China. Because otherwise, all you're doing here is you're cutting them off at the knees, and Huawei is getting that market. And that's the reality. And I think that was a shot across the bow last night from Jensen. They are in a position of strength. There's one chip in the world fueling it. They continue to see demand that's, I believe, staggering.
There was sort of a subtle narrative shift. There's been a tone from the administration, both this one as well as the Biden administration, that the way to curtail China's advance is to limit some of the exports of U.S. chips and U.S. technology to the world's second biggest economy. It seemed like Jensen Huang was saying that's not right. They're actually catching up. And if we separate ourselves, we're going to fall behind. How much is that catching on in any kind of policy circles, but also within the tech circles?
Yeah, I mean, as someone like myself, I've spent so much of my career, in China, in Taiwan, throughout Asia. That's unrealistic that think that China's just going to sit there. I mean, if you put them in a box with 2 toothpicks, seltzer water, and sunglasses, they come out with a chip. So the reality is you don't want to give them fuel. And I think that's what Jensen's talking about. You have some of the best engineers in the world. Right now, for the first time in 30 years, the U.S. is ahead of China when it comes to tech. Don't cut U.S. tech off at the knees. And I think that speaks to NVIDIA, speaks to Apple. And I think those are some of the things that you're hearing across the board that we're seeing in tech. And I think that's some of the damage and the balancing act that you guys see with these tariffs.
Do you think Jensen Huang then is going to have the company develop a chip that is export compliant to go into China?
100%.
But why would he do that if he did that with the H20 and then the United States said you can't sell it?
It speaks in negotiation, because it comes down to, like, Jensen also recognizes in the Middle East and the red carpet tour, and the reality is, what's that tour without Jensen? What happens to Jensen? Like, yeah, we're not going to sell in the Middle East. I mean, it just speaks to, like, our biggest chips on the table. It's NVIDIA, it's Apple, in terms of broader negotiation.
But why would China want to buy a lesser chip when Jensen Huang is saying himself that Huawei, which is blacklisted by the United States, is quite formidable?
Look, and I think that right now is like they're going to come up with there's something like beyond an H200, less than a Blackwell, some sort of converted chip, because they need to stay ahead of Huawei in the China market. And that's why when you look at the reaction here, why tech's going to be up so much, despite, you know, even like the trade rule and everything we saw, it's because NVIDIA shows that this AI revolution right now is the ripple effect, but it all starts with NVIDIA.
Don't you think there's some tension brewing here?
100%.
The president doesn't want them selling into China. Jensen Huang's trying to create an argument that they should sell into China. The Wall Street Journal reporting this morning. I'll read this verbatim. Fresh accusations from U.S. lawmakers that the company is too close to China. They've received a letter from a Republican, Senator Jim Banks, a Democrat, Senator Elizabeth Warren, accusing them of being too close to the second largest economy on the planet. How do you actually think this is going to play out?
Look, I remember, it's easy, when you're in the beltway in front of a microphone, it's easy to say things, right? The reality of the markets are different. And I think it just comes down to U.S. tech. Part of why U.S. tech's leading China is that you need to have that market open up, and it speaks to the U.S.-China negotiations, why it's so important, not just for names like NVIDIA, but for Apple as well as the hyperscalers.
You say you need to have that market open up. Who's you?
U.S. tech needs that market.
Yes, US tech does. Washington, D.C. disagrees. And isn't that the ultimate point of tension? And I would argue who wins out? The person setting the rules, which is Washington, D.C.
And I would, and I think that point in tension has been there for years. But the reality is that by ultimately closing off that market, what you're essentially doing is you're cutting U.S. tech off at the knees, and on a silver platter, you're making China stronger. So it goes to the whole Twilight Zone, however you want to think about it, is that this is all giving China an upper hand. That's what Jensen's saying last night, is like, we're leading. You continue to go down this path, Huawei will continue to narrow the gap.
To build on what John is talking about, there was a feeling that national security concerns would take precedence over profitability, over this idea that the tech giants really were necessarily leading the world. Do you think that that argument has fallen apart, and that this administration essentially has put tech giants and their dominance at the forefront, even ahead of national security?
And I think it's I think it speaks in, I think that Middle East trip was a watershed event, because it shows the AI revolution now coming to the Middle East. But what does that mean without NVIDIA, without Amazon, without the hyperscalers?
Also, AI revolution coming to the Middle East with a caveat. They need to make sure there are guardrails so that these AI data centers do not have U.S. technology leaking to China.
And to your point, you can't have both. You can't have your cake and eat it too, right? The point is, like, how could you do with the Middle East, but then China be like, okay, you can't have these chips, but we're going to sell next-gen Blackwell chips to Saudi, UAE. And I think that's part of the issue. Like, John, I think that's part of the issue here, is that, like, how do you balance that and talk out of both sides of your mouth? And the reality is what Jensen's saying is, stop tying our hands behind our back. Stop giving this market to Huawei. Let us go after that market.
I appreciate the argument. I just wonder how persuasive it actually is in Washington at the moment. Dan, enjoyed stress testing this argument, and I can see how bullish you are. Bright orange, bright pink. Dollar signs on the sneakers today. NVIDIA's higher by 5.5%. Speaks for itself. Dan, thank you, sir.
Thank you.
Dan Ives of Wedbush. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here is Danny Berger. Hey, Danny.
Hey, John. Best Buy falling 2% in the pre-market, cutting its full-year forecast as it faces tariff impacts on imports from China, its top source of goods. Best Buy also dealing with consumers pulling back on discretionary purchases. Best Buy has struggled with sales declining over the past 3 years. To the upside, Kohl's shares are higher by more than 5%. It reported better than expected comparable sales, confirmed its full-year outlook. Kohl's Kohl's is currently looking for a new CEO after firing its previous leader after only 4 months in the job for directing millions of dollars of business to a person with whom he had a personal relationship. Meanwhile, Elon Musk is taking an optimistic view after the third mid-flight loss of a SpaceX Starship. The mission ended about halfway into the flight when Starship spun out of control and disintegrated. In a social media post, Musk praised how long Starship flew and the strength of its heat shield. He also vowed to speed up launches to one every 3 to 4 weeks. And that's your brief, John.
Hey, Danny, thank you. More from Danny in the next hour. Up next on the program, the trade story isn't over.
This was not the president's only avenue for imposing tariffs, and the story here is not done. It would be a little bit foolish for countries to just assume that this is over for the president.
Up next, Michael Zedis of Morgan Stanley, live from New York City this morning. You're watching Bloomberg TV.
The President of the United States does say he wants to keep a more mutually beneficial trade balance with these countries. What does a country like Egypt and Kenya and some of these others have to provide that won't completely dent their own GDP?
No, it's tough. I mean, there is the commodity side. There is the. I think it's less about bringing it to the table and more trying to take advantage of the hit elsewhere. So China exports 30% of all the textile exports to America come from China in 2023. It's something like $40 billion. And whatever the tariff rate ends up being on China is going to be a lot higher than it is on Africa. So there might be scope for African countries to say, well, let's move those textile factories.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
We said this earlier this morning. You can thank 3 judges on a U.S. court and a rally in NVIDIA for this morning's rally. Equity futures on the S&P up by 1%, on the NASDAQ up by 1.4%. The move in NVIDIA in the pre-market looks like this. In the pre-market right now, higher by 5.36% off the back of earnings and guidance from the company just yesterday. Under surveillance this morning, the trade story isn't over.
This was not the president's only avenue for imposing tariffs, and the story here is not done. The president has a menu of options to choose from when it comes to tariffs. This is going to be challenged in the courts. It would be a little bit foolish for countries to just assume that this is over for the president.
It's the latest this morning. A federal court blocking some of President Donald Trump's Liberation Day tariffs, the White House vowing to appeal. Michael Zezas of Morgan Stanley joins us around a table for more. Michael, good morning. It's good to see you.
Good morning.
This from Deutsche Bank this morning, glass half full, is that it reaffirms a peak in macro noise related to trade, in that it increases the likelihood that tariffs are shaped less by geostrategic considerations and more sector, product, country wants. Would you agree with that?
I think there's something to the idea that the more durable tariffs here are going to be the sectoral-based ones, but the idea that we might get rid of the kind of blanket global import tariffs that were effectively put on through IEEPA, I wouldn't abandon that view yet. I mean, the problem is that there are multiple paths the administration can get to sort of stitch together to get back there, right? I think some of the guests earlier have already talked about that. And that can be through multiple Section 301 studies. It could be a court injunction. It could be through some of the temporary tariff authorities. So I think, yes, there's something to the idea that the more durable tariffs are going to be those product-specific ones. But the tariff levels that we had yesterday are probably going to be the tariff levels that we have tomorrow, because there are so many different authorities that the administration can reach into to put it back together.
So what does this actually do, tangibly? Does it change negotiations?
I don't think it does, because, again, that authority to raise and escalate, it might be a little bit sort of slower moving, but it's still there, right? And these negotiations are always going to take a considerable amount of time, in our view, right? Take the Japan example. That, in theory, should move pretty quickly. There aren't a lot of existential disagreements between the U.S. and Japan, but one of them is actually on product-specific tariffs around automobiles. That authority is there. That really hasn't changed. That's probably pretty durable. I can't tell you exactly how that's going to be worked out, but because that was already going to take a bunch of time, within that time, the U.S. can stitch together that authority on the other tariffs that went away, so all the same leverage is effectively there during the negotiation.
But do any of the trading partners have more leverage now, given the fact that the White House is fighting with its own court?
They could argue that they would, but again, you'd have to ask the White House their perspective. But my guess is that they probably feel like they have a lot of options and might not be receptive to the idea that they've lost leverage in this situation.
We have seen a bounce, a bit of a bounce, although it's coming back, as John was mentioning, in equity markets. We haven't seen that much of a bounce in the dollar. You could see euro-dollar basically flat, DXY up just marginally. How important is that to you as sort of a gauge of how this is viewed internationally?
Yeah, I mean, I think it's important. I mean, so weaker dollar on higher tariffs and kind of weaker dollar on a variety of policy choices that I think are telling overseas investors that there's perhaps a difference in how they're going to be viewed by this administration. So, for example, inside of the House Republican version of the tax bill, the Section 899 provision, it all sort of sends a signal to overseas investors that the dollar might be more volatile than it used to be. It's on a weakening path, partly because the growth differential between the U.S. and places like Europe is going to be a bit higher / weaker over the next 1 to 2 years. So it all fits into the same narrative of dollar weakness. And I guess if we were to have seen this court case largely undo all of these tariffs in a kind of reliable or semi-permanent way, or really reduce the probability that there would be durable tariffs coming from the U.S. to the rest of the world, maybe that would be different. But that's not the signal that I think you take from the events of the last 24 hours.
There are two things that are going on. The dollar is basically flat or not necessarily gaining all that much. You're also seeing yields higher, possibly on the prospect of faster growth, possibly on the fact that you're not going to get the revenue, as Libby Cantrell was talking about, from the tariffs to bolster some of the deficit spending or the deficit that's being incurred by the bill currently that passed Congress. How much are you factoring that in? How much is that a relevant argument to you?
Yeah, I mean, it's unclear, and I don't want to project too much from just a few hours of market reaction, but all those things are possible or plausible. Probably the most likely reaction is that tariffs lower should equal growth higher, should therefore be reflected in higher yields generically. But yeah, there's an element of questioning whether or not the revenue is going to be there. There's an element of questioning what this says about kind of U.S. institutional security in general. But I'd be hesitant to sort of say it's one of those things specifically. It's probably a kind of stew of various different things.
If you're sitting in Congress, if you're a senator, and you're looking at this bill and you're questioning the revenue, does it give you any pause about pushing forward on the one big beautiful bill?
Probably not. I mean, the tariff revenue sort of always existed outside of the congressional deliberation. And so when we put together our deficit projections, always include that revenue. But it's a question as to whether or not members of the House of Representatives and the Senate who are really concerned about deficits were willing to at least kind of mentally account for this revenue as a deficit offset when they're kind of selling the broader bill. I think effectively we know kind of who's in that camp and who's not based on what happened in the House, which is to say most deficit hawks were comfortable with the package as it was, so the tariff revenue thing must have de facto been fine for them. This to me doesn't really change anything because again, you've got the same authority that can be stitched back together probably very quickly to get you to whatever revenue levels you were assuming, get you back to those levels pretty quickly.
How aware are members of Congress of the conversation taking place on Wall Street? Bob Michael of JP Morgan Asset Management was sat in your seat in the last hour, and he said he didn't really want to touch the long end of the curve. He was going to leave that for someone else. He thinks some bad things might happen. How aware are they of what's being discussed up here in New York?
Yeah, I mean, I think it probably varies member by member, but there is, let's say, the sort of policy line being argued by Republicans and certainly by the White House is that the bond market will eventually sort of understand that these are policies that will boost growth and get deficit as a percentage of GDP levels down. Now, and so if you're willing to sort of take that line, then you might not be terribly concerned by some of the moves going on in the market. Obviously, we think, and our projection is that deficits as a percentage of GDP next year will go higher. And so we wouldn't expect the market to sort of have the reaction the White House is expecting. But again, we're sort of in this zone right now where you can argue and debate about what will actually happen, and that's sort of a problem for the future, if you will.
Well, it's great to get your views, anyway, to bring some clarity to all of this. Michael Zezas there of Morgan Stanley. And fixed income this morning, yields are just a little bit higher on a 10-year by 2 basis points, back through 450, presumably because a lot of people believe that the ruling overnight unlocks a better outlook for the economy, perhaps.
You've got the fewest number of rate cuts being priced in for the rest of the year going back to early in February, because right now people are not seeing that weakness that is likely to come, the suppression to growth that would have come from some of these tariffs.
Futures positive too, but fading, up by 0.84% on the S&P 500. Up next, Anastasia Amoroso of iCapital, Bloomberg's Ed Ludlow, fresh off his interview with Jensen Huang of NVIDIA. We'll catch up with Nita Richardson of ADP and the senior Trump trade advisor, Peter Navarro. All of that and more in the next hour of Bloomberg Surveillance.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit. Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What is the issue between the type of information that's being collected by investors and the marking issue that you're describing?
What mark-to-market assets do is it forces honesty.
into the situation. We're talking right after the DeepSeek model surprised everybody in its efficiency. It took hundreds of billions off of market caps because it legitimately raised concerns that maybe the future of AI was different. I guarantee you that if you look at other portfolios that aren't marked, they didn't move. If private assets are going to eat the world, as they say, with the equity market halving in the number of names, you come to a world that is increasingly an echo chamber. Imagine you have a firm that has some public assets and some private assets. If you see your public assets in AI going down by 20%, you're going to be thinking very, very deeply about what your private assets are worth differently than someone who just has the latter.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg. Tech is still where it's at, and I know that right here is the best place to do that.
We think there are some very macro, strong tailwinds ahead of us.
Corporate America's healthy, and it's called a business cycle for a reason. There's just been some uncertainty in the market. You can't argue that.
It's probably a bumpy road ahead. It will come with some volatility.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
A court ruling potentially disrupting the president's trade agenda overnight. I can tell you so far this morning, in the first 2 hours of this program, we have had a lot of pushback from a lot of people pouring freezing cold water over that take. Equity futures, the gains are half of what they were overnight. We're up by 0.8% on the S&P. On the NASDAQ, we're up by 1.3.
The belief right now is curtails maybe for the next couple of days some of the tariffs, and I just should stress some of the tariffs that were initially executed under IEEPA, right? But there's this question of, okay, what else can he do? I will say there is a broader takeaway that the worst case scenario has been taken off the table, but that reality has already been priced into a lot of equity markets, and you've seen that play out over the past couple of weeks.
It certainly slows things down, but there are other tools and options for the president to pursue. Ultimately, I do think it complicates negotiations over the next several weeks, though. How seriously can trade partners take some of these threats?
Well, I think Kellyanne Shaw, who was a trade negotiator in Trump 1.0, put it really well. It's sand in the gear, slows things down. It puts things on pause. It's detour, but the final journey is there. The destination of higher tariffs is there, but now the administration needs to figure out whether or not they're going to win this stay to keep the IEEPA tariff levels, or they're going to have to go down another path, 122. And then what kind of leverage do they end up giving away to some of their trading partners as they are in the midst of these negotiations and that self-imposed deadline, basically, of July 9th to try to get all these deals done?
What's the first question for Peter Navarro later this hour? He's catching up with us at 8:45 Eastern Time. What's the number one question right now?
Well, in this ruling, it basically says you would have had better sound legal authority to use Section 122 of the Trade Act of 1974. Why didn't you do that in the first place?
Number one question for Peter Navarro, 40 minutes away. Elsewhere, looking at NVIDIA this morning, that stock is doing nicely in the pre-market. And Lisa, without this name, up 5.5%. I wonder where the equity market would be right now.
Especially because this is part and parcel of the larger discussion about just how decoupled this world, particularly U.S. and China, can actually be. I find it fascinating that the reason why people are so excited about NVIDIA is because they took an $8 billion charge for their China business. But even though it's an existential risk, people are talking about the likelihood that they will be able to sell into China, that they will be able to continue with that market, given the fact that it's instrumental to the dominance in the AI world. Again, there is a belief that a lot of these policies are temporary, at least in the part of corporate America. Wait 3.5 years and then keep on keeping on.
There's going to be some pushback down in Washington, D.C., not just from Republicans, but from Democrats as well. The Wall Street Journal reporting a letter was sent to Jensen Huang from a Republican, Senator Jim Banks, and from a Democrat, a well-known Democrat in these parts of the world on Wall Street, Elizabeth Warren.
Well, they're concerned that this is just too cozy when it comes to China. Obviously, Jensen Huang wants to get that market share. To Dan Ives' point, and what Jensen Huang was saying to Ed and reiterated to me a few weeks ago in Washington, China is not behind. they're very, very close to the United States, and Huawei is a formidable actor. So if NVIDIA is not there, Huawei would just take that market share. And they're basically saying we are giving up space to Chinese competitors.
With the rally on that name supporting this market this morning, equity futures on the S&P positive by 0.8%, on the Nasdaq up by slightly more. Coming up this hour, we'll catch up with Anastasia Amoroso of iCapital, with stocks gaining on Trump's tariff setback. The senior White House trade advisor Peter Navarro will be joining us with the administration's response, and Nita Richardson of ADP with another read on the US labor market. We begin this hour with our top story: the president's tariff strategy stuck in legal limbo. Joining us now is Bloomberg's Tyler Kendall. Tyler, have we heard from the president yet? What is the response from the White House?
Yeah, hey, John. So we are watching closely, waiting to see when President Trump is going to weigh in on this latest ruling. But we did hear from the White House that they are going to appeal it, which means that it could ultimately take time to make its way through the legal system. And the spokesperson telling us at Bloomberg News that ultimately they do think that using IEEPA that the framework that they use to invoke IEEPA does amount to a national emergency, which is sort of the underlying issue here when it comes to this ruling. The court said that the administration's view that persistent trade imbalances don't amount to an unusual and extraordinary threat in order to invoke the International Emergency Economic Powers Act. Now, moving forward here, there's still a lot of big questions, including how long will this end up taking ultimately to go into place, and what this means going forward to how the Trump administration uses tariff policies. I can say that I actually just spoke to one legal expert who pointed me to one key line in this ruling, which is that ultimately, the president has never invoked IEEPA to put into place tariffs yet, and this court said that it would be unconstitutional for Congress to give what they called unbound tariff powers. That's an interesting line there, because historically, legal precedent has shown us that the president often has pretty broad authority when it comes to both invoking tariffs and also declaring national emergencies.
Tyler, let's go through the menu of options. What do you think the president, the first lever he'll be most likely to pull?
Well, we're still expecting Section 232 tariffs to go into place on the basis of national security concerns. So we're going to be looking out for that when it comes to those sector-specific critical sectors like pharmaceuticals and as well as chips that we're still waiting for there. Then something that's been getting a lot of focus on is Section 122. This could allow the president to put tariffs in place at a 15% ceiling for 150 days, but it would require him to essentially declare a balance of payments crisis. And that's something that we're not sure yet if the White House is ultimately willing to do. And then the last one that we're watching closely is whether or not any further investigations are instituted under Section 301. That would be looking into unfair trade practices and could be deemed a more durable solution when it comes to tariffs.
Tyler Kendall with the latest in Washington. Tyler, thank you. Not expecting a freak out from the White House given the amount of options that they have on the table at the moment. We've just heard from Kevin Hassett, the director of the National Economic Council, close economic advisor to the president, saying the administration has different options on tariffs, and ultimately, Anne-Marie expects an appeal to happen and a win on appeal.
So that's the thing. They might not have to move to 122, that section, to use to continue these tariffs, because with their appeal, they also asked for a stay of the current levels. Basically, please keep policy in place while this goes to the courts. And then it goes to the Supreme Court. And you have to think, a lot of people, Terry Haynes of Pangea Policy, messaging me all morning saying, do you think the Supreme Court is not going to side with the administration on this? So the administration might just, if they get a stay, just let this play out in the courts and continue the negotiations in parallel with trading partners.
The bounce and the gains in equity still fading. We're higher by 0.7% on the S&P. Here's the view on Wall Street this morning. Anastasia Amoroso of iCapital writing, markets showcase positive momentum and a series of remarkable reversals. We think it can continue into June and maybe beyond. Anastasia joins us now for more. The maybe beyond is mine, of course. Anastasia, good morning.
Good morning, John.
Do you think the pain trade is still higher? The path of least resistance here for equities is up and to the right.
I do. Obviously, tariff block is reinforcing some of the positive momentum that we've had, and we can talk about that. NVIDIA is also doing that. But I would say there's a number of other factors, and that is the fact that the U.S. economy is really persevering through everything that has been thrown at it. And if you look at the second quarter, which was supposed to be the quarter where we feel these adverse impacts of tariffs, that is not at all what happened. Instead, we had front-loaded our purchases. Instead, we've actually seen an uptick in manufacturing. We've seen a sharp reversal in consumer confidence. And so all of that now leaves us tracking 2.3% GDP growth in the second quarter. How bad is that for the U.S. economy? That's pretty great. It's pretty great for markets. And that's why I talked about this series of remarkable reversals. It's back to the U.S., it's back to the U.S. tech, and it's also back to cyclicals. And so, I think the counter argument to that, but what about inflation and what about, what could still happen? But I think there's a strong counterforce to inflation, which is lower oil prices. They're down 15% from the levels that we saw in January, and also, by the way, lower wages. Wage growth is decelerating to 4.4%. So I think that's a really strong offset from whatever impact we may still see on goods prices. All of that supports markets.
Crude down, consumer confidence up. You said it, and I think you've nailed it. The soft data is starting to bounce. I wonder if that continues on Friday when we get you, Mitch. Do you see reason, are you confident that maybe the soft data could actually catch up to the hard data and the hard data not catch down to the soft data?
That is exactly, John, what the chart is showing. And, that was the question a few weeks ago, will the hard data fall apart and catch down? And that is not at all what happened. You've actually seen already a sharp reversal higher in the soft data. And I suspect that could be the case because, first of all, we have a series of delays. Most likely there's a determination to cut the deals with the trade partners. Maybe we do actually get a complete roadblock to those tariffs, not my base case. But the point is that I do think the tariff rates that were imposed, or threatened, I should say, in April is not at all where we end up. So for that reason, I think the soft data will continue to improve.
Has this market gotten fully numb yet to all of the headlines on trade? In this idea that, you can't take anything too seriously, you can't make any moves that are too big. So you've seen it kind of get ratcheted back and get ratcheted back. But are we at a point where it's just sort of noise?
We've gotten, I would say, to a level of comfort with a certain level of tariffs. And Lisa, I know you questioned earlier this morning, why is the market not higher given this seemingly positive roadblock that we now have to tariffs? But I think the reason for that is the markets are aware that there is a budget deficit problem. And there's something like $4.5 trillion, which would be a gap that's left in the budget deficit due to the tax deal that's being passed through Congress right now. How do you plug that gap? Well, you raise the tariff revenue, and let's say it's $200 or $300 billion of tariff revenues that could be raised given the current level of tariffs. That is significant, actually, in order to plug in that annual hole that would be a result of the tax deal. So I think that's why the markets may have gotten comfortable with the fact that some level of raising revenue through tariffs is actually a good thing for the U.S.
I'm wondering how concerning it is to you that you could end up with both tariffs that could on the margins be slightly inflationary, a resilient economy that could absorb some of those price increases, and yields that can't come down given the deficits, given the inflation, and given the rhetoric that we're hearing from Fed officials.
Right, but I think it depends on what yields. I think the yield curve really steepening out, that may be the trend that's here to stay, because that's right. That's what keeps the back end elevated, is the concern about the budget deficit and the term premium, and that's probably not going away anytime soon. But if you think about the front end of the curve, and if you think about the inflation print that we're about to have, we're looking for 2.5% core PC inflation, 2.2% headline. So that actually does warrant the front end interest rates to be probably lower than what they are today if you don't want to have the real interest rates in too much of a restrictive territory. So I see that scope for the front end of the curve to actually keep coming down.
When you look at what's going on in policy-wise, the deficit hawks in Congress, do you have concerns about that this can actually be very negative, the tax bill that's working its way through Congress?
I mean, yes and no, and tariff revenue is actually a big part of that. So if you think about the CBO scoring of how much this would impact the budget deficit, it doesn't take into account any of the tariff revenue. It just purely takes into account the revenue that would not be raised if the tax cuts are extended. But if you couple that with some of the cost-cutting efforts, which maybe have not materialized to the extent that the markets have hoped, and if you especially couple that with the tariff revenue, then we might be in a neutral situation versus the stark projection from the CBO for the budget deficit.
What kind of income do you expect from the tariff revenue when we could wake up to rulings like the one we woke up to overnight.
Right. Well, that is today's news, and that is today's ruling, but I don't expect that that will be the case. And, you know, I mentioned that my base case is not that the tariff revenue goes away. I think the Trump administration is likely targeting that 10% universal tariff as a revenue raiser with some sort of a highest sectoral tariff. And you've been discussing this so well this morning. There's so many other levers that can be pulled, and there's so many other sections of the law that can be applied. And look, I remember writing the outlook for this year, and the base case was always that there's going to be legal challenges. And it's not just the base case for anybody in the market. I am sure, obviously, it's been the base case for the administration as well. So I think that's why the appeals decision was filed as quickly as it has been.
You're unique because something in your outlook is still relevant to where we are right now, because this world is very different to the world a lot of people expected.
Well, we called it the year of wild cards, so I think I think we got it.
It's been wild so far. Anastasia, it's good to see you. Thanks for dropping by. Anastasia Amoroso there of iCapital on this equity market and more. The equity market at the moment, by the way, still fading on the S&P, positive by just about 0.8%. With an update on stories elsewhere, with your Bloomberg brief, let's cross over to Danny Berger for more. Hey, Danny.
Hey, John. The U.S. will start revoking visas for Chinese students with connections to the Chinese Communist Party or studying in critical fields. The move and escalation of Washington's push for more scrutiny of foreigners attending American universities. The Trump administration will also revise the visa criteria for applicants from China and Hong Kong. Elsewhere, Paramount has offered $15 million to settle CBS's lawsuit with President Trump. The Wall Street Journal reporting that Team Trump wants more than $25 million and is also seeking an apology from CBS News. Trump's lawsuit against the network alleged it deceitfully edited a 60 Minutes interview with Democratic presidential candidate Kamala Harris to make her sound better. And PIMCO President Christian Strack ringing the alarm on sub-investment grade borrowers.
Rates are much higher than people had expected today and will be much higher than people had expected over the course of this year. And so the weight of those interest costs is pretty serious on what are already pretty levered companies in the context of an uncertain economic outlook.
PIMCO has been one of the loudest voices voicing concern over private credit in recent years. And that's your brief. John.
Danny, thank you. More from Danny later this hour. Up next on the program, the morning calls, plus Bloomberg's Ed Ludlow on NVIDIA and his interview with the CEO, Jensen Huang. That's next. This is Bloomberg. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance. The opening about 1 hour and about 12 minutes away. Equity futures still positive by 0.7%, but the gains are fading so far. On the Nasdaq 100, higher by 1.2%. That's the price action. Here are your morning calls with just one stock in focus, NVIDIA. First up, JP Morgan maintaining its overweight rating, citing solid results despite a multi-billion-dollar revenue hit on China export restrictions. Your second call from Morgan Stanley, raising its price target to 170, saying the bear case for the stock is fading as the chip giant shows acceleration despite headwinds in China. And finally, Citi, lifting its price target to 180, noting continued and robust AI demand. That stock is up by more than 5%. And the CEO, Jensen Huang, is saying AI demand is off the charts following an upbeat forecast, but expressing concerns about competition in China.
The Chinese competitors have evolved and advanced greatly over the last year. One of the challenges of the changing regulations is the ability for markets to trust the NVIDIA and ultimately American platforms. It's prudent, I think, for the Chinese customers to make sure that they develop their stack on Huawei, and because it's hard to rely on American technology at this point.
Joining us now to discuss is Bloomberg's Ed Ludlow. Ed, fantastic job. We've got a bit of time to work through this conversation with you. We wanted to pick up on that point, though. The way he discusses China and competition, and I wonder if that's a message, not for investors, but for Washington, D.C. and the White House.
Yeah, it's a message for President Trump, and that's the CEO of America's most important company saying that if you are a Chinese AI company, Tencent, Baidu, Alibaba, use Huawei, because essentially the net conclusion of the conversation yesterday is that the door is now closed based on current policy. And Jensen Huang danced and balanced this fine line between basically supporting the president's onshoring and sort of development of the American AI stack policies with a very clear message that export controls as they currently exist are not just damaging to NVIDIA and American companies, but the net result is that there was a vacuum that was created, and China now has a national champion that is moving very quickly and has actually matched NVIDIA technologically on some level.
Ed, fine line is the right phrase, I think. When you spoke to him, did you sense any tension between ultimately what he would like to do in China and how the president views things currently, and how this plays out in the months and years to come?
Yeah, Jensen Huang's been actually quite consistent with a basic argument, which is big picture AI, half of all of the development is happening in China, or it's being done by Chinese researchers. It has always been the absolute critical market for consumer electronics, but in more recent times, it has also been the critical end market for data center. They give a total addressable market figure of $50 billion, or in other words, what they told us was the loss of opportunity is a $50 billion loss of opportunity without giving any kind of time frame. And so that was a very clear signal that what you're doing is stopping us accessing that most important market. But it is actually one of those funny stories where you need to look at the literal guide, the outlook for the fiscal second quarter, because they told us a number that met estimates, but also that they had left $8 billion on the table from China, which indicates that actually what he's saying is true. AI demand is so robust that they can make up the shortfall from somewhere else.
But Ed, at the same time, he also laid it on pretty thick on how much he thinks the president's plan is working when it comes to tariffs. And part of that has to do with what's going on with China. He called the president's plan to reindustrialize the United States, quote, utterly visionary. What message is he sending?
Late, right?
What message is he actually sending? You and I are up
pretty late talking about this. The timing was pretty astonishing, right? He literally said that the president's tariff policy is visionary, and then you can bring the reporting on the rest, but the International Court ruled just a few moments later that Trump's tariff policies were illegal or unenforceable. This is what I meant when I was talking with John about this fine line. You know, NVIDIA has bought into the sort of onshoring of supply chain. They're committed to doing that. They see value in doing it. But at the end of the day, there are buyers of NVIDIA's technology elsewhere around the world. Think about where Europe fits into this. Next week, Jensen Huang will get on an airplane and he will go to the UK, France, and Germany and try and convince those governments to spend a lot of money on building data center capacity. but the chips will also be built using ASML, high-NA, extreme ultraviolet lithography machines. They're manufactured all over the world, but principally final assembly is in the Netherlands. Are they subject to tariffs? Like, this is a complicated thing, and NVIDIA is still stung at different points of the movement of technology across borders.
Ed, when it comes to potentially still getting market share in China, given the fact that they can no longer sell the H20 chips, are they going to be selling any chips into Beijing?
So the official answer, which was stated on the earnings call and in the interview, is that they have nothing to announce. But I think the indication from Jensen Huang is that they will have to design a lower level chip from the ground up. Basically, you know, when we spoke for all these past couple of years about H100, H200, Hopper class, they engineered that chip to its lowest absolute spec performance. It couldn't get any less performant. But that's done. It's closed. The American government won't let them sell it, so they have to come up with a new chip. There was an interesting piece of news that came out of the conversation, which was, we've been so obsessed with H20, but Jensen Huang actually told me that Huawei already has GPUs and accelerators that are as capable as the H200, which until very recently was NVIDIA's most powerful chip. So that's the other signal to the administration, like, you are penalizing us on our lowest spec chip when Huawei is already competing on our much better technology or latest technology.
Just before you go, doesn't DeepSeek feel like a lifetime ago?
It does a little bit, although the story about it was a sort of marginal technology update to the latest model that we published on the Bloomberg yesterday, had astonishing readership. And so I think we still track the arc and progress of China's domestic champions, both on the hardware side, Huawei, but on the software side and the model side too, DeepSeek, and clearly our readers are paying close attention as well.
A lot has happened since then, that's for sure. Ed, fantastic work, sir. Wonderful, as always. Ed Ludlow of Bloomberg, sitting down with Jensen Huang, the NVIDIA CEO, just yesterday, following those earnings. That stock up nicely in the pre-market, which is lending to some gains on the equity market more broadly. On the S&P 500, positive here by about 0.7%. NVIDIA's higher by more than 5%. Coming up on the program, we'll get a double dose of economic data. We'll get US jobless claims for a read on the labor market, another read on GDP as well. We'll speak to Neil Richardson of ADP here to react, and Peter Navarro of the White House, a close economic advisor to the president, trade advisor to the president of the United States, joining us 15 minutes after that. So in about 20 minutes from now, we've got to talk to him about the options on the table for the president, the options he might pursue, and whether the ruling overnight disrupts things in any way, shape or form as they continue to engage trade partners and negotiate on the way forward with that self-imposed reciprocal tariff deadline of July 9th looming. Live from New York, the data up next, the trade conversation just around the corner.
flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that not enough guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
In just a few moments, about 20 seconds away, we'll get another read on GDP and a read on the labour market as well. Jobless claims just around the corner. Going into it, your scores look like this. Here's the price action. Equity futures positive by 0.8% on the S&P. On the Nasdaq 100, higher by 1.3. In the bond market, yields higher across the curve by only a basis point or two now. The 10-year up by a single basis point to 4.49. With your economic data, let's cross over to Bloomberg's Mike McKee. Good morning, Mike.
Good morning, John. Well, we're just waiting for the data to drop, and of course, everybody is looking for that. We do see a little bit of improvement in GDP. It fell by 0.2% in the first quarter. That's a little bit better than the 0.3 that had been forecast. However, consumer spending much weaker. It was only up 1.2%, was 1.8% in the initial release of all this. I'll have to look at the data to see exactly what other categories moved, but I assume we did see a little inventory build, which was the problem the first time. But the number the Fed cares about and Wall Street cares about is 240,000. That's initial jobless claims last week, a significant rise from 227 the week before. And it does suggest something to keep an eye on, but not necessarily to panic about. And the reason is this is a time of year when seasonal adjustments have, in the past 3 or 4 years coming out of the pandemic, pushed claims higher than they otherwise would be in this period. So it's something to watch, but it isn't yet necessarily a sign that things are going to go all badly. Continuing claims, 1,919,000. That is also up from 1,903,000. It does suggest there, of course, that it is not easier to get a job these days. Companies are not hiring, but it doesn't look like they're firing a whole lot of people either. In the context of all this, 240,000 isn't very big.
Mike McKee, stay close. I just want to go through these numbers and talk about the market move off the back of them. Not a major market move, but the colour of the bond prices did flip from red to green. So yields were up and now they're just slightly lower. That read on claims here, Lisa, both initial and continuing claims, will get people's attention.
Particularly continuing claims because it's coming in at the highest level going back to 2021. So even though, to Mike's point, it's not that there are companies that are necessarily wholesale firing, but hiring not so much. So people who are out of a job are having a harder time waiting for longer periods of time before getting reemployed. And that has to give a little concern to people who are looking for clues that the labor market could weaken.
Mike McKee, just to bring you back in just quickly, you touched on it. That 240, the estimate was 230, the previous number was 226, the revised 226. How much weight should we put on that number?
I wouldn't put a whole lot on it yet for a couple of reasons. One, the number is just 1 week. We've seen a lot of volatility in jobless claims recently, 2, the seasonal factors, and then 3, the Fed has said basically, or at least Fed officials have told me that they need to see it get close to 300,000 before they would start to worry at all about what's going on. Remember, we're about to go into the summer when a lot of manufacturing plants, especially in the auto industry, shut down for retooling, and that adds to the jobless claims. So it'll be a little hard to separate signal from noise in the claims numbers unless we get a really big move.
Mike McKee, thank you, sir. Appreciate the update. Nita Richardson of ADP is with us around the table, the perfect guest to talk about this labour market. Nita, good morning to you.
Good morning.
How much weight should we put on that 240? 240, if you take a historical chart, you know this better than most, 240 still pretty low for jobless claims.
Right. So over the 50 years that this number has been recorded, the average has been about 360,000. And so where we really see weakness in the economy, those claims push up above 400,000. So when Mike McKee said that the Fed is looking at something over 300 to get excited about, that's consistent with the historical patterns. But sometimes, Jonathan, it's not just about the level, it's the speed of increase. So we saw this pop up. If we continue to see an increase at a faster rate, that might get attention, not just the level, which is still relatively low.
How much attention does continuing claims get, given the fact that it seems like people are having a harder time getting hired again?
To me, that's the number to watch. The fact that it is taking longer to get jobs. And the New York Fed came out with a recent study that showed that college grads' unemployment rates have drifted higher. So college grads between 22 and 27 in age is drifting higher, and even compared with the difference with young workers who may or may not be college grads, that is narrowing. So they're both edging higher. And I think that's a good read on how employers are thinking about the labor market. They may be foregoing those entry-level positions, whether college graduated or not, in order to hold the line on hiring and keep their existing workforce, but not add to it, and certainly not add a headcount that requires training and onboarding and mentoring to be productive.
How much is that an economic read, and how much is that a technological read, given the fact that some of those entry-level jobs can be filled with ChatGPT?
Yeah, I don't think we're to the point where ChatGPT can do everything that a college graduate can. They can't get coffee for it. No, I'm just kidding.
The important stuff.
Kinda.
But I think we're increasingly going to have this push and pull with demographics and technology. And you see that, you're going to see that in a really widespread way. Technology should help make people more efficient, which means that could slow down some hiring, or it could open up hiring if there's a business opportunity that's profitable because of that efficiency. So we're not going to be able to settle that in the jobless claims numbers today, but to acknowledge that, to your point, your original point, it is taking harder to find that job.
You talk about in this note the median age of workers has ticked higher in the United States. It doesn't feel like a lot, 4.3 years to 42.4, but you say it's a big change and going to have a big effect. Why is that such a big change?
10,000 people in the United States are reaching retirement age every single day. And so what's that going to do? It's going to slow the rate of increase of potential employees. So to put numbers on that, the BLS estimates that over the last decade, the employment of the U.S. grew by 1.3%. Going forward the next decade, it's going to do a fraction of that, 0.4%. In fact, the CBO came out recently and said if it wasn't for immigration, the U.S. population would decline over the next several years. So we're in this position where we need that young workforce, but if the young workforce isn't getting an entry because of an uncertain economy, they're going to be behind the ball, so to speak, in terms of supporting this aging demographic. So it's something to be concerned about.
But when it comes to this aging demographic, at the same time, we do have slower immigration right now. How do you think about how the policy is affecting where we are right now?
Right. I think that the policy will play out in prices, right? So if there's not the workers and there's persistent labor shortages in key areas, I'll name a few. One is any kind of social assistance or health care to help support that aging demographic. If that is an open spot in terms of where, first of all, where college grads may not be going into those fields, and also where immigrants have supported an aging demographic historically, then that's where you're going to see wage increases and persistent shortages, which may trickle over into inflation. So the thing about the economy is all these things are related, but they're hard to predict. And so that's why I think Main Street is in a wait and watch moment here.
Let's just sit on that negative supply shock just for one extra beat. Stephanie Roth of Wolf Research was in your seat earlier this week, and she was making the case that we need to prepare for softer jobs figures, which don't necessarily mean weakness. She was saying something around 100K would still be pretty decent for the economy that you're speaking to, and that we wouldn't see unemployment climbing. In fact, maybe unemployment might even go down. Does that speak to the kind of things you're thinking about?
Yeah, when everything's moving, it's hard to just place all your bets on a number, whether it's the unemployment rate or the number of jobs created in a month, because you don't know whether it's a supply-driven factor or a demand-driven factor, or people being removed from the labor market or leaving the labor market, or are companies reducing their demand. And I think we're at this moment where a lot of things are changing, and so it's somewhat uncertain. But if you saw 100,000, I don't think it would be a big shock to you, given the level of uncertainty. If you saw a persistence of 100,000 or lower over the next 3 months, I think that would be consistent of an economy that was slowing down.
The estimate for next Friday, 130 for ADP, if you're interested. 118, Nita Richardson at ADP. Nita,
Interesting.
thank you.
Thanks for
Appreciate
giving me
it.
that.
Just a handful of economists putting those estimates together right now. Lisa, looking at these numbers, Guy Lepage, Jenny Montgomery-Scott said jobless claims rise to 240, levels not seen since 4 weeks ago.
Yeah.
But it's not just about levels, as Neela said, it's about speed and the change.
That said, this isn't going to get anybody particularly worried, particularly the Federal Reserve, based on the fact that this seasonally is a time where you do see some sort of increase in jobless claims. The initial jobless claims, though, the ongoing, continuing claims is something to watch, given the fact that it's taking longer for people to get jobs. The rigidity, the brittleness of this labor market is something a lot of people are keeping their eyes on.
The low churn dynamic that so many people have described in this labor market. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. The Trump administration is moving to restrict the sale of chip design software to China. Sources telling us that the Commerce Department sent letters to some of the leading providers of electronic design automation last Friday, telling them halt shipments to Chinese customers. Elsewhere, Elon Musk's time as a formal advisor to President Donald Trump has come to an end. Musk posted on X, "As my scheduled time as a special government employee comes to an end, I would like to thank President Trump for the opportunity to reduce wasteful spending." By law, Musk's status as a temporary government official was set to run out as soon as tomorrow. And Oklahoma City is advancing to the NBA Finals for the first time since 2012. The Thunder dominated the Minnesota Timberwolves, opening Game 5 with an 11-3 run and finishing with a decisive 124-94 victory. OKC now awaits the winner of the Eastern Conference Finals, where the Indiana Pacers lead the New York Knicks 3-1 in the series. And that's your brief, John.
Neela's smiling. We've got Indiana in the house this morning, I think. Yeah. I'm not sure what AMH thinks about that, holding on to a Knicks mug at the moment.
Come on, gotta believe.
You can address that in a commercial break. Up next on the program, the administration's response to a court challenging President Trump's Liberation Day tariffs. We'll catch up with senior White House trade advisor Peter Navarro. Dr. Navarro joins us next.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO? It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. the hardest part of being the CFO is?
Telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
New episodes this spring, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We're basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
The opening bow is 46 minutes away. Equity futures fading. We're positive by 0.7% on the S&P 500. Still up nicely on the Nasdaq 100, up by 1.2. That's some of the price action as we count you down to the opening bell. Here's the trading diary through today and into next week. Fed speak from Barkin, Goolsby, Kugler and more. Tomorrow, PCE, personal income and spending, together with UMich, consumer sentiment. Looking ahead to next week, ISM manufacturing on Monday, on Tuesday, durable goods and jolts on Wednesday, ADP employment data, and on Friday, next week tomorrow, the big one, the payrolls report, just around the corner. Before we get into all of that and more, let's get you some morning moves this morning with Danny Berger. Hey, Danny.
Hey, John. We heard from HP yesterday, and you can see exactly how the market reacted to those earnings. Down just under 9%, a huge hit from tariffs, basically saying that, look, most of our production comes from China, so the pain is there. They're going to try to move some away from China, but at the same time, they talked about consumers less willing to buy computers because of the tariff uncertainty. Now, this morning, we also got Best Buy earnings, a similar type of story. Margins coming under pressure. They cut their profit and sales outlook for the year. China is their #1 supplier for the goods that they import, but to be clear, this is also a Best Buy specific story. Sales have been falling for them for the past 3 years, so those shares down more than 2.5%. To the upside, e.l.f. Beauty up some 15%, announcing that they would be buying Hailey Bieber's brand of Rhode, that cosmetic company. Jeffrey's saying it's an attractive deal for them. That $1 billion price tag also looking good. They also reported earnings. Didn't give an outlook, but apparently it doesn't matter if you're buying a celebrity makeup brand. John.
Danny, unreal pricing. How many billion-dollar celebrity makeup brands are there right now?
Too many. Honestly, they're the ones that are getting traction because ultimately this is an influencer world. If you don't have that, it's really tough to gain traction.
And to be fair, some of them are very good. Fenty lip gloss, it's the best.
That's Rihanna, right?
Yes.
Okay. Good, I'm up to speed on that. Let's get back to our top story. This morning, the White House vowing to appeal after a federal court ruled against President Donald Trump's Liberation Day tariffs. Joining us now to discuss, the senior White House trade advisor, Peter Navarro. Dr. Navarro, welcome back to the program, sir. First of all, I think we've got to get into the ruling overnight. Have you spoken to the president? And ultimately, what's his reaction to what we heard?
I haven't spoken to the president yet, but I've spoken to the people who have spoken to the president. Look, we're in a situation now, big picture here is IEPA. We were using the International Emergency Economic Powers Act. There's no question that there's an economic emergency with respect to both uses that we had. One is we are in a world where China has killed over 1 million Americans with fentanyl poison. And we took this step to stop that. We will continue to press on that. At the same time, we invoked that rule to stop what has been 20 million illegal aliens streaming into our country, driving down wages, taking jobs away. That's an economic emergency. And on top of that, the world continues to steal about $1 trillion a year as measured by the trade deficit. And that's an economic emergency because it's transferring our wealth abroad. So we think we have a strong case. Yes, we will immediately appeal and try to stay the ruling. But at the same time, the court, interestingly enough, basically said we were right, just use different rules and laws. So nothing has really changed here in that sense. We're still, as we speak, having countries call us and tell us they want a deal. So these deals are going to happen. So that's kind of where we're at. And it's troublesome here because if you look broadly at the pattern, we've got courts in this country who are basically engaged in attacks on the American people. The president ran on stopping the fentanyl poisoning, stopping international trade unfair practices from stealing our factories and jobs, and courts keep getting in the way of that. The courts get in the way of our trying to deal with the border issues. Now they're getting in the way of our trying to deal with the fentanyl crisis. And that's where we stand here. And I think part of what's going to be important about this ruling demonstrates yet again to the American people that the judiciary in this country has been weaponized in ways which are contrary to their interests.
Well, Peter, you would have heard a lot of people come on this program and ultimately say you still have tons of options, and you've alluded to one of them. You will, of course, appeal, but could you describe what you might do in the interim, the way you might pursue your ultimate objective anyway, with the tools you have still available to you?
I'm going to let Jamison Greer, the USTR, inform you on that, and you'll be hearing from him soon on that. But I mean, look, any trade lawyer knows there's just a number of different options we can take. If you look at the kind of things we've already done, it kind of give you a roadmap on that. There's all sorts of numbers out there. There's 122, there's 301, there's 232, there's 338. There's all sorts of things we can do well within the law. But look, we think that what we've done already is perfectly appropriate. So that's why the appeal will take case. But, you know, it's like, interestingly enough, I was scheduled to come on the program today to talk about the bond market and the big, beautiful tax bill, but there is a bridge to that. And if I may, we have a situation where the bond market, we've seen like a 50 basis point increase in yields in the 10-year since April 2nd. And a lot of the hysteria around the big, beautiful tax bill centers on the Congressional Budget Office scoring that bill in a way which says there's going to be a $3.7 trillion addition to America's national debt over the next 10 years. And so, of course, you got to finance that, and that drives interest rates up and heads explode. When, in fact, if you do the math properly and you look at the history of the CBO forecast, you actually see about a $5 trillion swing to a $2 trillion surplus from the bill. And I'd like to just walk you through the math there. It's like the CBO, the Congressional Budget Office, historically has been very bad at estimating impacts of tax bills. In the 2017 tax cut that President Trump did, they got that totally wrong. They underestimated the GDP growth by a full percentage point. And what that does, if they make that same mistake here, which they have done, when you add that, that's about $2 trillion of additional revenue because you got greater economic activity. And then
Peter, you also have the revenue from the tariffs, which I saw your opinion piece in The Hill. I just want to get back to the I just want to get back to the tariffs because you don't have that revenue.
Well, that's another $2 trillion.
If you don't have the legal authority to use it, though.
That gets us.
But can I just ask? You mentioned Ambassador Greer. We're going to hear from him soon. Are we going to hear from USTR about the bridge, potentially what John was talking about? If you can't use IEPA, potentially you're going to come out, the administration say, we're going to use 122 in the interim.
Well, the court did in some sense tell us to do that, which was interesting. But look, here's the thing. Fentanyl, I just, people need to wrap their heads around the fact that every day here in America, so this kind of court ruling, the judge, I mean, look, the lead judge.
But if the court said, if the ruling said, Peter, and we've been talking about this, page 34, 35, they say, basically, you are in your right if you use Section 122. Why didn't you guys do that from the beginning?
Well, Section 122 only gives you 150 days. So there's your answer right there.
So are you, Section 122, if you use this now for 150 days, would it be a bridge to 301 or a bridge to 232? What are you thinking more long term?
You can be the strategist on that, but those are the kinds of thoughts. And look, if anybody thinks this caught the administration by surprise, think again, okay? Because you could see in the oral arguments where those judges were going, and the lead judge in this. I mean, the problem with that court, it's such an obscure court, but it's consistently been globalist, pro-importer, giving us bad rulings. The lead judge there ruled against the 232s originally and had to get overturned by the appeals court. So that gives you an idea of the bias against the president's tariff policy right on that court. But I think the big picture here is we've got a very strong case with IEEPA, but the court basically tells us if we lose that, we just do some other thing. So nothing's really changed. I want to say this to the world. You're cheating us. We're coming after you. Deal, and let's make this right, because ultimately what's at stake here is the global international environment getting in a way where it's fair to America, and thereby, if it's fair to America and we restructure this thing in a way, we'll have just more stability in terms of financial flows and capital and everything like that.
Dr. Navarro,
wildly out of balance now.
We've got to run, but it's great to catch up with you, sir, and we look forward to seeing your next steps. I've just got to tell you one thing.
Anytime, John.
You're not allowed to hire Anne-Marie. She's with us, all right? The senior White House trade advisor, Peter Navarro. Peter, thank you, sir. Dr. Navarro there on the trade story. Coming up tomorrow, we'll catch up with John Stolfus of Oppenheimer, Abby Yoder of JP Morgan, Dana Peterson of the Conference Board, and Lindsay Pieser of Stifel. Lindsay, as those gains continue to fade in this equity market?
A real question now about how much upside there can be. Maybe the trade question hasn't been settled yet. Growth very much front and center.
Live from New York City, thank you for choosing Bloomberg TV. This was Bloomberg Surveillance. Is this a negotiation or the new rules of the game?
It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly.
There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case, very quickly, becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
Let's cut right to it. This is Bloomberg's new show, Primer. Technology is a $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on.
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Futures still positive, but losing a little bit of momentum. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, Trump's trade agenda dealt a major blow. A U.S. court deems most of President Trump's tariffs illegal. The White House says it will appeal. Global stocks are finding relief in the ruling, as well as NVIDIA's upbeat earnings report that has reignited AI optimism. Plus, amid a flurry of retail results, a buzzy deal emerges. e.l.f. is buying Hailey Bieber's beauty brand for $1 billion. I have no idea what that is.
Don't worry, we're going to talk about that in detail, but let's get back to NVIDIA, because the godfather of AI delivered. NVIDIA's strong forecast easing investors' fears about AI growth, but China chip restrictions still going to cost the company about $8 billion in the current quarter. You don't see that in the pre-market move right now, higher about 5.4% before the bell rings.
All right, so not exactly ripping face, but it is up. Retail earnings this morning. Kohl's affirms its full-year outlook after firing its CEO this quarter over conflict of interest. Best Buy cut its earnings forecast due to the tariffs and sees no major change in consumer behavior for the rest of the year. And e.l.f. surging, as I said, on its deal to buy Hailey Bieber's Rode brand. Rode?
Rode, just Rode.
Rode brand. The CFO, Mandy Fields, joins us later this hour. Katie?
All right, let's get back to the actual top story today, and that is that a court has blocked many of President Donald Trump's tariffs on imports from dozens of countries, declaring them illegal. It's another example of the volatility we're seeing around trade policy, with some on Wall Street saying that Trump's tactics show he has more talk than action, calling it the taco trade. Trump always chickens out. He addressed this in the Oval Office yesterday.
Oh, isn't that nice? Chicken out. I've never heard that. You mean because I reduced China from 145% that I set down to 100 and then down to another number, and because I gave the European Union a 50% tax tariff, and they called up and they said, please, let's meet right now. We have an end date of July 9th. You call that chickening out?
So that was the president pushing back against that taco trade. And in regards to the court ruling last night, White House trade advisor Peter Navarro had this to say on Bloomberg just a few minutes ago.
There's no question that there's an economic emergency with respect to both uses that we had. One is we are in a world where China has killed over 1 million Americans with fentanyl poison, and we took this step to stop that. We will continue to press on that. At the same time, we invoked that rule to stop what has been 20 million illegal aliens streaming into our country, driving down wages, taking jobs away. That's an economic emergency. And on top of that, the world continues to steal about $1 trillion a year as measured by the trade deficit.
Let's get more details from Bloomberg White House senior reporter Josh Wingrove. And Josh, Navarro seems to be arguing the wrong point. As I understand it, these judges, one of whom was appointed by President Trump himself, the other was appointed by Ronald Reagan, didn't say that this isn't an emergency. They just said that even in that framework, these tariffs are an illegal reaction.
Yeah, I mean, Trump essentially used a shortcut in the views of these judges, and there was an Obama judge in there, too. There were 3 of them in that one, so let's not forget that one as well. But certainly the Trump judge there is going to dampen the criticisms, but we're still seeing them from the White House of this ruling. They're pledging they're going to appeal, and that they have appealed, and they're signaling that they're basically going to try to find other avenues. Now, the reason they were trying to use this avenue in the first place is it was, as I say, a shortcut. He could try to declare everything an emergency and apply these tariffs widely. And just to make clear what was affected by this, that's those country-by-country tariffs, including that sort of baseline 10% as well as that higher one on China, and separately those fentanyl tariffs, including the China 20% and those ones on Canada and Mexico, which have some exclusions. So all those are paused for now. And so we heard Navarro talk about other authorities. Section 122, that is a 150-day clock and a maximum of 15%, so it's a little more constricted than what they were trying to do previously. Section 232, they were already doing that on some things like auto, steel, and aluminum, with other things coming down the pipe like copper. They could try to pivot those or accelerate stuff that was already in the in motion there. And then he mentioned 301 as well. Of course, Section 301 is what they imposed pretty wide range of China tariffs on already, so they might try to look to sort of go back to the well on that one. They have other tools. There's a reason they were using IEEPA in the first place. It was easier. They were sort of, out on the, let's say, the front edge of what the interpretive powers of that were. That's why there was a court case, but they might pivot. And forgive me for, we're here. It's Tariff Day and it's Lawn Maintenance Day here, so, we juggle many things here at the White House.
Seems like it was lawn day yesterday, too, as well. You got to put in a lot of work to keep that lawn that green. But, Josh, before we let you go, talk to us about how this might unfold from here. The Trump administration has come out and said that they're going to appeal this. Does this work its way to the Supreme Court?
That's a good question, and I think it's an open one, but I do not think that necessarily this case will be the be-all and end-all. They might look for stuff in the interim. One thing Navarro said there is that we might hear from the U.S. Trade Representative Jameson Greer shortly. Don't know what to say about that, but if you read into that, potentially there's some sort of interim bridge announcement that they're looking at. It's not clear, but the core message is everything the White House has said in the last 12 hours is that tariffs are coming one way or another.
There you have it. Josh, great to get the latest from you. That is Bloomberg's Josh Wingrove reporting from the White House lawn. Let's get back to NVIDIA, though, because the company ramping up production of its Blackwell chip as the U.S. readies more curbs on chip exports. Now, last night, NVIDIA CEO Jensen Huang joined Bloomberg to address concerns around China growth.
The Chinese competitors have evolved and advanced greatly over the last year. Like everybody else, they're, doubling, quadrupling their capabilities every year, and the volume is increasing substantially. And remember, these are data center chips. They don't have to be small. They could be quite large. Without American technology, the availability of Chinese technology will fail the market.
Bloomberg technology co-host Ed Ludlow conducted that interview, and I'm pleased to say he joins us now from San Francisco. So, Ed, talk to us a little bit about some of those concerns that Jensen Huang has over Chinese growth. I mean, it seemed like he was really appealing to the Trump administration here on their approach, but you're not seeing any of that concern in the stock this morning.
You're not seeing the concern in the stock because, frankly, just based on the outlook for the fiscal second quarter, $45 billion of sales, plus or minus 2%, taking into account $8 billion of lost revenue opportunity in China, NVIDIA is making it up somewhere else. You alluded to the Blackwell ramp, and when I asked Jensen about how they are managing that, he just said, yeah, look, I guess Blackwell is in so much demand elsewhere that China isn't an issue in the short term, but in the long term, it's a massive issue. And Jensen wasn't alluding to or hinting at anything. He was giving a direct message to President Trump that technology export control policy is closing a door for NVIDIA in the Chinese market, which is critically important.
Yeah, first of all, I listened to the interview live yesterday. Ed, great job, and I also loved the conversation with Ian King and your other guests. Before that, the thing about the interview to me is that Jensen Huang really sold me the idea of using Huawei chips. Like, if I'm an international company with a big China footprint, I'd rather build on that stack so that I can reliably maintain and upgrade my network. Why aren't more investors concerned about the fact that, you know, we're holding ourselves out of that market and giving it essentially to Huawei or other Chinese competitors?
Well, the buoyancy of the stock in the here and now probably reflects investor sentiment that they feel NVIDIA can make up the shortfall in sales somewhere else, as we explained. But you're absolutely right that the biggest point was Huawei. Jensen Huang didn't just say that Chinese companies shouldn't even bother with an American technology stack anymore. He acknowledged that Huawei has technology that is now not just on par with H20, which was the China-specific chip that NVIDIA had engineered to a lower specification. Huawei has technology that is on par with H200, which until very recently was at the cutting edge of what NVIDIA was offering. And again, you know, it's incredible to hear the CEO of America's most important company say to China's technology companies, go with your domestic champion.
Yeah, fantastic points there, Ed. Great interview. Bloomberg Technologies' Ed Ludlow. You can check out the full interview on Bloomberg.com, and I'm sure you'll see a lot of it throughout this program and Bloomberg Tech next as well. Let's bring in Cantor Fitzgerald semiconductor research analyst C.J. Muse. And C.J., good morning. Thanks for joining us. Let me start with the same question. You know, Jensen Huang was telling Ed yesterday that Chinese companies, it would really be prudent for them to use Huawei instead of trying to figure out a way to use NVIDIA. And I would think also for bigger companies that have a big network and a footprint in China, they wouldn't want to deal with the geopolitical uncertainties of trying to use NVIDIA chips.
Yeah, first, Matt, thank you for having me. You know, I would say that, you know, I think the first principle that Jensen's, you know, thinking about is that, you know, China is not going to give up on AI because of the U.S. embargo, you know, which means that they need to go with internal solutions. And like, you know, he said in the interview that you hosted, it's not just the silicon, it's software. It's also very large data center chips that SMIC can produce on 7 nanometers. So, you know, I think he's absolutely right that this embargo is the wrong pursuit from the current administration. What they want to do is get the U.S. platform to be the global winner. And that, you know, to me is the right, you know, framework. And unfortunately, we're pursuing, you know, a different path.
In the current geopolitical environment that we're in, I mean, we talk all the time about NVIDIA's incredible first mover advantage, that it really has this competitive mode, and it's enjoyed that, and you can see that in the stock over the past few years. Where we stand right now with the relationship with China, with these export curbs, does this accelerate how quickly that first mover advantage is whittled away here?
Yes and no. You know, I think that if we didn't have this embargo, we wouldn't be talking about China catching up. Because it's not just the silicon, right? It's also CUDA, and it's all the kind of software stacks that fall in line with that. And it's not that NVIDIA is standing still either in terms of, you know, recently launching Dynamo inference-based software accelerator. So they're clearly innovating. And so I don't think China has caught up. But I think what he's trying to highlight is the reality is that if we are not you know, allowing NVIDIA to ship their silicon to China, then they're going to have to go elsewhere. And if we kind of look at NVIDIA today and, you know, their R&D this calendar year is more than 50% of AMD's revenues, right? It's, you know, I think almost, you know, equal to the total revenues of Broadcom. And so, you know, what we're doing is we're driving revenues, and Jensen talked about $50 billion revenue opportunity going down the drain. That's $50 billion going somewhere else where they can invest those dollars, they can drive scale, they can invest in software. And, you know, looking out 5 years, yeah, they're going to be a credible, very credible threat.
All right, so having said that, then, CJ, what's the reason to be bullish here? I mean, especially with NVIDIA close to its all-time high, which was almost 150 at the beginning of January. It's worth $3.3 trillion now. What's the incentive for an investor to get in at this point of the valuation?
Yeah, no, it's a great question. You know, I'd say that we think we're on track to $5 of earnings this year. Street's at $4.36 coming in. We think next year they're going to earn $6.50 to $7. So if we're right, where the stock is trading right now, pre-market, it's about 21 times, which, you know, historically is very cheap. So number one, you have valuation support on my 26 numbers. Number two, you know, we're just getting started with AI. And I think some of the announcements, and just in the last month, whether Oracle, XAI, Saudi Arabia, UAE, we have clear line of sight to tremendous growth, you know, into 26. And as numbers push higher, you know, you want to be there. And this is really one of the core names in all of semiconductors where I have confidence in real upside to consensus. I think point three, you know, bigger picture, we're very early, you know, in the overall kind of AI adoption curve, which is going to impact every facet of our lives. So I think it's still very early innings for AI. And I guess lastly, yeah, we have to acknowledge China competition, but at the same time, there are solutions that could work in terms of perhaps we allow data centers, you know, in Malaysia or Singapore to support China. And that's a way to kind of get around this embargo. So I don't think the ship has completely sailed on China. I think Jensen is clearly making very bold statements that Washington, D.C. hopefully is listening to. And I do think there is, you know, a solution that could, you know, appease both parties.
Right. All right, CJ, got to leave it there. Great to get some time with you this morning. That is CJ Muse of Cantor Fitzgerald. And we do have some other stocks on our radar other than NVIDIA, because Apple rising a little bit on a court ruling and a revamp to its operating system. You also have Tesla targeting a June 12th robo-taxi launch as Elon Musk prepares to step back from Doge. And Salesforce, Matt Miller, raised its sales outlook as AI bets pay off. This is Open Interest.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
In case you missed it, on Bloomberg Open Interest, how much would it cost to bring production here, Rebecca? I mean, what kind of upcharge would you be looking at?
There is no handbag infrastructure in America anymore besides a couple of small factories in New York City. So not only would we have to build a factory that could make the amount of units we're trying to make, but we'd have to bring back hardware manufacturing, bring back tanning and leather. I mean, these are all things that are purchased overseas and assembled. You know, if you want this to really work, give us grants to build factories, give us several years of tariff breaks in order to make these things happen, and then we'd love to make in America. It just right now, if I were to switch everything to America, my price would double, and my consumer's not here for that. As small businesses doing under $50 million, you know, keep us alive. We are employing millions of people collectively and affecting livelihoods across the U.S.
Don't miss Open Interest live weekdays.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Well, let's get back to that U.S. court ruling that many of President Trump's tariffs are legal. Pangea Policy founder Terry Haynes says that on a practical level, tariffs will continue unabated pending Trump's certain appeal of the CIT's summary judgment ruling. So nothing will change and tariffs will continue. Terry was also a congressional staff author of the 1988 Trade Act. And I'm pleased to say that Terry joins us now. Great to have you with us. I want to go to the first line in the note that you published last night. Tariffs ruling versus Trump means nothing for markets. Walk us through that.
Basically, good morning, Katie. And basically, all I mean by that is that tariffs will continue until, say, the Supreme Court tells them to stop under this particular authority. Trump's going to push the limits. He wants the strongest possible presidency, and they will continue with that. This Court of International Trade, which I wager most people didn't know existed yesterday, is basically a trial level court in the United States. So there's two levels of appeal before you go all the way up to the Supreme Court. And finally, I would say that the Court of International Trade exists as kind of a specialty court to adjudicate trade law disputes, but what it's not going to be particularly expert in is the limits of the president's emergency economic powers, or whether or not Congress could give the president those emergency economic powers under a 1977 law. So they're not going to get a lot of deference from certainly the appeals court and the Supreme Court.
Let me jump in here, because to me, regardless of that, this highlights how little support there is, and indeed how much opposition there is to Trump's tariff policies. You had a conservative trade group. It wasn't just Democratic states bringing this complaint. You've got seemingly a lack of support from Republicans in Congress who have legislation locked and loaded, ready to go, to give the president this broad authority, and they don't seem like they want to do it. And even if the CIT is a less significant court, there's a Trump appointee as one of the three judges and a Ronald Reagan appointee as one of the three judges. So, like, these are should be his guys, right? No one's behind this.
Well, I think I'll respectfully take the other side of that argument, Matt. Americans, I say Americans because you have a worldwide audience here. Americans are now very used to trial-level judges going off and throwing up injunctions at the drop of a hat on immigration policy and all kinds of other things here. So, the fact that yet more trial-level courts are doing this, I don't think indicates a level of support one way or the other. Number one. Number two, I'd counter by saying not only does the Congress been silent on this, and silence in cases is assent, but they're actually working to strengthen the president's powers. So again, I think those are more significant, frankly.
Well, that's where I wanted to go, to where Congress is in all of this. I was listening to a conversation with Wendy Striller and Tom Keene and Paul Sweeney this morning. That was one of the topics of conversation. Is this truly just between the Oval Office and the courts, or does Congress get involved at any point?
Well, Congress is, it's really about the extent of powers between the president and Congress, frankly. Congress in 1977, gave any president this particular emergency authority, and the president will say that he's exercising it responsibly. Certainly no one in Congress thinks he's exercising it irresponsibly, particularly on the Republican side. Otherwise, they'd be pitching a fit, and they haven't been. So you've got that, number one. And number two, you've got a tariff regime, which certainly Republicans are supporting generally right now, as long as it's followed by trade deals and a bunch of other things. And they'll continue to support that. And in fact, they're, as Matt points out, they're working to bolster that. So, I don't see people in lockstep here, but that's Washington. I do see a Washington that is broadly aligned with what Trump is trying to do and how he's trying to do it.
Terry, great to get your take on this. Thanks so much for joining us this morning. Terry Haynes there is the founder of Pangea. This is Open Interest.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Is this a negotiation or the new rules of the game?
It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly.
There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case, very quickly, becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Welcome back to Open Interest. Here's the setup as we count down to the opening bell. You can see a rally underway in the pre-market. The S&P 500 up by 0.8%. Even more if you take a look at the NASDAQ 100. NVIDIA being higher by 5%. Pre-market will do that for you. But it's interesting. The S&P 500, we were up much higher just a few hours ago. It seems like some of that enthusiasm is fading post that court ruling over the tariffs.
Yeah, I mean, if NVIDIA rises 5%, that alone should add those points to the S&P, and that would mean everybody else is unchanged. So we'll see what kind of breadth we get at the open.
We certainly will. And we have a great guest to walk us through that. Of course, Sarah Malik will be joining us at the open. Don't go anywhere. This is Bloomberg.
It is.
Another art museum called the Guggenheim. Now, Louvre's big enough. Why do you need a Guggenheim as well, right next door?
I think it's a great question. I think the beautiful thing about the UAE and Abu Dhabi is we live with over 200 nationalities. And in doing so, they have become a part of the country's and the city's fabric. And we need to celebrate that. So we need to celebrate everybody's identity, everybody's background, everybody's heritage, everybody's history. And what a beautiful way in doing so in these beautiful institutions. These museums are educational institutions and they're community institutions. So we wanted to curate really a story where you come to Saadiyat Cultural District and you, if you allow me to curate the story, you start off at the Natural History Museum. And at the Natural History Museum, you get a glimpse and you get an understanding of how we came to be, how our Earth came to be, how our universe came to be, from a scientific perspective. Once you leave the Natural History Museum, you go to our National Museum, the Sheikh Zayed National Museum. There, you understand the history of this great land. Not just the history of the country, but the people of this land that have been a part of this land for over 300,000 years. You get a glimpse of what the past and the present and the future looks like here in the UAE. From there, you maneuver yourself to the Louvre Abu Dhabi, which is a beautiful universal museum. It is universal in its thematic approach. So there, you basically see a part of you on an equal pedestal with the entire world.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest on a pretty momentous day. Should be for markets after a court struck down Trump's tariffs and NVIDIA came out with earnings. We are looking at gains on S&P futures, only about 0.9% now, so not huge gains. If you're mad bullish on NVIDIA as already a $3.3 trillion stock, it should, I think, drive things further. NASDAQ futures up 1.4%. Russell futures up as well. On the New York Stock Exchange, you've got First Eagle Investments ringing the bell. They've launched a couple of ETFs.
Thank you.
One is a global ETF. One is an overseas ETF, which I think is really interesting. By the way, this company was founded in 1864 in Dresden.
Wow.
Yeah, it was the old Arnold and S. Bleischroeder.
Matt does his research for these.
And then on the NASDAQ, you have ISE, the International Securities Exchange, which was bought by the NASDAQ. They're not publicly traded, so it's really not as interesting, but I guess they have to do that.
You know what is publicly traded?
Yes.
And reported earnings yesterday. I'm talking about NVIDIA. Its strong forecast really easing investors' fears about AI growth, but those Chinese chip restrictions will cost the company $8 billion in the current quarter. It's on the verge of becoming the world's most valuable company by market cap today, and you can see that shares are higher about 5% in the moments after the bell rings, Matt.
You may think that overshadows every other earnings report that's out, but retail earnings continue to roll in, and some of them are interesting, not just for the drama. Kohl's, for example, after firing its CEO, it affirmed its full-year outlook, and then Best Buy actually cut its earnings forecast that related to tariffs, but it says it sees no major change in consumer behavior for the rest of the year. And then finally, e.l.f. Beauty is surging this on a deal to buy, I guess, Justin Bieber's wife's makeup brand, apparently. I'm more interested in e.l.f. because they dropped off a package to my favorite sailor going from Oregon to Hawaii with his cat. The CFO of e.l.f., Mandy Fields, joins us later in this hour. So let's get back to NVIDIA, shall we? The S&P 500's biggest stock mover by value this morning, and maybe soon to be the very biggest company in the entire world. Last night, Bloomberg Technology's Ed Ludlow spoke with the CEO, Jensen Huang, following the company's earnings results.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now.
Let's get a closer look now at NVIDIA with Bloomberg Technology co-host Caroline Hyde sitting to my left. And Caroline, how should we be thinking about this at a psychological level? Was this truly a knock the cover off the ball report, as Matt had been talking about in the days leading up to this, or was this simply just better than feared?
I think it's relief, but that relief puts it back in pole position. We are now the most valuable company on the S&P. They've eclipsed Microsoft if they hold these gains of in excess of 5%. We're back at $3.46 trillion because the China anxiety has been put to one side. Yes, they're going to take an $8 billion hit. That's a lot. But they're able to see the momentum of the Blackwell chips, the offering, the fact that they're actually managing to manufacture them at pace and get them into customers' hands. That outweighs the negative effect of not being able to ship the H20. In fact, Jensen did say, look, I'm still trying to think potentially of a future chip that we might be able to design, but would have to get sign-off once again from Washington for China. That he's not giving up on the market. In fact, he's getting some flack, it seems, from certain lawmakers about building up some, well, at least office space in China at the moment. But he says, look, that's because I've got, at least a spokesperson for the company says that's because the employees are coming back to the office.
One actually increased my own trade anxiety when he was talking to Ed Ludlow yesterday, pointing out that it would be prudent for a Chinese company to use Huawei or another Chinese-made chip. And in fact, even if the U.S. decides to allow the export of these chips, why wouldn't China say, as they've already advised, you can't buy NVIDIA chips. You must buy them in our domestic market so we can grow this incredibly profitable business.
Look, he's learned from DeepSeek. That's why, of course, he's talking about the demand being off the chart for inference, because that was the anxiety that DeepSeek could come along and suddenly we don't need to train so much, but inference is where it's at. But he's also learning that, well, DeepSeek was purely formed because they didn't have access to really sophisticated chips. Now they're building their own. He's saying Huawei is doing amazing things. If you cut me off from this country, they will just develop and go it alone anyway. The AI diffusion rule, of course, he's really celebrating the fact that that's been curtailed and he's able to get his chips into other countries' hands. That's been a big win for the Middle East, for example. But I do think that there's this ultimate desire for access to China in the long term. But look at the news today on the chip design companies, Cadence, Synopsys. They're all well, they're going to take a hit because there's a concern that they're not going to be able to get their designs into China anymore. That's the latest restriction being put on U.S. to China. So,
and those students, those Chinese students won't be coming over here. They'll study somewhere else, and then they'll go work for Huawei instead of for Jensen Huang.
Ed did ask him about that, and he said, look, overall, he thinks there is a focus on getting the right talent into America, but he's a guy from Taiwan.
Yeah, there you have it.
He demurred on that question, I think, a little bit. Caroline Hyde, looking forward to your program at 11 a.m. She is the co-host of Bloomberg Technology. Let's get to Nuveen, head of equities and CIO, Sarah Malik. She joins us now. And Sarah, I'll just ask first, after really the biggest earnings report of the season, we've been waiting for months, it seems, do you feel more bullish this market so driven by, the AI hope?
I'm bullish on artificial intelligence. I think it's alive and well. With NVIDIA, the two key factors that are positive for this stock are China and Blackwell. They've been big concerns for China. What is a headwind is now a tailwind because of the $8 billion hit they took to China. And with Blackwell, the issues that people were worried about with the ramp have been resolved. So both of those are very positive. And we saw from first quarter earnings from other companies like Microsoft and from software companies that AI and demand there is very strong. So I don't think the AI trade is dead. I think NVIDIA proved that. I think that's a fundamental positive for the markets going forward. Now, on the other side, I think tariffs are a short-term gain, but also still going to be a long-term pain for the market. So tariffs are a different story than the tech trade.
Well, it's funny. I mean, NVIDIA absolutely the biggest earnings report of the season, but it feels like at least the mind share this morning has been taken by that court order basically blocking the Liberation Day tariffs that we got in April. And it seems like uncertainty is the word of the morning, that this maybe is a short-term positive, but injects even more uncertainty into the trade process. Talk us through how you're thinking about this.
Well, short-term bump for the markets, but I don't think it will be long-lived because of that uncertainty around what will happen from here. It's actually less clear than what we had before the court blocked. So going forward, Trump can still put tariffs on China and raise those from where we are today. Second is Section 122 of the trade agreement, which allows up to 15% tariffs for up to 150 days. And third, of course, is appealing the court's decision and also what kind of permanent tariffs may occur going forward. So I think there's more uncertainty going forward around tariffs. The base case of 10% tariffs on the rest of the world hit GDP on our calculations by about 1.5%, which was not going to put us into a recession. We would just skirt a recession in that case. Now, of course, we need to think again, where will tariffs be from here going forward?
By the way, Sarah, we heard from Best Buy today that they don't really expect a change in consumer behavior. We haven't seen a lot of companies really pull their forecasts as we feared at the beginning of this earnings season. We don't get much higher inflation prints, at least so far. Did we have a little bit too much fear about these tariffs and their results going into this quarter? And do things look a little bit better than maybe you expected?
We haven't haven't seen the impact of tariffs yet. That's going to take 3 or 4 months to run through the numbers. So markets did overreact around Liberation Day around what they thought were going to be extreme tariffs. And then negotiations have pulled that number down a bit. And I think that's why markets have recovered. The driver of this economic cycle is the consumer, as you pointed out. And consumer data has been mixed. In first quarter earnings, we saw mixed numbers out of companies, mixed guidance. The good news is this week we saw strong consumer confidence numbers come out with a big bounce back up to 98. And tomorrow, PCE inflation data comes out, and it's likely to hit a 4-year low. So the hard data and the soft data for the economy has been strong. First quarter earnings growth came in at about double estimates, 12% growth year over year. So the economy is telling you everything's fine. The fear for the markets, of course, is what does it mean for the second half when those tariffs come into play? I still think they will come into play. What does that mean for markets? That's the calculation that needs to happen. But the good news is we're starting from a strong base with a strong economy and earnings growing low double digits.
Sarah, what do you think this means for the Fed? There was a really interesting note out from Neil Dutta over at Renaissance Macro this morning. He says, in his view, at the margin, this puts some pressure back on the Fed that maybe we should be emphasizing less near-term inflation data and putting more weight on employment. How are you viewing it?
The Fed has stated that they're going to view tariff-driven inflation as a one-time bump. We've consistently had an expectation at Nuveen for 2 Fed rate cuts this year. We're sticking to that starting later this summer. So I think all of that is going to be what the Fed is looking at. Now, the issue with employment is that employment markets tend to crack right about when a recession starts. So if the Fed waits for the employment markets to crack, they may actually fall behind the curve with their rate cuts. I think the Fed needs to be more preemptive and cut rates before they see a significant decline in the employment markets.
All right, Sarah, great to get some time with you. That is Nuveen's Sarah Malik. Let's get back to these markets right now and take a look at the breakdown of this rally because, boy, as you would expect it, we have a lot of names in the green today, more than 300 if you take a look at the S&P 500. And right at the top, you guessed it, it's NVIDIA. This is the biggest gainer when it comes to a points basis, adding 22 points to the S&P 500 right now. But it's not just NVIDIA. You also have Apple, Amazon, Microsoft, Tesla, Meta, Alphabet, all your big tech names really stepping up to the plate right now. On the downside, there are some losers that we have to talk about. Salesforce being there, down about 6%. You also have Netflix and Uber trading places for who is the second biggest loser in this market. And this setup is broadly what you're going to see if you take a look at the sector breakdown as well. We'll go there now, and there's more green than red, similar to what we saw at the stock level. And you have consumer discretionary up there, but it's big tech that's leading the way. And just to highlight how much NVIDIA is driving this market right now, if we click into what is the best performing in the name in the tech sector right now, it's NVIDIA up at the top, now up 6%, Matt Miller.
You mentioned Trading Places.
Yeah.
Have you seen that pivotal film?
Do you think I have?
I don't think you have.
I haven't. Sure, it's great.
All right, I think you should definitely watch it this weekend. Coming up next, Elf Beauty buys Hailey Bieber's beauty brand, Rhode, for $1 billion. I'll figure out a way to explain that. When we come back, we're going to talk to Mandy Fields, the CFO of Elf Beauty, about that deal and how she's dealing with trade uncertainty next. This is Open Interest.
In case you missed it on Balance of Power.
If we're going to get all this revenue from tariffs, why would the president be pushing for higher taxes on anybody? Because our understanding is for the wealthy, he's looking at a new rate of 39.6%. And I thought the Republican Party didn't stand for that kind of thing.
Well, you realize that the tariff revenues doesn't count toward the reconciliation numbers. Don't ask why. I can't understand why. We're running at like 20, 25 billion a month, and they're not counting it, but we'll leave that aside for another day. This is Washington. They have their own accounting practices. So the president's trying to make sure he gets no tax on tips, no tax on overtime, and no tax on Social Security. And if he says, look, the richest Americans, remember, he cut it from 39.6 to 37. So if he just goes back to what he did last time, you know, I'm in favor of that. I think it's smart.
Don't miss Balance of Power live every weekday. Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bring you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne Ruhodern in Buenos Aires, Argentina, and this is Bloomberg.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
All right, it's time now for our top calls. Some of the analyst action in focus this morning. And first up, Salesforce getting downgraded at RBC Capital Markets. The analyst cites execution risk in the company's acquisition of Informatica and also questions whether it was necessary to own the company instead of just partnering with it. Shares down about 6%. Next up, we have Southwest getting upgraded to a buy over at Deutsche Bank. The firm says that the airline's refreshed board of directors will usher in a new era of change, which should drive higher shareholder returns. And finally, we have Starbucks downgraded over at TD Cowen. The analyst flags the risk of slowing sales thanks to deteriorating value perceptions and increased competition. Meanwhile, Wall Street also taking a shine to a buzzy new deal. e.l.f. Beauty announcing it will buy Hailey Bieber's Rhode brand for $1 billion. Now, this move gives the cosmetics retailer access to a product line that has become hugely popular among Gen Z and millennials. As a result, you have Raymond James, Deutsche Bank, and Jefferies, just some of the firms that are raising their price targets on e.l.f. following this news. And I'm pleased to say that here with us now is the company's CFO, Mandy Fields. Mandy, it's great to have you with us. Talk to us a little bit about why this deal makes sense and why now specifically.
Well, thank you so much for having me. We are so excited to welcome Rhode into the e.l.f. Beauty family of brands. We found a like-minded disruptor. I mean, if you think of what Hailey has done, built a business from zero to $212 million in 3 years on 10 products online. It's just incredible. And she did it profitably. And so we saw this business and just the kindred spirits of disruption and community, her ability to attract so many people into this brand, we had to bring it into the family.
It's interesting. I mean, you think about the experience with Kylie Jenner. I mean, she sold her beauty brand, I believe, to Coty, and then eventually brought it back. I mean, the fact that you're partnering with a celebrity founder here, did that add any additional levels of due diligence into the thought process?
Well, we spent a lot of time with Hailey and the team. You know, I've talked with Hailey about kids, about, you know, family activities. I mean, she is just so down to earth. And we really don't see her as a celebrity. Stable. A real founder with great instincts, a great aesthetic, and we're very excited to partner with her.
I can't imagine anyone more stable than Hailey Bieber and Justin. God. They just live such a normal life, Mandy. I want to ask about the exposure that you have to China, especially considering what we saw yesterday out of this court. I mean, how much uncertainty is there surrounding trade for you and your job?
Well, you know, the tariff situation is one of the main reasons why we did not provide guidance on our call yesterday. There's just such a wide range of outcomes when it pertains to tariffs. And so until we have more certainty on that front, we're just going to wait and see what happens.
Yeah, and it's interesting. According to our Bloomberg intelligence analysts, your exposure to China is pretty high, about 75% of your cost of goods sold. And how do you handle that? I mean, do you try to move manufacturing to other countries? We know that that hasn't exactly worked out well for some other industries. Or do you try to move it back to the United States? How do you even start to blueprint that?
Well, we have a tariff playbook, and it really consists of three things. One, pricing. Two, supply chain optimization. And then business diversification. And we've made progress across all three of those things.
I want to ask about your marketing. You've done some work with Catherine Lega in NASCAR that I've noticed. And now this sailor guy on Instagram who's going from Oregon to Hawaii, he has millions of followers. You dropped a care package off to him, which I thought was just brilliant. How do you come up with these ideas? How much do you save on marketing? Because that's not, you know, some $1 million drop. You just rent a plane and give him some snacks.
That's right.
How much is a drive? How much of a drive are these things to your bottom line?
Well, you know, it keeps e.l.f. at the top of the conversation, and our marketing team moves at the speed of culture. And so they are so in tune with what's happening in the community. I have to tell you, I did not know about Oliver's journey before we did that drop, and now I am like all in on it.
All in. You know, I have not been following this at
I'm all in. This guy quit his corporate job. He had a 9-to-5 that he hated, cashed out his 401k, bought a boat, and now he's sailing around the world alone. Well, with his cat.
With his cat, yeah. I don't know. I don't know if I love that the cat is on the open ocean. But Mandy, let's get back to your brand a little bit more. And I want to talk a little bit about how you acquire new customers, especially you think of beauty trends. They change so quickly. As I mentioned in the intro, I mean, Rhode is very, very popular, particularly among Gen Z. Unfortunately, I spend a lot of time on TikTok, and I can see that very viscerally. When you think about, again, the logic for buying Rhode at this point in time, was it really about trying to reach those younger consumers?
Well, as you know, e.l.f. also is very popular with Gen Z. And so, again, just like-minded disruption and that connection with community that is so important. You know, you look at Rhode and you see some of the pop-ups that they've had. People are waiting 14 hours in line to get access to this brand, to be a part of this lifestyle. And it's just really incredible. It's similar to what e.l.f. has done. I mean, we are so close to our community. A lot of our innovation is inspired by our community. And so both of us coming together really have an opportunity to be very community focused and disrupt this industry.
Mandy, we were talking a couple of days ago with Stefan Tanda from Aptar. They make packaging and dispensing products for the beauty and health care sector, maybe for you guys as well. But one of the things that he said was a reduction in airline travel is difficult for them because you sell fewer of your goods at, you know, duty free, and airports are a great place to buy that kind of product. Have you seen that as well?
You know, we're not available in duty free, but we continue to see demand for our brands. I mean, we grew our market share 190 basis points in this last year, and that has continued into our latest quarter. And we continue to see consumers asking for e.l.f.
All right, Mandy, great to have you on the program. Thanks so much for joining us. Mandy Fields there of e.l.f. Beauty, talking about her their acquisition of Rhode, Hailey Bieber's beauty line, and also some pretty cool marketing tactics. Let's get to some retail movers on our radar this morning, 20 minutes into the session. Kohl's affirming its full-year outlook after firing its CEO this quarter. We talked about that quite a bit.
Yeah.
Very interesting story.
It's very interesting, both what's going on in their C-suite. They're still looking for a new leader. They have an interim CEO in Michael Bender right now, but
maybe better due diligence this time.
Yeah. But it's interesting. I mean, you compare it together with what we heard from Macy's yesterday, and maybe it's not all bad for retail right now.
Yeah, exactly. Foot Locker sales missed estimates, but it's awaiting approval for its merger with Dick's Sporting Goods, so I guess the earnings are not as important to this stock. And Best Buy cut its earnings forecast due to tariffs, but you know, I read through some of the statement, some of the release, and they don't really have concerns about tariffs moving higher. They don't have concerns about the consumer reacting negatively. It didn't seem that bad. Nonetheless, the reaction is bad.
That's the thing. I mean, I hear what they're saying, that they see no major change in consumer behavior, but it feels like if you wanted to blame it on something, you could have just pointed to that. But Best Buy not taking that route. You can see shares down about 7.4%. This is open interest.
A multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise.
With some fun along the way.
This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a check on stocks at this hour. It's really a sea of green here. The S&P up 0.7%, and we've seen almost all of the big tech stocks rally. The NASDAQ up 0.8%. The only red chiclet that I have behind me is the VIX. And obviously, if the VIX is down, that's good for stocks. So in terms of the biggest movers, NVIDIA now a $3.5 trillion stock, adding 5%. Microsoft is not down. The same is true of Apple and Alphabet. Tesla's up 2.4%. Dan Ives says it's great that Elon Musk is quitting Doge and is going to work at the car maker full time. And Amazon up 1.5%, 1.33%. So, Katie, it looks like we're seeing some solid gains, but not really blowing the roof off.
No, not exactly. I mean, you take a look at trading volume. It is much higher than it has been. We'll continue to track that. But coming up in the next hour, we're going to head to the Goldman Sachs Leveraged Finance Conference in California, joined by Sonali Basak. That's coming up next. This is Open Interest.
we're micro investors. So as micro investors looking to invest capital, whether it's in private equity or in direct lending, what we're looking for are opportunities to deploy capital at attractive risk return. When we wake up in the morning, we don't seek to avoid risk. We seek to price it correctly. And so in an environment like this, for sure, if you're looking at a portfolio company opportunity, when you think of the value creation plan, you're factoring in now the uncertainty, which undoubtedly will impact the extent to which you're willing to pay for that asset. Now, in our existing companies, in our existing portfolio, the vast majority are services company. And services companies don't have basically the input issues. But I will say that when we look and we roll up all this data for all of our portfolio companies, and it's quite rich, it's just down now below 1 million employees globally around the world. We're 2,300 at Carlyle itself. But in our portfolio companies, we roll up this data every month. For example, the inventory component of PMI was up about 4 points. I know that's not really news that anybody probably would have focused on, but we could see that happening months ago. So immediately when it looked like the new administration was going to come in and there was the possibility of tariffs, you could see purchasing managers immediately mobilizing to start bringing goods in faster because of the uncertainty factor.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. The White House says it'll appeal after a federal trade court in New York ruled the president doesn't have the authority to impose tariffs on other countries. Only Congress does. Correspondent Natalie Brand is in Washington.
A White House spokesman in a statement said that the trade deficit that exists in the United States have created a national emergency that has, quote, decimated American communities, left our workers behind, and weakened our defense industrial base. It is not for unelected judges to decide how to properly address a national emergency.
I'm Vicky Barker at the Foreign Desk in London. That trade court ruling blocking most of President Trump's tariffs has thrown a grenade into multiple negotiations between the White House and countries targeted.
You can't really take on the tariff issue if you don't really know if those tariffs will exist.
Chris Southworth, head of the International Chamber of Commerce. And with more legal wrangling promised, there is yet more uncertainty for businesses at home and abroad.
Secretary of State Marco Rubio's announced the administration will work to aggressively revoke the visas of Chinese students in this country. Correspondent Nancy Cordes.
It's unclear what sparked this decision and how many visas they plan to revoke, but this is pretty big. Chinese students make up 20% of all the student visas issued by the United States.
A new report says more than 1,200 federal workers have agreed to buyouts that could make the skies less safe. CBS's Christopher Cruz.
An internal presentation says the FAA is losing senior leaders, technical experts, and mission support employees, affecting divisions that oversee air traffic and space launches, among other activities. The Wall Street Journal reports the presentation warned that employees are departing the agency in mass quantities across all skill levels, taking with them critical skills and institutional knowledge. That could leave the agency unable to meet its congressionally mandated duties.
Officials in Washington state say 2 of 7 people shot near American Lake Park in Lakewood last night are in critical condition. Sergeant Charleston Porch says when police got there,
some people were just trying to get out of the area, others trying to help some of the victims and trying to get the attention of the officers.
No word on what triggered the violence. So far, no arrests. Spectators cheered after a judge in South Africa sentenced a woman for selling her 6-year-old daughter for about $1,000.
On the human trafficking charge, you are sentenced to life imprisonment.
That was life in prison for Kelly Smith. The little girl went missing north of Cape Town more than a year ago. She still hasn't been found. The Dow is up 98 points. This is CBS News. A new study finds your cat can distinguish between the way you smell and strangers do.
Just like a cat owner knows when their feline is making a polite request, researchers say cats can tell the difference between humans they know and humans they don't based on their odor. Scientists presented 30 cats with plastic tubes with either a swab with the smell of their owner, a swab with the odor of a person the same sex as their owner they had never met, or a clean swab. Cats spent much more time sniffing the odors of strangers compared to those of their owners or an empty tube. But scientists say they don't know yet if cats can identify specific people. Allison Keyes, CBS News.
Beyoncé fulfilled a fan's request for a gender reveal at a concert near New York City. The crowd at MetLife Stadium cheered after she smiled at that fan and confirmed it's a boy. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience, streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast Live. That's where you'll find us. Coming up, we're going to check in with Brendan Murray, Bloomberg Global Trade Editor. Looks like the courts are pushing back on some of President Trump's tariffs moves. We've got the latest reporting there. That is certainly impacting the market today. Matt Stuckey, Vice President, Chief Portfolio Manager in the equities business for Northwestern Mutual, will join us to give us his market call. We got some economic data today, jobless claims and some other stuff. We'll have Michael McKee, Bloomberg International Economics and Policy Correspondent. He's going to join us to break that down, as well as Dan McGann. He's going to join us, AMCS CEO, on the company news, tariff impact, and energy.
Do you know where Mike is, by the way?
Where is Mike?
He's in Odessa. In Texas,
that sounds like
living my life.
Really?
Yes, so we can talk a little bit about what he's seeing there too in the Permian Basin.
Oh, that's awesome.
Remember, Chevron is cutting 800 jobs in the Permian. Yeah, they are. So we can break that down.
Is that a reflection of oil prices?
Hard to say because they already announced 20% cut before all the trauma and the drama, but so who really knows?
Okay. All right. So we'll have all that coming up in the next couple of hours. Alex Steele and Paul Sweeney. Let's go to John Tucker right now and get a Bloomberg Business Flash. John.
All right, guys. This flash being brought to you by IBKR. Will U.S. oil production exceed 13.63 million barrels per day for March 2025? At IBKR forecast trader. The yes was recently at 12%. Start predicting today at ibkr.com/forecast. The last trading day for this contract is May 29th. Major stock averages, they're higher, but off the best levels of the session. 9 of the 11 major industry groups in the S&P 500, they're up right now. That's being led by information technology, home to NVIDIA. They delivered the solid sales forecast. Also saying the AI computing market still poised for what they call exponential growth. Real quick, Kohl's reporting better than expected comp sales. Well, more on that in just a sec. Salesforce raising its annual sales forecast. That suggests that its AI agent product on path to contribute a pretty significant revenue. Now, some of the initial enthusiasm wearing off after that trade court blocked the bulk of President Trump's import tariffs. And Julian Emanuel at Evercore ISI says investors still need to be cautious.
You know, you've got an expensive market with a relatively high degree of uncertainty, and it's not really the time to add to risk in our view.
And right now, the Dow just turned lower, down 26 points. That's a decline of 0.1%. The S&P 500, that's still higher, up just 14 points. The NASDAQ 100, 45 points higher. That is up 0.2%. Buying undies on Victoria's Secret website still apparently isn't working. The retailer...
No, I'm kidding.
Taking steps to address what they described as a security incident. They stopped some office operations and told employees to avoid using company technology. This disrupted the online shopping website and also some store services. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. And that's your Bloomberg Business Flash. Alex and Paul.
Thank you so much, John Tucker. Happy Thursday, everybody. We want to take Commonwealth is supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio, bringing to you market drivers, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn more about their consultative support and technology. It is quite a day. We want to look at some of the stocks on the move. I'm Alex Steele with Paul Sweeney. We're joined now by Denisa Sakova. Let's start with United and JetBlue. This I felt was a fascinating deal. Deal is a loose term.
Yeah, but I think it's definitely a fascinating development. We know there has been a lot of chaos for everyone who has taken a flight from New York in the last few weeks, but those companies agreed to a partnership that will allow travelers to use their loyalty points and book flights across the two carriers. It's an interesting thing where United will have more exposure to JFK flights, which we know lately it's been a big issue, right? There has been a lot of delays in New York, a lot of cancellations, but at the same time, this will be a big boost to JetBlue as well. So far, the reaction, we're seeing a bigger reaction in United. United is up about 3%. JetBlue is pretty much flat, although in earlier trading, we saw some excitement there as well. But we know it's been a rough start of the year for the airlines. Those two particular names were down at least 20% heading into those news, and the agreement fulfills the desire of United CEO to kind of help in those difficult times with air control in Newark. That's kind of spreading in other airports as well. Some elements of the venture could begin as early as this fall, so maybe very soon we'll be able to book flights from one company to the other. They're merging their apps and like working together to...
The first thing I thought of when I saw this headline was, ooh, Paul's going to be so happy because now he can use those miles to go to Aruba.
Oh,
Aruba.
Wow. What? Isn't that how you do JetBlue? You do JetBlue.
No, I do United to Aruba.
You still do United?
Yeah, I do. I haven't flown, I don't think I've flown on JetBlue, but now maybe I will.
No, you definitely will, because it's also sometimes easier and better flights to the Caribbean.
I just want the runway to be opened up. We need that second big runway to be opened up. Because now, John, they're flying in on that east-west runway, and they go to the Pulaski Bridge, they do a hard right turn, and land.
Oh, when you're traveling southbound on the or northbound on the turnpike, it's just like, whoa! You think you're going to get
a plane that's next to me on the road. Yeah.
Exactly. Yeah. It's
all right.
scary.
What else we got? Elf Beauty. I do not know what this
Elf
is.
Beauty. So
you have to invest in your face.
Yes, this is what you have to do.
Well, it's interesting. So Elf Beauty is kind of a more affordable cosmetics brand, and they're acquiring Hailey Bieber's Rhode beauty brand for $1 billion. So the beauty brand it's very famous for lipsticks, pocket blush, and everything lip treatments. It's a little bit more expensive than what you would expect from Elf Beauty. I think if you go buy a lip balm, it's something in the ranks of like $18. Elf Cosmetics is a little bit cheaper. But obviously this brand has been very popular in social media. We've seen quite a few success stories of all those celebrities, influencers turning a brand into like $1 billion grocery. Yeah, of course.
Who's Hailey Bieber?
Model. She's a model.
She's from the Baldwin family, and she's the wife of Justin Bieber, hence the surname.
Yeah. And she's a model. And you're seeing a lot of stars like make their own brand now.
Bieber?
And some of them are actually really good. I'm obsessed with Lady Gaga's
it's really
foundation.
Good.
Yeah, it's really good. I know.
Okay.
Anyway,
Yeah.
we're really in the
John,
right
you have
place
to
right now to
invest in your
talk about
face,
this.
John.
Always
Yeah.
invest in your face.
Yeah, there is a whole industry there.
All right. Give me something else, please.
Yeah, let's talk about older brands like Kohl's.
Ooh, did you feel
yes, it reported better than expected comparable sales. A positive sign. It's been obviously there have been so many news about these companies that are not connected with fundamentals or the macro or all those things. The stock is up 11% today. Really big jump. Before that, it was down about 40% year to date. Of course, we had this dramatic exit of the CEO just a few weeks ago because of directing millions of dollars to a business, to a person with whom he had a personal relationship. This has been the fourth CEO that Kohl's had since 2018. A lot of tumult, but some relief today based on earnings.
All right, Denitza, thank you so much. Denitza Sokovich, she covers all the markets for us at Bloomberg News. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. A U.S. court has blocked many of President Trump's tariffs on imports from dozens of countries, declaring them illegal and throwing his tariff strategy into turmoil. For more, we're joined by Brendan Murray, global trade editor for Bloomberg News, joining us from London. Brendan, how much of a setback is this to President Trump and his administration's tariff policy?
Well, it depends on the legal expert who you ask. Some of them will tell you that he's run into a brick wall. Others will tell you, and the administration itself says that this is just a bump in the road. So the process is going to play out through appeals. There's going to be some legal proceedings that are going to take place over the coming days that will give us a good sense of where this is going to go. This is President Trump's signature tariff, the so-called reciprocal tariffs, a 10% baseline on every country, and as high as 49% on some countries if they don't do a trade deal with him by July 9th. So there's a lot at stake here, but the administration is telling us that they have other options, other authorities that the president can use to put tariffs on specific industry sectors. So the trade wars probably are going from a chaotic, unpredictable sort of style of things playing out to something that's more predictable and probably slower paced.
What does this do, though, to President Trump's leverage with other companies? Because the defense made it very clear this was then a negotiating tactic, and you take that away from the administration, and what is there left to bring other countries to the negotiating table?
Well, he does have these other sectoral tariffs, these industry tariffs, steel, autos, pharmaceuticals are in train, and so there are other ways that he can apply pressure. He could do a number of different things to raise those tariffs. Currently, many of them are around 25%. So there are ways to apply pressure other than just this reciprocal tariff that the court has struck down, at least for now. So the president, as he said, thinks he has all the leverage, but we'll find out with the responses from some of the trading partners who are in talks with the administration. They sound like they're gonna sort of wait and see how things play out, which is code for we're in no hurry. So and they're not feeling the pressure, particularly now that this court has ruled the way it has.
Brendan, is the expectation here that this thing will eventually get to the Supreme Court?
There's certainly some sense that it could go either way. I don't know if a coin flip is the right way to put it, but there's you can find people, as I said, who think there's no way they're going to win this on appeal, and we heard the administration and their legal experts saying we think we got a good chance to win the appeal. So it's beyond my legal expertise to understand how this is going to play out, but it's definitely going to keep an already fast-paced and interesting trade story at the top of the page.
Yeah, no kidding. All right, Brendan, thanks a lot. Brendan Murray, global trade editor over at Bloomberg News, joining us from London. What's also interesting is what it does to the budget deficit, because the trade revenue was key. the budget deficit was still sort of blown out and people were worried about it. Now you put this in there and then TBD, how do you raise that specific revenue?
And the court ruling, which is 45 pages long, gives a great history of the tariffs and, you know, what they're supposed to make up for and what they're intended for.
Did you read it?
I read about 20 pages, yes. It's very well written, too.
Yeah. Well, Tom was reading it during our surveillance, so he had it out. He was making notes and everything, so it's probably a good read there.
All right, well, coming up, we are going to go to Odessa, Texas. Michael McKee is there reporting on the ground.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, and we are being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. The initial boost to stocks, that has faded. The Dow has jumped between gains and losses as Salesforce is to blame for that. That's the laggard in the index. Even as the software company reported first quarter results, they actually beat expectations and also gave an outlook that's seen as positive. And the most active stock right now, NVIDIA, after their positive earnings report. Now, despite some of the restrictions related to China, the chip selling restrictions, they're giving an upbeat sales forecast. Did get some economic news today, jobless claims, continuing jobless claims, and this is a proxy for the total number of workers who receive unemployment benefits. That rose to the highest since 2021, and Bloomberg Economics says the data point to further cooling in the labor market. S&P 500, 14 points higher. That's up about 0.25%, 59.03 on the index. The NASDAQ 100, 40 points higher. That's up 0.2. The Dow back in the green, just 6 points higher right now. Oh, no. Marcus by Goldman Sachs notifying customers
I know
the rate on the online savings account has been lowered again. Effective yesterday, it went from 3.75 to 3.65%. They maintain that their rates are still 8 times the national average. So whatever. But, you know.
I know, but I was like, where's my Fed cut? If you're going to take it down 10 basis points, like, where's my Fed cut?
I don't know what they're looking at. I got to find that out, what it is they're benchmarking that from. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
All right, JT, thank you so much. We appreciate it. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's go to Matt Stuckey, Chief Portfolio Manager for Equity. He's at Northwestern Mutual Wealth out there in Milwaukee. Pound for pound, some of the best money managers in the world are in Milwaukee. I have no idea why. Matt, what do you make of this market? I mean, we were down 20%. We've retraced much of that decline. And now year to date, we're basically unched on the year. Where do we go from here?
Well, good morning. Thanks for having me back. Look, I mean, I think the market's likely to stay pretty volatile. While we've round-tripped, the tariff-induced losses in April, by no means are we out of the woods, just in terms of the uncertainty that still remains in terms of what trade policy is going to look like a month or 2 or 3 from now. And so, days like today where you have really strong earnings reports after the close, from NVIDIA kind of carrying the open higher and then kind of whipsawing back down, I think are kind of par for the course as we kind of think through kind of how markets should behave from now to the end of the year, just given the uncertainty that still remains.
So when it comes to NVIDIA, is this the ballast that we are all hoping for? Like, does that really help unleash animal spirits, or is that just confirmation that everything's okay, but that's harder for upside?
For NVIDIA specifically, I think what's unusual about the setup into the print was, this was one of these times where, NVIDIA was somewhat cheap relative to expectations. And so it comes into question whether or not, the buy side and sell side were mismatched in terms of where those expectations sat. And, just to kind of get into it a little bit deeper, back in April, NVIDIA traded south of $100 a share. And if you believe kind of the base case that a lot of sell side shops are pitching, we're talking, $6 plus per share in calendar year 2026 in terms of earnings per share. That makes NVIDIA a sub S&P 500 multiple name. And, that's where kind of the stock was heading into the print. Of course, it kind of rebounded with the rest of the market in April. But, NVIDIA had historically always traded 35, 40 times forward earnings, and it was sub 20. And so, this has just been a little bit of a sigh of relief if you're an NVIDIA shareholder, that the growth story is still intact, and some of the concerns about supply chains and being able to really ramp up, rack scale Blackwell systems in the back half of this year seem to be in the rearview mirror.
So, Matt, does the NVIDIA results last night a little bit better than expected? Does that give kind of a green light for tech broadly defined here? Can tech continue to be a leader in this market?
Well, if NVIDIA doesn't work within tech, what else is really going to work within tech? And I should probably be a little bit more specific with that. Within semiconductors, how about we just kind of keep it to that kind of industry? Look, how many companies can you point to that have to sacrifice $10.5 billion worth of high margin revenue over 2 quarters in the form of H20 revenue, still outperform the overall market on a year-to-date and 1-year basis? There's not a whole lot of them. And NVIDIA is the only one that I can think of that's been able to clear that hurdle. But I think if we kind of also think about the setup into the quarter, you kind of clearing some of the China uncertainty by just kind of removing the revenue piece altogether for them specifically. That's not the case for the rest of technology. There's still tariff-related concerns for a lot of other names within tech. NVIDIA is just kind of already kind of past that, and we'll probably have to see some others also pass that into the future.
So we got this trade ruling, and then we got NVIDIA. Does this clear the runway for the S&P to now test again record highs, or is it too early to call that?
I think it's too early to necessarily, believe that, the trade-related and tariff-related fears are behind us. While a lot of the tariffs were rescinded via the court order last night, there are other avenues to restoring those tariff levels, whether we're talking about Section 272, which is still in front of us, or some other of the authorities that the president has to restore the tariff levels country by country. That uncertainty, from my perspective, still remains. And so, the runway from here, I think, is really just a function of kind of how the labor market holds in. We see sentiment data really bounce around quite a bit, with the consumer, with, the April 2nd announcement kind of really plunging consumer and business confidence, but then it's starting to ramp back up a little bit. But during the interim period, if we're looking at the April credit card data, or what we've seen from the Chase card data in the weeks of May, that sour sentiment on the consumer level hasn't really translated to changing spending behavior. In fact, it's kind of been a little bit better than expected, and at least in line with trend level growth that we saw earlier in this year. And so while consumers are telling us that they're anxious about kind of the outlook, that isn't affecting their behavior, and that's ultimately what drives earnings.
All right, good stuff. Really appreciate it. Thank you very much, Matt. Matt Stuckey, Vice President, Chief Portfolio Manager of Equities at Northwestern Mutual. All right, let's get to my partner in crime, Michael McKee, Bloomberg National Economics and Policy Correspondent. We are working on something for Wall Street Week, David Weston's show, where we deal with the drop in energy prices and the drop in gasoline prices, and is that sustainable, and what does that mean for the economy? So for Mike's part, he is now down in Odessa, Texas, and we'll get to the stuff that happened today at 8:30 in a second. Hey, but Mike, you're in my kind of town. Like, did you see that one highway where like everything goes through from the Permian and back, the oil rigs and back?
Yeah, when you leave the airport, you are quickly reminded that you are in oil country here, especially shale country. There are drilling rigs everywhere, and of course, lots with stored up equipment to use. But it kind of also tells the story that even though gasoline prices are going down because oil prices are so low, it may be time for the producers here to cut back. And we had an announcement today that Chevron is going to cut 800 workers in July from their payrolls here in the Midland, Odessa area. And that's a sign that maybe people are starting to think about how this is going to change life here in the Permian. And you notice how I tied that to jobless claims, sort of.
All right, well, let's go to the jobless claims real quickly here. At 240 print, consensus was 230. Last month was revised down to 226. Is 240 a number that gets your attention, Mike?
It makes you take a second look, but it's not high enough yet to think that anybody's going to be too worried about it. Over the last 2 months, we've had a couple of weeks where claims have gone to 240,000 and then fallen right back down. We're also in a period of time when it is a little more difficult to seasonally adjust. Ever since the pandemic, the months of the late spring, early summer have shown higher than usual jobless claims, and then they fall back. So does it mean that we're starting to see the effects of tariffs, et cetera, or is it just a statistical quirk? That's what the Fed will have to figure out. And so they're going to want to see a number of more weeks before they start worrying about anything.
What did we learn from the second quarter read of GDP? Sorry, the second read of first quarter GDP.
Yeah. It was interesting, Alex, because your last guest was talking about how people had not really cut back on spending, but apparently they had been spending less than we thought. Because while overall GDP was revised to a negative 0.2%, a tenth of a percent better than the initial release, personal consumption was revised down to 1.2% from 1.8%. So a significant drop in what people spent in the first quarter from the original report. And that is not necessarily going to be good news going forward into this quarter. Now, we're most of the way through the quarter, and we're only now just getting some of the data from it. We will get the consumer spending numbers for April, the first month of the quarter, tomorrow. So we don't know yet for sure if people have cut back enough significantly to put the economy close to recession, but it's not good news to see people not spending money.
Mike, for lunch or dinner today, I recommend Rosa's Cafe and Tortilla Factory. It looks like a winner there in Odessa. But Mike, I mean, you got WTI crude oil at 60 bucks. The people there got to be getting nervous because I keep hearing about a cost of production that's pretty darn close to $60.
Well, 61, 2, 3, up to 65 is break even, and that's break even. That's not even making a profit. We've got a surplus in oil right now, and so the oil companies are cutting back. They have closed down some drilling rigs. The rig count has fallen back. And what people here are worried about is we see a rerun of 2015 when oil prices just collapsed. And so did the economy here because everybody gets laid off. And it takes a while to recover from that. This area is totally built and runs on energy, on oil and gas drilling. So there's going to be a lot of people watching the oil markets very closely.
And to Al explain that 2014, that was when Saudi Arabia wanted to try and basically put U.S. shale out of business and really help tank the industry. Oil prices went to like 26, gasoline prices went to $1.70. It was pretty brutal for the industry. You could make the argument, though, that companies are in a much better spot today. The balance sheets are better. And the companies in the Permian are bigger. So they have different assets so they can manage and weather this kind of storm. They don't like it, but they can weather it. My Al Explain is now done
La
for the
Margarita,
day.
Mexican food looks awesome too. I'm looking. I mean, there's so many good spots in Odessa.
Paul's jealous now that he didn't go.
Yeah.
I'm jealous that I didn't go. We tried to make it work where we both be there, and it didn't happen. All right, Mike. Good luck. Have fun reporting. Can't wait to hear the great stuff that you bring back. Michael McKee, Bloomberg International Economics and Policy correspondent, joining us there. All right, coming up, Daniel McGahn is AMSC CEO. We're going to break down some company news, the tariff impact, as well as energy. And later on, we're going to be playing some of the tape from Ed Ludlow's interview with NVIDIA's CEO Jensen Huang. So really looking forward to that. There was some rhetoric about that the call was so measured and scripted in an unusual way for NVIDIA. I think it was JP Morgan Market Intelligence was saying that. It felt like an Apple call. I don't know what that means.
Interesting. Okay.
But
I mean,
careful.
it's all about expectations, and apparently they did enough to keep people happy.
Which was something because the consensus was kind of all over the place there. So just doing enough seemed to work. That stock up 4%. This is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock averages slightly higher right now. NVIDIA most active after its positive earnings report. Shares of NVIDIA right now, they are up 4.4% and one of the best performing stocks in the S&P 500. Best Buy, the worst performing stock in the index, down over 8%. They reduced the annual guidance. Projections now reflecting an assumption that tariffs will stay at current levels for the rest of the year. Shares of HP Inc. Dropping as much as 5%. The company issuing a weak profit outlook. They cut the annual earnings forecast, and they're pointing toward weaker economy and continuing impact from tariffs against China. Meantime, Timothy Moe at Goldman Sachs, he reacted to the court decision that blocked the Trump tariffs.
This might be considered a body blow, but it's not the final rendering. And specifically, there are a number of other substitute acts that the Trump administration could employ to maintain tariffs.
Right now, the S&P 500, 18 points higher. That's up 0.3% at 5907. The Dow is up just 10 points right now. The Nasdaq 100 up 76 points, and that is a rise of 0.4%. 30-year yield, haven't done that today. Down just about 2 basis points, 4.95 the yield right now. You're mentioning oil. Wildfires in Alberta's oil sands region threatening about 4% of Canada's crude output. 25 out-of-control fires burning in that province. Canada is the 4th biggest oil producer.
So U.S. is the first, then the Saudis.
I don't know, it was third, South America somewhere?
I don't know who the third is.
Anybody? Anybody?
No. Maybe
Bueller?
Guyana? Is it going to be Guyana now?
I-
Anyway, yes, the wildfires are bad. Also, Kazakhstan is saying it's going to keep producing oil.
We check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
All right. Thanks so much, John. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. We also love to check in with our next guest. So the ticker is AMSC. It's American Superconductor. So it sounds like you want to make it like a semiconductor company, but it's not. It's a power equipment company, and it has a really good read into the demand in the United States, as well as what the hyperscalers, what the technology industry is actually asking for, plus a view on all the executive orders when it comes to energy, as well as that House bill. So he's a great person to check in with. Daniel McGann is the CEO of AMSC. So you had a relatively strong quarter. You're looking at total revenue grew over 50% year over year to over $222 million. You also ended your fiscal year with over $85 million in cash, and your backlog also grew. What led the growth?
Yeah, it was a record quarter for us, and it's great to be back and to see you guys. A couple things are really changing in our business. So our business is very much different today than even was a year ago. So we're starting to see some of the ramp in semiconductor coming from some of the themes you were just talking about. And we're benefiting from them. They need high degree of quality power, particularly in this country, but it's global as well. So as we move more to AI and more to data centers, you need more chips, you need more electricity to be able to power all those, and we're starting to benefit from that. And then kind of the new news for us is we're pivoting a bit in energy. So we've been known as a renewable energy company, and a lot of our key customers are now pushing us to provide power equipment for traditional energy. So this move and kind of what you were talking about in Canada and what's happening in the US, that there's an increase in demand coming. There's a large investment coming in more capacity. Much of the tooling in that capacity requires power, and power from the grid. That's hard to get and hard to be able to control. And that's where we're being pushed by our customers to start to go into that market. So that's also, we think, going to transpire into growth here in the relatively near term for the company.
Your grid business revenue grew by 60% year over year. What is the grid business? How do you explain that?
So we basically power equipment on the grid that's going to connect, either that's going to bring generation on or to manage consumption off of the grid, particularly at an industrial scale. So large scale generation, large scale consumption. Think of it as you're buffering, you're modulating, you're trying to take the electricity from one form factor and put it into one that either the equipment or the grid needs. Sometimes equipment can cause problems back on the grid. So things that are the equivalent of kind of like large circuit breakers or things like that. Not exactly, but as an analogy, that's kind of what we do. We're modulating the volatility of the power that's induced by certain types of generation and certain types of consumption.
You mentioned your customers are asking more for traditional energy. What does that mean?
So as they build out the infrastructure to build pipelines or to be able to bring resources to bear and to process them, those all are processes that are electrical dependent. And the equipment that we use to connect a semiconductor fab is no different than the equipment that we would use to drive a pump or a motor that's going to move a pipeline, right? So it's how do you provide resilient, high degree of controlled power to those places. Almost everything we do, be it on the military or the grid side, we operate in a very hardened environment. It has to be physically, electrically robust, well-designed, well-packaged, very small type form factor. That's where we excel. That's where our technology really leads us. And that seems to be applicable as well to traditional energy. It's not a market that we looked at in the past. We find some of our key customers, which are really engineering, procurement, construction companies, saying, can you help us in this area? We see a lot of our investment going here. We've had a great experience with your company and your product on some other project, say a chemical plant or even a renewable plant. Can you bring what you have to bear in this other market? So it opens up a whole other opportunity for us. We're just trying to explore what it means for the company, but I think it definitely signals that growth should continue to come here over the relatively near term even.
When we talk about the growing need for energy, are you in the camp that we kind of need everything, all of the above, whether it's gas, natural gas, or some of the renewables, and maybe even nuclear? I don't know. Are you in that camp that says, hey, our demand is such that we kind of need everything?
Yeah, when you look at base load versus you look at peak load, you look at where load is, you're going to need a diversity of feedstock. We're still very much involved in renewables, but it's in India and in Europe, right? So one of the things I think that's misunderstood about our company is we don't do a ton in the U.S. in renewables. We never really have. We really focused in Europe. We really focused India there because the long-term policy is still present to drive that, right? We're going to try to take the business to where the market's going. This administration has a direction, let's say, to think about reshoring manufacturing, which should benefit us. And we try to take advantage of those things in the market.
The administration's also made it clear that solar's out, nuclear's in, and expanding coal plants, maybe not new coal plants, but expanding coal plants is also in. How does that, what are you noticing?
So we have technology that we see that's being asked for now as those projects start to evolve, where they need high degree of power. We also have a power product that helps with the effluent from power plants. So this is something that's new. So the negative impact of what's going to come out of the plant. How do you reduce that load? So if you think of kind of total carbon type equations like we used to start thinking about decarbonization, I think where you're headed is, yes, there's going to be energy from a lot of different sources. How do we make it more efficient? How do we make it more effective? And how do we make everything as clean as we possibly can? Efficiency and being clean kind of go hand in hand.
John Tucker and I both read the book, The Grid. We consider ourselves experts, but how is the U.S. grid today? Would you give it a grade of a B, a C?
Well, it depends on who you are and what you're trying to do with it. I think we're trying to ask the grid things it's just fundamentally not designed yet to do. We're trying to move power back and forth as opposed to just in one direction. We're locating things like data centers in areas where hopefully there's a high degree of infrastructure that exists, but it's not yet quite at the level it needs to be able to bring those loads on. So it used to be a lot about gentrification in cities and urban demand, but now you're seeing kind of spiraling and sprawled by industry, by data, and by chips. Now you have to think about the grid in a different way. So I think there's always this fundamental problem with electricity is when there's a change in the world where the demand or the generation is going to take place, you have to redesign and evolve the grid. And that's really, we try to come in and be at the center of that is how do we make the existing system work better without having to redesign everything?
Makes sense to me. And then there's Texas with their own grid.
Right.
They do.
And that is a whole different situation evolving. Hey, Daniel, really great stuff. Super appreciate it. We love catching up with you. Daniel McGann is AMSC CEO, joining us on kind of where the grid is, where the power industry is here in the U.S. Kind of talking about AI and that kind of power demand leads us to NVIDIA. So yesterday, NVIDIA's CEO Jensen Huang soothed investor fears about a China slowdown by delivering a solid sales forecast, saying the AI computing market still poised for growth. In a wide-ranging conversation with Bloomberg's Ed Ludlow, Huang addressed competition with Chinese peers and how the company plans to address those China slowdown concerns.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now, ChatGPT, Gemini, so on and so forth, Grok. I mean, they're just doing incredibly well across the board. And all of the APIs that they serve out and all the agentic AI services that are built on top of them, they're all doing incredibly well. I think that there's just a giant breakthrough in AI's capability, and inferencing has just become a giant workload. Second, people realize that Blackwell is just a home run. NVLink 72 is a home run architecture. We designed it to be a thinking machine, a reasoning AI system. And I think people now, the confluence of the breakthrough in reasoning AI and the availability, now the emergence of Grace Blackwell NVLink 72, perfect timing. I think that's at the core, a big part of it. And the second part of it is that our supply chain is growing and we're really ramping it up and they're doing fantastically for us. And so all of these things are all coming together.
And so it is fair to say that some of that additional supply on Blackwell and the demand for Blackwell kind of made up for the opportunity lost in China, at least in the outlook for this current period?
Yeah, I guess so. But, you can't underestimate the importance of the China market. This is the second largest AI market. This is the home of the world's largest population of AI researchers. And we want all of the world's AI researchers and all of the world's developers to be building on American stacks. And so, irrespective of the near-term revenue success that we have, we can't ignore the fact that the Chinese market is very important.
You explained, again, in some detail, that at least in the Hopper architecture, you have engineered down to the lowest spec possible. It's not possible to do anything different with Hopper for the Chinese market. But in your consideration for a different architecture or a chip for the Chinese market, is that what we're talking about, a new design or new class? And have you made that proposal to the administration, just designing from the ground up a new chip?
We're still thinking through that. They're just the limitations are quite stringent, quite limited, if you will. H20 is as far down as we could take a Hopper. We don't know how to make it even less, and so that's really the limit. So there are main, the limitations are quite stringent. So we have to really think through it. Whatever we make ultimately has to add value to the market.
All right, that was NVIDIA CEO Jensen Huang speaking with Bloomberg's Ed Ludlow. NVIDIA reporting results last night after the close. Pretty solid numbers, folks, despite some of the concerns coming out of China, which they quantified on a quarterly basis. Stocks up about 5% here today, and it's up about 5% year to date, so we take note of that. Mandeep Singh joins us. He's a senior tech analyst for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker studio. I mean, Mandeep, you could make the call. This is a really good quarter, especially accounting for the challenges in China. What was your takeaway?
Yeah, look, I think anytime a company that loses 20% revenue, China was 20% of its revenue up until a couple of quarters back, and chances are it's going to go to zero.
Really?
Yeah.
Wow.
And still they are able to beat their numbers and actually meet the guidance for next quarter. That tells you they have different levers to pull. The demand is really off the charts, and that's why the stock price is up. I mean, clearly they missed on their EPS numbers relative to consensus because analysts didn't bring the estimates down enough, accounting for China. But overall, the commentary was very solid on the demand side.
So does this remove the headwinds and provide tailwinds, or is it just getting clarity on the headwinds?
I mean, I think the China hole is a big one to fill. So even though they beat their numbers, it feels like, they will feel the China effect a couple of quarters from now, because at some point the hyperscalers will slow down with their CapEx, even though it sounded like they are finding new customers. So in addition to the 5 hyperscalers, now you have OpenAI building their own data centers. So Microsoft, the top 2 customers for NVIDIA data center revenue are Microsoft and Meta, and they made up almost a third of the $39.3 billion data center revenue in the quarter. So $13 billion came from just 2 customers, Microsoft and Meta. But now OpenAI is building their own data centers. xAI, Tesla, is also becoming a hyperscaler. So they're finding new customers. And then you layer on sovereigns. I mean, Saudi Arabia, UAE. Now he talked about going to Europe next week. So he's looking for sovereign buyers in Europe. So from that perspective, you know, you keep adding 10 billion new buyer every quarter, then suddenly it feels like the growth can keep going in terms of 35% growth.
Wow. I mean, here's just a macro geopolitical question. When you see a company like NVIDIA and you suggest that perhaps their China revenue could go to 0, it just brings back to me, there is this technology Cold War that's been building for the last several years. I don't see it stopping. I mean, I'm just using the NVIDIA data point, 20% going to 0. You think China's okay with that?
I think they will struggle at some point in terms of increasing the capabilities of their large language models. So right now, you've got the 4 or 5 best large language models here in the United States, OpenAI, Google, Anthropic, et cetera. And then you've got the other 5 or 4 or 5 in China, you know, DeepSeek, Alibaba, Tencent. And so the gap between them is right now not very much in terms of capabilities. But that's because they pulled forward the NVIDIA GPU demand. They anticipated this. They stockpiled a lot of the GPUs. And because this technology is evolving so quickly, when they don't have the latest GPUs for, let's say, 2 years, then it will be a great test of how much Huawei chips are capable in terms of, you know, meeting of what NVIDIA is giving to the US LLM makers.
Part of the reason of our technology superiority over the last 75 years has been our immigration policies. How concerned is Silicon Valley about not getting access to the best and brightest from the world to come into the U.S., be educated, stay here, and, you know, create these amazing companies?
I mean, clearly, I think that is one of the biggest concerns that a lot of the entrepreneurs have, and Jensen called that out in his interview last night. So, look, all these things kind of build up. I mean, you're not going to see the impact in the next 6 months or 1 year.
Sure, I know.
Maybe during the president's term, you will start to see a little bit of impact. But yeah, it certainly will have an impact in terms of the new company formation and, you know, kind of the new technology that America has incubated over the years.
So what's your biggest question now? For the chip sector / NVIDIA, what's going to be most on your radar?
So if sovereign buyers are coming out in, you know, such big numbers, and Middle East was a great proof point this quarter, what does it do to the hyperscale build out? I mean, so far what was happening was these hyperscalers were setting up data centers everywhere, and they were serving, let's say, Middle East. I mean, all of the Middle East cloud requirements were being served by Microsoft and Amazon. But now that these sovereign guys are setting up their own AI data centers, what does it do to the cloud hyperscaler demand? And that's where I do want to, given we are talking big numbers, you know, 10 billion plus, at some point it will have an impact on hyperscalers. And I don't think market is thinking about it right now. This is more of a question, you know, 6 months from now, but market will anticipate any impact on the hyperscale cloud from sovereign demand, because these are the 2 big entities now for NVIDIA.
I got it. I got it. I think I'm on top of it now. Mandeep Singh, Senior Tech Industry Analyst, Bloomberg Intelligence, joining us live here on our Bloomberg Interactive Brokers studio. Again, NVIDIA stock up about 5% today.
For our listeners in the U.S., here's a reminder. You can listen to us via satellite radio, Sirius XM Channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Our second hour starts right now.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Happy Thursday, everybody. Happy Friday Eve. Alex Steele here alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We have a fun hour lined up for you. First off, we'll kick it off with George Ferguson, a senior aerospace, defense, and airlines analyst for Bloomberg Intelligence on that United plus JetBlue partnership. Super interesting. And Janet Lauren, Bloomberg Higher Education finance reporter, joining us in the latest between President Trump administration and Harvard. Then Karen Manna over at Federated Hermes will discuss her outlook on the market. And Rob Kaplan, Goldman Vice Chairman, will be speaking with Sonali Basak at the Goldman Levered Finance Conference out in California. It's actually a pretty fun conference. I've been to that before. It's also beautiful.
What makes it fun?
Because pretty.
Okay.
Yeah, I mean, you really...
It's the Ritz and the Four Seasons are one of those.
You can't go wrong at the end of the day. And then it's Goldman. Nathan Dean and Bloomberg Intelligence will join us to discuss policy and trade out of the White House. Let's kick it all off for you right now, though, with a Bloomberg Business Flash. And for that, we go to John Tucker.
All right, for now, the major averages, they are pushing higher, well off the best levels of the session. Tech stocks leading the way, and shares of NVIDIA doing some of the heavy lifting right now. Most active, and shares of NVIDIA up 5.2%. Now, again, the major averages have paired earlier gains after stocks initially leapt at nearly 2% in overnight in Tokyo and sold trading. That's where the markets had the first chance to react to that ruling late yesterday by the U.S. Court of International Trade. Following the court ruling against the Trump tariffs, Seema Shah at Principal Global says the rally is overdone.
Yeah, I think it is a bit too enthusiastic. I mean, I think it's a knee-jerk positive reaction just by believing that tariffs can be, cancelled. Realistically, this is President Trump. There are many avenues that he can go down.
Elf Beauty, one of the big winners, rising, jumping, soaring after the cosmetic company delivered a stronger profit for the latest quarter. Also agreeing to buy Hailey Bieber's Road skincare brand, whatever. KG Motors of Japan has developed a battery-powered one-seat car. Well over half of the 3,300 units it plans to deliver by March of 2027. They have already been pre-sold to customers. This puts it on track to sell more EVs in Japan than the world's biggest automaker, Toyota Motor. Right now, the S&P 500, 30 points higher. That's up 0.5%, 59.18 on the index. The Dow up 32 points. The NASDAQ 100 is up 137 points, and that's up about 0.7%. There's a picture of this car on the Bloomberg.
Yeah.
I'm not sure I would be driving this thing on the New Jersey Turnpike. Anyway, it looks like one of those carts you push.
Yeah. No, thank you.
Anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash, Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. And if you've got this smart TV thing, Roku, Samsung TV, all that kind of cool stuff, Bloomberg Originals. You search on Bloomberg Originals, and that's where you'll find us as well. So that's cool. Let's get a look at what's happening with the moves today. I'm Paul Sweeney with Alex Steele, and we're joined by Bloomberg's Christine Aquino. Christine, what are you looking at in the stock market?
Well, Paul, I'm looking at Tesla, of course, ticker TSLA. That is currently up 1.7%, or just a little bit north of that. And that's because after the news that Bloomberg reported, sources telling us that Tesla is poised to begin its long-awaited robotaxi service in Austin on the 12th of June. So we didn't know the date. We knew that this was happening. We didn't know the date. And supposedly that has been discussed internally, could still be subject to change. But we have seen the company preparing for the launch. This week, apparently, it operated a test vehicle on public roads in Austin. No one was in the driver's seat for the first time. There was a Tesla engineer in the passenger seat, and it was a Model Y SUV, according to sources, and that drove autonomously with no remote operation.
Huh.
I don't know.
Okay.
If I were a Tesla investor, I'd feel much better now that Elon Musk is back.
Aren't they requiring him to work like 40 hours a week, or they want him back in the chair?
Yeah, I mean, and this, the stocks rallied pretty nicely here, so I think it's I think it's working.
Yeah, you always want leadership in the seat, right?
Yeah, especially one
sure.
that's Elon Musk, who's so associated with the company.
Yeah,
Talk about
and he can
key man
say
risk.
like, jump high, and everyone's like, okay, and they'll do it. I mean, who else has that kind of sway? Let's go to United Airlines.
Yeah, United Airlines, ticker UAL, that is currently up more than 1.5%. So bearing some of those opening gains, but still higher. And that is because of that partnership that United and JetBlue agreed to. It's going to be called the Blue Sky Alliance, and that will allow travelers to use loyalty points and book flights across the two carriers. So if you're a JetBlue customer or a United customer, you can cross over those point systems now. They're also integrating their operations in New York City area, so that means that United will return to JFK, and meanwhile JetBlue will get access to Newark, and that partnership will give United use of JetBlue's JFK flight slots for up to 7 daily round trips. That's starting in 2027.
I think it's a win-win for both airlines.
Totally.
I mean, if you're United, boy, you need some diversification away from Newark in this New York market.
Newark is just such a much easier airport.
It is, but it's
to
had
get
its
to
issues.
and
But
you know,
recently,
like,
well, for you, not for me. I don't
Yeah,
know.
going to JFK is a nightmare.
Yeah,
Come on.
it's like close to my house.
Nice. LaGuardia's nice, though.
It is really nice.
It is now.
However, they still have runway problems. Like it's, you know.
But I can see the flights from my beach going into JFK, so that's kind of how I pass the time on the beach. Watching planes, tracking them.
There are other things to do on the beach, you know.
No, guys, Paul is cool. All right, Best Buy.
Best Buy, ticker BBY, that is now extending declines down nearly 9% as we get underway in the U.S. session. And of course, we have the company reducing its sales and profit outlook for the year. And they say that projections now reflect an assumption that tariffs stay at current levels for the rest of the year. So the silver lining, though, is that analysts are saying that that guidance is actually way better than feared, according to JP Morgan, and Piper Sandler analysts also noting that the guidance does imply a rebound in margin trends in the back half of the year. And of course, we got that news today, right, or overnight, about that court ruling on tariffs. So who knows? You know, I mean, there's still a lot that could change on the tariff front. So maybe actually Best Buy's guidance ends up being on the conservative side and a little bit of upside. At least that's what analysts are kind of guiding us towards.
Yeah, so it was so interesting that the stock reacted the way that it did, where it's like, hey, I thought we liked less bad.
Less bad.
Yeah, I thought we liked that in this scenario. All right, Christine, thanks a lot. Bloomberg's Christina Aquino joining us. For more conversations just like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We were just talking about it, and that's that partnership now between United and JetBlue. So we got to go right to George Ferguson, Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst. We like the deal. Do you like the deal?
Yeah, I think it's interesting. I don't think it's no seismic shift for either of the companies. I think it helps them out with some of their strategies, but I don't expect it to have a large impact on their financials.
George, when I first saw this deal, my first instinct, being a former banker, is this kind of the first step of maybe United thinking about maybe at some point buying JetBlue? Is that even an option?
Yeah, so I don't think so. I think that even the Trump administration might frown a little bit on a merger of that size. Like I said initially, to me, I think it gets United some good exposure over at Kennedy. And look, you know, Delta and American are pretty large, especially Delta.
Yep.
And a lot of times, when you're the largest carrier in a market, you get to sort of command a premium. And so United coming in there, maybe putting some international flights on the schedule, they could probably pull in a nice fare, but be underneath, sort of undercut Delta a little bit in the market. So there's probably some pretty good fare generation potential for them. International is definitely very strong right now. In 2027, probably the same demographic drivers will be there, and so it's a good market for United. And I think they give JetBlue more exposure to Newark, where Spirit Airlines is got a larger share out of Newark, give passengers some more, budget travel options. And look, Spirit's got some challenges, so maybe JetBlue picks up more of that share long term, going out of Newark. But again, I don't think this is a precursor of a buy. But could they do more with this over time? Yeah, potentially. I think they could do more with it.
I mean, I have to wonder, JetBlue has problems. in terms of its scale, right? And it had problems when it was trying to buy Spirit, and then there was the American Airlines thing, and that didn't work out. Does this solve any of those problems, or does JetBlue still have a big hole it needs to fix?
Well, yeah, I mean, I think that it could help them, again, with some of their demand, even at Kennedy, right? So you can imagine if they're going to allow you to book through either JetBlue or United sites, you could see people coming in on JetBlue metal at Kennedy and then going out via United overseas. So I think it helps build some of that potential demand for them. Kennedy's a very large operation for them. And again, long term, I think everybody in low-cost world has a bit of a problem right now. Fares are definitely under pressure. They have to look forward and think about how's the landscape going to change here. Spirit is definitely one of the more challenged airlines in the low-cost landscape. And so if Spirit continues to shrink, this could be an opportunity for JetBlue to build some of that market share. And that's the ultimate fixing of that market, right, is to have some of those participants in low cost shrink and just create less options so fares can rise a bit.
George, I just booked my fares yesterday over to Italy. And am I going to have I'm stepping up a little bit to get over there. I'm not going to chintz it. Coming back, I'll be a little bit more accommodating. But am I going to have a lot of competition getting over to Europe over the summer and into the fall?
It always depends on where you're leaving from, right? So if you're going
Newark,
Italy,
United, baby, direct.
Yeah. If you're doing that, right, there's not many options for Italy. I just booked some Italy direct as well.
Look at you.
United commands a premium for that.
Yeah.
Does it really?
I'm into Venice and back from Naples.
Okay, but they're direct.
They're direct.
Yeah, not going through Paris. It's key.
Yes.
It's huge.
Well, that's why one of the reasons you live in the metropolitan New York area is to have great air service.
Well, yeah, but
to the world.
I don't fly. I can't fly direct to like Florence or anything.
Why?
I have to go through Paris or Amsterdam.
Not from JFK, you don't.
George,
work with Alex here, will you please?
I'm sure we can find you something, Alex. Tell me what your budget is.
Okay.
George
Paul's
knows some
paying,
people.
so it's free. All right, George, thanks a lot. Really appreciate it. George Ferguson joining us there.
So what I did is going over.
You did.
I went business class.
Yes, and then
it's
back
the
as
first
coach.
time I've ever done it personally.
So worth it.
But you have to, I think, because otherwise
totally with
the
you.
first 2 or 3 days are going to be just jet lagged, and I don't want to.
And then coming back, you don't care.
I don't care.
Yeah.
It's midday, whatever.
I mean, you'll still hate the people that are in business class, and you're not one of those people.
Exactly.
But you can function.
But I'm going to be one of those people going over. So you have to pay up for that.
You do.
But
it's so
Tom
worth
King's
it.
telling me it's a lot less than it was even 6 months ago. So
Really?
Yeah.
Well, we're going to trust him and his Paris tickets there. Okay, let's get more on where we are with Harvard and President Trump on the latest evolution of this drama. Janet Lauren, higher education finance reporter, joins us now from Bloomberg. I didn't think you probably didn't think you'd be this busy in this particular way. All right, what's the latest?
Well, the latest, right now, commencement is going on.
Oh, okay.
So that's...
I wonder who the speaker is this year.
Yesterday, I believe for the class day, it was Kareem Abdul-Jabbar for the undergraduates.
Ah, cool.
So it's, this should be in some ways a really happy celebratory time for Harvard, which it is, and especially for students and their parents and their grandparents who've all come. But just like last year, there is a palpable tension at Harvard around graduation. Last year, the question of protests, what was going to happen. An animal rights activist threw glitter on President Alan Garber during the ceremony. And today, there is also a very palpable tension, but it's a very different one, especially with international students, because it's unclear what their fate is. It appeared that yesterday the State Department has perhaps widened that ban on visas regarding all those with Chinese affiliations at Harvard. Things keep changing. It's hard to keep track on what's actually happening, but today, should be a happy day for the students at Harvard.
Harvard, it just feels, again, I have zero affiliation with Harvard. They're being targeted here by this administration vis-a-vis other Ivy League schools or the University of Texas or the University of Florida or anything like that. Do we know why?
Well, Harvard is the biggest prize out there. It's, we've talked about this before. It's the oldest university in America. It predates the country. It's the richest school with a $53 billion endowment. And in some ways, it's more symbolic. What else, if you want to make a point, everybody in the world knows the brand of Harvard. Very powerful, almost in some ways like a luxury good, especially when viewed overseas. And yesterday, President Trump talked in the Oval Office about Harvard should cap the number of foreign students at 15%. It's more like 27% now. And I think that number is surprising to a lot of people, that these campuses have, almost more than a quarter of the students are from other countries.
Well, to that point, there is a headline that the Harvard case judge is now expanding the block of President Trump's foreign student ban. Does that imply that more foreign students get a stay are allowed to sort of stay at Harvard or apply to be at Harvard?
Well, keep in mind that just because the judge has blocked something doesn't mean if you're a student, you're going to be making decisions based on what's going to happen over the next 2 years or 4 years. And you want to be able to stay and complete your education and not have to think, oh my God, I have to transfer. I have to find a place that has an open spot and would take me.
With my affiliation with Duke University, I saw this at the board level, the first Trump administration, and now again, it's the exact same thing is happening now. They're seeing a drop in applications and interest from foreign students because they just don't know what the situation is going to be a week from now, a year from now, 3 years from now. All they know is, I don't feel as welcomed as I thought I would, or I'm going to need to be. So I'm going to look to Canada. I'm going to look to Europe and things like that. How hard do you think Harvard really is going to fight this, do you think? Just all of these things across the whole, I guess, panoply of what's going on.
Well, Harvard has already filed 2 lawsuits. The first one was in April in response to a letter that the administration made in lots of demands, and Harvard doesn't disagree with some of the things the government is asking for, but it does disagree in the way that it is going about it. So Harvard also has to feel like it's supporting its constituency, the students. They have to show that they're supporting the students. And I think in some ways the Harvard faculty has never felt more unified. It's, there's lots of different factions there. Certainly the humanities faculty are not going to agree with some things that the science faculty and priorities. But in some ways, this has unified them and perhaps alumni because they see somebody is standing up to Trump, and Harvard is, a very rich entity.
Janet, fascinating. I'm sure we're going to be talking to you more in the future regarding this and other topics in higher education. Janet Lauren, higher education finance reporter for Bloomberg News, joining us live here in our interactive brokers studio. S&P 500 up 21 points. The Dow's kind of flat. The Nasdaq's up 100 points. It's 0.7%. So a little red and green on the screen here. This is Bloomberg. Good morning.
And I'm John Tucker in the Bloomberg News. And with this Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. The S&P 500 and the NASDAQ 100 pushing higher right now. Tech leading the way. After the results from NVIDIA, the most active stock as well. And the Dow Jones Industrial Average. Right now, that has turned lower. A lot of that has to do with Salesforce. Those shares are down close to 7% right now. And HP plunging its shares as much as 13% earlier after the company issued a weak profit outlook. They also cut the annual earnings forecast. They're citing weaker economy in the U.S. and the impact of U.S. tariffs against China. The initial boost to stocks, again, that has faded. Right now, the S&P 500, 24 points higher, up 0.4%, 59.12 on the index. The NASDAQ 100 up 108 points. That's a rise of 0.5%. Dow Jones Industrial Average right now back in the green, up 9 points. Very little change there. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash, brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. We check the markets all day long right here on Bloomberg. I'm John Tucker. Alex and Paul.
All right, thanks so much, John Tucker. Alex Steele here alongside Paul Sweeney. We are live from our Interactive Broker studio right here in Midtown Manhattan. Check us out, Bloomberg.com, YouTube, as well as Bloomberg Originals. You can find that on your smart TV and your streaming things, you know, sure, streaming apps like Roku. Things, apps, it's all the same. Okay, what do we do with the market now? So potentially we remove some headline risk with the tariff ruling from the trade court, as well as with NVIDIA. So what do you do? Karen Manna is investment director and portfolio manager over at Federated Hermes. Karen, do these headwinds need to be taken out now of, say, the bond market?
Good morning, and thanks for having me on. So the headwinds have been perhaps stayed or misdirected for a little while at least, but I think we know the tone and direction that the administration wants to take. So for the bond market, the uncertainty persists and likely the tension remains and keeps us in the same range where we've been living for quite some time now.
When we take a look at where in the curve is going to offer that best value and that safety, is there one right now?
Definitely a tough call and one that we wrestle with here at Federated Hermes, but I've been advising that investors remain nimble and liquid in their fixed income holdings, but that the front end of the curve likely offers the most attractive spot. And I'll explain that a little bit further. I think many of us went into this year thinking that a bull steepener, where the front end of the yield curve goes down because the Fed begins an easing cycle, was really the most likely play. What we've learned as the year has progressed is that the Fed doesn't really have enough information or data to make that easing call. They continue to watch inflation and the labor market for a guide or an emerging trend as to what to do. Most market prognosticators now think that those easing or that cut would not come until later in the year. But still, I think that front end of the curve offers a more known environment, and it erases or somewhat eliminates or protects from what could happen in the longer end of the curve as we get out to the 10 and 30-year elements, because those are most going to be pushed around or perhaps even stay in the current range because of the uncertainty in policies, the unknowns where companies are sort of standing still but not making any drastic cuts, and as geopolitical risks remain. The other significant difference now, and I know that we're all aware of it in our day-to-day spending and existence, is inflation. But inflation can be very, very harmful to bonds, so I think it's going to keep folks on edge with those 10s and 30s and the idea that supply will continue. So I like the front part of the curve a little bit better.
And Karen, you've got a lot of company there. Most of the fixed income folks we chat with, they do talk about the front end or even the belly of the curve. Who buys the 30-year bond? Who buys the long end? I never hear anybody says, oh, I'm going to the long end of the curve.
It's a fairly specific group. It would be those that are matching long end liabilities. So oftentimes it's your insurers. I will tell you that if you're running a portfolio against the aggregate bond index, which is a representative of broad fixed income sectors in the full realm of the maturity cycle, it is difficult to hold a front end duration or a neutral duration without holding some 30-year. You might not hold equal weight to the benchmark, but you'll need a position in those 30-year bonds to offset your short holdings that you would have to balance liquidity needs and other portfolio design elements. So we're all in there to a little bit, Paul, but perhaps never jumping up and down and saying we're buyers on a specific day.
Are we worried about the budget deficit, particularly if we don't get the kind of trade revenue that we were expecting?
Well, us bond folks are always a little bit worried, but I do think that the budget conversation does lead us to emerge with not a solution for the deficit, especially in the near term as the budget that we've seen is currently drafted. And I don't know that anybody is expecting anything drastic to come from the Senate. It's largely expansionary in the near term and doesn't bring about major cuts in spending that would be required to fix the deficit or to take it back to, the zero realm from where it is right now. So that combined with inflation, that in and of itself is an inflationary boost rather than something that would decrease inflation, leaves us to be concerned about that longer end part of the curve. But that said, we still have significant demand. I don't see the long end bonds sort of moving up in an excitable or uncontrollable manner, but I think that we're going to dance around and stay in this current realm for a little while longer until we would see some shift in that deficit and in inflation.
All right, Karen, thank you so much for joining us. Karen Mena, Investment Director, Portfolio Manager for Federated Hermes out there in Pittsburgh, a proud graduate of the Penn State University. So could have the best backfield in college football, Alex, next fall. I'm just telling you. So if you want to chat about that, let me know anytime.
Okay, so yeah, know, John Tucker's not even playing around with you. He doesn't know.
Or we could talk about oil.
Yeah, do it.
Up, down another 1.2%, $61. Michael McKee and his friends in the Permian today are not happy.
Hey, listen, they're my friends. He's just renting them.
Oh, that's right. He's just renting them for the day.
Not that I'm territorial or anything along those lines. But now we're going to actually head back to California at the Goldman Sachs conference, the Leveraged Financial Conference. Janali Basak is there with Rob Kaplan, former Fed president and Goldman vice chairman, kind of break down the markets, the economy, particularly the capital markets as well. Let's listen in.
And welcome to our Bloomberg television and radio audiences. I'm Sonali Basak, and I'm standing by with Robert Kaplan. You might know him from his former time at the Dallas Fed. You might know him now as Goldman Sachs' vice chairman. In either direction, there's a lot to talk about in this market from your macro hat as well as your client-facing hat. But let's start with the latter. What are clients saying to you right now in the wake of what you saw just less than 24 hours ago with pressure on the Trump administration's tariff policy? Does it actually clear anything up for clients?
Probably not. I think most clients are just now reacting, and we're actually at Goldman piecing this through. And I think our own judgment is the administration's more likely to find other authorizations to continue to do what they're looking to do. It's still our best guess that when this is all said and done, the tariffs will settle out in the low to mid-teens. That'll create challenges for companies. They'll adjust to it. It'll create bigger challenges for small business who don't have the leverage to adjust.
So what's the key advice? What are businesses preparing to do for those tariffs?
Well, if you're a bigger company, you're reviewing all your logistics and supply chains. And the reason they're in the middle of doing this happened abruptly. And so given 6 or 12 months, most companies I talk to can reshift, but not overnight. It'll take 6 months to a year. And then the thing they're telling me is they're also, in light of this, they're gonna pressure suppliers. They're gonna take some out of margin. They'll put some in price. They don't know how much yet. And they're also looking how to tighten their belt a little bit, because they realize if they're taking some margin, they may need to find other ways to pay for it in their company.
So I was listening to your chief economist, Jan Hatzius, a little earlier. He reiterated that 35% probability of a recession, saying that's still quite material. It's an elevated level. What could make that worse? What are you most concerned about right now in terms of the economy slowing down?
So there's a couple of big structural issues that are probably reducing the probability of recession. Maybe very sluggish growth, but not a recession. First of all, we started the year thinking we were going to do deficit reduction. And the sense on the tax bill was it will be primarily extending the Trump tax cuts. It now appears that we haven't done as much cost cutting, and the tax package is more expansive, not done yet. So fiscal policy may be more expansionary or neutral, not contractionary. We've got labor force growth decelerating because of change in immigration policy. It means the labor force is tighter, means the probability of unemployment spiking up rather than just drifting up is less likely. You need to have a severe downturn. You normally would have a spike up in unemployment. And then the other thing going on is obviously tariffs, which have been well articulated. Those tend to slow growth and raise prices. But when you put all that together, I think we're going to have sluggish growth. Probably not a recession, but probably sluggish growth, at least for the remainder of this year.
With that worry about sluggish growth, as well as potential inflation on the heels of these tariffs, a lot of concerns about at least the dual mandate for the Fed, which direction the Fed goes in, if not stagflation outright. If you were still at the Fed, what would you do this year in terms of cuts?
So I've been counseling for the last number of months to be patient. You have a lot of uncertainty, you have big structural changes, let them unfold. The thing that would force the Fed's hand if you saw unemployment start to spike up, then the Fed might have to lean in more and take more risk. But that doesn't appear to be happening. And I think the tight labor force makes that less likely. So what they're waiting for is to see, and I'd be waiting for, how will these tariffs feed through the economy? We'll have a better sense of that through the summer and into the fall. And so I think you're going to see them take it one meeting at a time, be patient. There's an SCP, Summary of Economic Projections, they have to submit in June. If I were in my former seat, I would probably say 1 to 2 cuts, probably more likely 1. That's less than the market had been expecting. But I think you're going to see them take a patient, wait-and-see approach, and it's the right approach, I think.
The big frustration from our viewers here is that the market is pricing in 2 or less rate cuts. There is Morgan Stanley, which Mike Wilson believes could have 7 rate cuts by the end of next year. Now, our audience is really wondering whether there are no rate cuts this year. Is there a chance that the Fed does not have room to cut?
Possible. Yes. And the Fed, the thing is, I don't know, and then more importantly, the Fed doesn't know. And why don't they know? Because we haven't decided on what the tariff rates are going to be. We're still in the middle of negotiating a tax bill. I don't know what the tax bill is going to say. We have a lot of uncertainty. And so when you're in a period like this, sort of shorten up the prognostications, be more of a risk manager, take it one meeting at a time. And so I think that's what they'll do. And so there'll be people prognosticating out there. I would say the Fed's reaction function is going to be more immediate at a time.
Now, how much control does the Fed really have when it comes to long-end rates? You're looking at the bond market start to hiccup here and there. We have not seen alarming levels yet. We have not seen that 5% level on the 10-year that a lot of investors are looking out for. How big of a risk is there that we get there?
So the Fed doesn't have a lot of influence over the 10-year. Fed decides on the Fed funds rate. I actually think my focus, and I think to some extent our clients' focus, is more on the 10-year than on the Fed funds rate. And the reason is the deficit. Again, we went into this year with 6 and a fraction, close to 7% deficits. We've been outgrowing the world the last few years because of excess fiscal. I think people thought, okay, now we're going to reckon with this and we're going to start reducing these deficits. And it may not be materializing. And so I think you're seeing the back end inch up, maybe the term premium inch up, makes it harder to be a duration buyer. And I still think we're going to be wrestling with that for the rest of the year.
Robert Kaplan, of course, now Goldman Sachs Vice Chairman. You might have known him previously as president of the Dallas Fed, of course, weighing in here on these bond markets and what the Fed might do next.
All right, that was Shonali Basak, Bloomberg television anchor, out there in Dana Point, California, at the Goldman Sachs Leveraged Finance Conference, speaking with Robert Kaplan, Goldman Vice Chairman, talking about these markets and this Federal Reserve. Right now, let's get a little bit of a reset here of these markets. We'll go to John Tucker for Bloomberg Business Flash.
Yeah, and the major averages kind of mixed right now. We've given up some of the earlier gains. 9 of the 11 major industry groups in the S&P 500, they are up. They were being led by information technology. And, of course, that is home to shares of NVIDIA. They are up 5% after delivering that solid sales forecast, also saying the AI computing market still poised for exponential growth. Polls reported better than expected comp sales. Salesforce raising its annual sales forecast, suggesting its AI agent product on path to contribute significant revenue. But that was actually a weight on the Dow. Dow Jones Industrial Average 49 points lower. That's down about 0.1%. S&P 500 right now up 20 points. That's up 0.3%. The Nasdaq 100 79 points higher. That is up 0.4%. Meantime, Rebecca Patterson, former CEO at Bridgewater Associates, says, the risk-on mood in response to the Trump tariff court ruling certainly is not going to last.
So he's got lots of other paths in addition to appealing this ruling at the Court of Appeals for the Federal Circuit. So I don't think we're out of the woods by a long shot on this. And therefore, I would expect this rally may not be as sustainable as some would like.
Elon Musk leaving Doge, got that announcement last night. And Tesla, meantime, set to begin its long-awaited robo-taxi service in Austin, Texas, around June 12th. In preparation for the launch, the company operated a test vehicle this week on public roads in Austin. Nobody in the driver's seat for the first time. Texas, of course, is where Tesla is headquartered. They have relatively, let's say, relaxed rules around just about everything, including autonomous driving. The shares are up, and maybe it has to do with this. Maybe it has to do with the fact that Elon Musk is headed back to the company. Tesla shares up right now, 1.6%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
John, let me tag team on your news report there. Red headline just crossing the Bloomberg terminal. U.S. says it may ask Supreme Court Friday to keep tariffs intact. So here we go.
That'll be interesting.
Supreme Court's going to be busy. Don't they have a normal docket, but this is like extra stuff they have to do?
Well, this would be an emergency appeal, or at least fall into that category from the after the ruling from the trade court, which is in Lower Manhattan, right next to the federal building. It's an unusual looking. It's a just a small concrete box next to the big federal building on Broadway downtown.
All right, very good. All right, John, thanks so much for that.Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so check us out there. A lot going on, as it seems to be every single day from a policy perspective. News flow coming out of the White House, fast and furious. That's why we check in with our next guest almost every day, Nathan Dean, Senior Policy Analyst at Bloomberg Intelligence. He's responsible for all this, folks. So if you want to complain to somebody, go to Nathan Dean. Nathan, what is kind of the latest feeling within D.C. as to how this tariff situation may unfold here now that the courts are starting to weigh in?
So I think the Washingtonians are taking the approach that, this tariff fight is not over. Obviously, the courts have said that, President Trump's authority on IEEPA, or this International Emergency Economic Powers Act, is somewhat limited, and obviously we'll see that play out at the Supreme Court later this week. But, President Trump has other tools in his tool belt. Now, I'll say things like Section 122 or 338 or 301. But what you need to know is President Trump does have the authority under 122 to implement a 15% tariff right away up to 150 days. 338 can go up to a 50% tariff. Now, this 301, 232, that requires investigations. Where I'm going at with this is that there are other tools that President Trump has to implement these tariffs. And so the courts came down on IEEPA, and that's certainly that court case is going to play out. But if the White House decides to retreat and says, you know what, let's go about a different avenue here, and this is what Peter Navarro hinted at when he spoke earlier on Bloomberg Television, they can certainly reinstitute these tariffs. It's just going to have to go through a different process. The good news for investors news, though, is that the process is usually a little bit more transparent than President Trump just implementing these via Truth Social.
Does it matter? How does this read through to, say, the budget deficit? Because raising revenue through tariffs was like a big part of that bill.
So it doesn't really impact it all that much. So Congress is trying to actually pass this one big, beautiful bill, and they've known in the back of their minds that this tariff discussion is taking place, but it's not in the record. It's not part of the calculations of that bill. So, you know, it's almost like they're just keeping it in the back of their mind and said, okay, maybe we're going to be able to support this. But if you take out all the tariff revenue and you just presume that we're not going to collect anything else, Congress is still going to pass this bill. You know, the Republicans are fairly aligned with President Trump when it comes to extending these tax cuts and also for these additional $1.5 trillion in taxes in terms of like no taxes on tips, no taxes on overtime, et cetera. So the cost portion of it is there, but I don't think Congress is really going to pay attention to it. They're going to still pass this thing.
So what's the status of this tax bill? I mean, just timing-wise, talk about getting lost in the clutter of the news here. Where are we with the timing here?
Yeah, so the White House wants this passed by the 4th of July. It's obviously passed the House. It's now over in the Senate. Now, the Senate is out this week. There's been discussions among staffers of trying to figure out what in the House will pass what's known as the Byrd Rule. Essentially, are there provisions of this House bill that just won't work through the process of reconciliation? Now, I don't think that really is all that important to the tax or the Medicaid or to the Inflation Reduction Act portion. But next week, we should see the senators come back, and we'll start to see discussions of what are they going to pare back from the House bill. Things like Medicaid work requirements, you know, they would kick in at the end of 2026. That potentially could get pushed back. Very important to solar investors, the Inflation Reduction Act. Some of that language could also get pared back. We'll probably see that play out over the next 2 to 3 weeks. And then I think the Senate, if they had all their ducks aligned, would try and go for a vote probably by mid to late June. But don't be surprised if this just bleeds back another couple weeks and we see this in July.
Elon Musk apparently ditching D.C., didn't like the bureaucracy, going to go back to his company. What does that do for Doge, for cost cutting, for anything?
So there's two really aspects of the Doge that's really important to investors, and that's obviously, you know, what is the federal government spending outside of this one big beautiful bill, aka the appropriations process. Now, Bloomberg Government actually put out a piece this morning. They have a really cool chart in there that shows you the government expenditures by agency for the month of May for 2025 versus 2024. And the agencies are spending almost about half of what they spent last year. So Doge has definitely done an important, you know, influence in terms of getting agencies to spend less. But ultimately, it is Congress that needs to decide what the appropriations is and what is the spend here. That's going to come up in September, but it's also going to come up in a rescissions package. The White House will most likely send it to the House next week, and they'll say, look, we want to codify a lot of these Doge cuts. We need you to pass this. I would say, though, even though the filibuster isn't subject to this, so it just requires a majority vote in the House and the Senate, a lot of times policymakers are like, look, I love the idea of cutting federal waste on paper, but a lot of that federal waste is also going to my district. So I'm not sure this package will continue or will pass. And I will say, just at least at a first glance, we're not seeing many market impacts to this rescissions package.
All right, I'm just looking at some BI litigation. We have some folks in Bloomberg Intelligence that just look at litigation because it impacts industries, it impacts companies, and sure enough, tariffs are, you know, first and foremost here. BI litigation analysis thinks there's a 60% chance the Supreme Court will side with the court's ruling and that tariffs may exceed the president's authority, but it will be very close. So that seems to be what President Trump and his administration are betting on, that they can get this past the court.
Yeah, you know, so that obviously, you know, that's my colleagues. And my colleague Holly Frum is the one that's leading this effort. She's actually chatting with clients as we speak. But I will say that I was talking to her prior to coming on air, and she said that if the Supreme Court were to come out and say, we are going to take up this case and potentially implement a stay, that could be indicative of their thinking going forward. Because the red line that you showed before I came on the air talked about how the Supreme Court could potentially take this up this week. If we see signs from the Supreme Court that they're somewhat amicable to fast-tracking this, ultimately, it could be beneficial. Now, still, it's very close to call, but Holly's original timeline is that if the Supreme Court says that they're not going to take it up, and this actually may have to go through the Court of Appeals and so forth, you would see an ultimate decision on this in the fourth quarter of this year.
What kind of questions are clients asking you right now? Like, the world's really changed in the last couple weeks. What are they asking you the most?
Well, obviously, with today, it's the tariff news, and how are companies preparing for this? Are tariffs off as we speak? And our response to that is obviously, the White House has the ability to appeal. They have appealed, but really, it's just the future of what President Trump wants to do in terms of tariffs. Obviously, there was discussion yesterday of the taco trade, if you will. And what I will say is that President Trump truly believes in tariffs. He still believes in them. He believes in them as a point of leverage and a point of negotiation. And so whether or not it's using IEEPA or Section 301 or Section 232, tariffs are here to stay, and they're most likely here to stay for the next 4 years. But are you getting a tariff like 145% tariff on China, or are you getting a 10% tariff on the United Kingdom? Those are the questions that the clients want to know, and we'll see that play out over the next few weeks and months.
And Nathan, I can't help but notice that the Democrats are awfully quiet these days. They've been since the beginning of President Trump's administration. And my understanding was, yes, they're a minority, but not by much. And it was razor-thin majority for the Republicans. It doesn't feel that way from the Democrats. Am I overthinking that?
No, actually, the Democrats are somewhat irrelevant when it comes to tariffs and also the One Big Beautiful Bill, because tariffs, President Trump is doing this via executive authority, so the Democrats aren't involved. And when it comes to the One Big Beautiful Bill, they're doing it via reconciliation, which bypasses the Democrats. But the Democrats will be able to start to fight back later this year, because once the Big Beautiful Bill passes, that's about it for Congress. And so come September, you're going to have things like the government funding or a government shutdown and so forth. And the Democrats are really going to try and start positioning themselves for next year. It's just that the Republicans are using procedures and processes at the moment that bypasses them. And as a result, Democrats are really struggling to figure out how to combat that.
All right, Nathan, really appreciate it. Thank you very much, Nathan Dean, Bloomberg Intelligence Senior Policy Analyst. He's definitely really busy, but I feel like maybe things have calmed down a little bit for him.
Yeah, and he's
relative from what they were like a month ago.
His breadth of knowledge just amazes me about how all that stuff works down there. Kind of who does what bill, markups here. I mean, he and Henrietta Trez, you get them together like at a cocktail bar in Georgetown. They could just go nonstop.
Oh yeah, super fun.
Yep.
And then speaking of, and you brought this news up earlier, the Trump administration said it would go to the U.S. Supreme Court as soon as Friday if a federal appeals court does not put on hold a decision finding that most of President's tariffs are illegal. This is in a court filing in D.C. today. So we'll see how that winds up unfolding. Of course, there are other ways that you could still impose tariffs, but you have to wonder now if any tariff threat has no teeth, even if, say, Trump gets his way and he's allowed to use it, we now specifically know it is solely being used as a negotiation tactic.
Yeah, it's interesting. We'll see how this goes. I mean, but we know President Trump, just from his public and his private dealings, is not afraid to litigate. And so, again, the Supreme Court, it just feels like is going to be the last voice heard on a number of key issues here as it relates to policy coming out of Washington, D.C. So we'll stay on top of that. We have our great reporting at the Supreme Court, as we always do, and that'll bring us the latest there. Looking at the S&P 500, we are up 11 points there, so we'll keep an eye on that. We turned decidedly mixed. The Dow's down 83, the NASDAQ's up 95, so a little bit of mix there. Coming up, Pujan Sobhani, Bloomberg Intelligence Senior Semiconductor Analyst. He's going to help us recap the NVIDIA earnings. Pretty solid.
This is Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, let's talk about NVIDIA. That's kind of the story of the day. I think they came out with some pretty solid numbers. I think the market feels kind of the same way. The stock's up 5%. Yes, there's still some China headwinds, and that's putting it politely. There's some serious headwinds coming out of China in that part of the world. Kunjan Sobhani, it's his job to tell us what's going on. He's a senior analyst. He covers the semiconductor companies for Bloomberg Intelligence. He's based right there in Silicon Valley in the heart of San Francisco. Great offices Bloomberg has in San Francisco, right on Pier. Either 3 or 6, I can't remember which one it is, but they're awesome. Kunjan, what'd you make of the quarter? What's the takeaway from NVIDIA that you saw last night?
Yeah, two big takeaways. The GB200 RAM continues to be stronger than we expected or people anticipated. We believe, based on our math, the GB200 came in $3 billion above expectations, both in 1Q and fiscal 2Q, which is what helped them beat the numbers despite the significant China headwind, which was $8 billion for 2Q. The second key point was, if you take out the China write-down, gross margin actually came in better than anticipated, again, suggesting that GB200 yields and cost optimization are running better than anticipated. And we now expect margins to continue to rise through the year, exiting year at mid 70%, which we believe was the very key, a lot of key important factor for the long-term investors in the company.
Yeah, that's what you were mentioning yesterday, that making sure that that NVIDIA can deliver the mid 70s for margins at the end of the year. So what are your outstanding concerns / questions when it comes to NVIDIA?
Well, the number one is we really hope to hear the new China variant and get clarity on it, which didn't happen. There have been some rumors flying around that might soon happen, both from NVIDIA and AMD. But as we would like to get it officially, the specs, what kind of ASPs and what sort of applications it will be targeting to, as soon as possible, to put those concerns at bed. The other key thing which right now they did help reduce the risk, which is slow down from the hyperscalers and cloud. We don't see that risk, but as we get into fiscal 4Q with the August timeframe, this is when hyperscalers and clouds really think about their CapEx budgets for next year. That will be another key milestone for them.
The revenue it gets from China, I don't know, 15%, 20%, I'm not sure what it is. I know it's been declining. Could that go to zero? And if so, can the stock still work if that were to go to zero?
So at this point, the revenue from China within data center is almost zero, right? And there is estimates don't include anything back from that for at least for this year. So that's almost gone to zero. There is definitely China revenues coming from their gaming segment and their auto segment, but the data center, which is the real meat of it, which they were expected to sell about 15 billion of it just this year from the H20, which has almost gone to zero. So until the new compliant chip does not come out and they start selling, it's essentially down to zero right now.
We were talking earlier, two-man deep, about how important Middle Eastern clients were to NVIDIA, for example, and the kind of CapEx that they're spending. What other growth areas or regions do you think are going to really start delivering?
Yes, a couple of key regions we are keeping an eye out. Just like you mentioned, Middle East, there are a lot of sovereign entities. So just don't think of Middle East, think of like India, Japan, and a lot of other countries, because right now having self-regional AI models, having regional AI localized data centers is national priority for a lot of emerging and big countries. So all of these regions have already announced planned and big budgets based on their respective GDPs to spend on. So NVIDIA will be a big beneficiary of that. The Middle East is just a key example. Like I said, you have other regions, especially India and Japan, investing heavily here as well. The second key driver outside of the top 4 CSPs are going to be the enterprises now. One big example is XAI. They have announced significant big projects. The other second example is the Stargate project. So we anticipate a lot more such projects at the enterprise level coming in, where they will start to pitch in to robust billions of dollars of growth for NVIDIA.
Kunjan, what's the competitive landscape these days? NVIDIA versus who?
Yes, the answer to that's yes.
But just for theoretical purposes, the second biggest competitor in the GPU landscape is AMD. But the bigger threat to us is the ASIC providers like the Broadcoms and Marvell, because in terms, when you look at the TAM sizing, right now the AMD's market is what the revenue they're generating is still significantly small, versus the ASIC market is expected to grow faster. And that they are not a direct competitor, that you don't replace out an NVIDIA GPU, that they are not a merchant GPU, but they still take away the wallet share at the same large customers. So they could start deploying their own ASICs and not rely as much on the NVIDIA GPUs. That's a long-term risk.
That's a long-term risk. All right, really great, amazing stuff. I love your take. Kujan Sobhani, one of the best out there, Bloomberg Intelligence, senior semiconductor analyst, helping us break down NVIDIA earnings. And should point out, we're losing some steam here, Paul. The Nasdaq is only up by about 0.1%.
Yeah, and we got the Dow Jones Industrials, the John Farrow Index. It's off 225 points. That's a 0.5%. So we started, in the futures market this morning when Tom and I started, it's up, close to 1% across the board here. So kind of losing some steam here. But again, some solid numbers coming out of NVIDIA, as Kunjan was just mentioning. And that's generally, I think, reassured some of the tech investors out there about AI demand.
Yeah. Absolutely. And then, of course, those headlines we got about 20 minutes ago, the Trump administration now asking an appeals court to pause the tariff ruling, saying that it might ask the Supreme Court on Friday to keep those tariffs intact. So we give a little space, and then maybe we take away a little space, but it does beg the question within the market, how much headwinds can you and should you be pricing out? For our listeners in the U.S., here's a reminder. You can listen to us via satellite radio, Sirius XM, channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by ShipStation. Stay with us. Top stories, global business headlines coming up right now. This is Bloomberg.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. The Trump administration says it will challenge the U.S. Court of International Trade's ruling that blocks most of the tariffs the president has deployed under an emergency powers law. Dallas Morning News business reporter Javier David.
There are ways that they can try and force the issue, and they're most certainly probably going to appeal. But for now, the markets are signaling they like this. And if the president is wise, he'll take this out. Like, markets never like these tariffs. They never will.
A federal judge has extended an order blocking the Trump administration's effort to bar Harvard University from enrolling foreign students. CBS's Nikki Batiste on campus.
I've heard from different students. They've had hard conversations with their classmates here and tried to unite and just defend Harvard as Harvard fights to really keep this institution, the oldest university in the country, as it's always been, a welcome place for foreign students.
Secretary of State Rubio says the U.S. will begin revoking the visas of some Chinese students, including those linked to the Chinese Communist Party or studying in critical fields. About a week after 2 Israeli embassy staffers were shot and killed outside the Capitol Jewish Museum in Washington, the building reopened today. Rabbi Lauren Holtzblatt.
This is exactly what our city, our country, and our world needs, to keep telling our stories.
Overseas, Jerusalem reporter Linda Gradstein has more on the reaction to a Gaza ceasefire proposal from Trump envoy Steve Witkoff.
The cabinet ministers say Hamas is now weak and Israel should continue the war in Gaza until Hamas surrenders. The press reports say the Witkoff plan does not say that Israel must agree to end the war after the initial ceasefire, but is vaguely worded.
The latest Trump clemency moves include a reality TV couple, a former congressman, and an ex-Chicago gang leader. CBS's Scott McFarland.
In many of these cases, Trump claims a weaponized Department of Justice launched the prosecutions that he's wiping off the books. But it's worth noting the January 6 cases, which were the focus of his first wave of pardons this term, were launched in the final days of the first Trump term.
At the Sean Combs sex trafficking trial, CBS's Katrina Kaufman says there's testimony from a woman who had ties with Combs' ex-girlfriend, Cassie Ventura.
Today we're hearing from Mia. That's the pseudonym for a former employee of Combs who's one of the victims at the heart of this case. She both suffered abuse from Combs and bore witness to some of the abuse of Ventura. We've already heard her name come up in a number of stories from other witnesses on the stand.
And checking Wall Street right now, a rally has fizzled. The Dow is down 222. This is CBS News. In a Boston neighborhood, the mascots might as well be a rat.
In Alston, not far from Harvard and MIT, rats are so common that an annual event is named the Rat City Art Festival.
And rats!
City inspectors recently toured parts of the neighborhood with residents guiding them through the worst areas. Paula Alexander.
Go under here. They come out with food.
Inspector Charlie McGevna.
Probably getting right underneath here. See that?
Yeah.
Rats even chew through heavy plastic trash receptacles.
The whole city is infested with rats.
Inspectors suggest spraying a combination of water and bleach on the receptacles. Rats hate the smell of bleach, they say. Christopher Cruz.
Rat infestation at the Nickman residence.
CBS News.
An Indiana win over New York tonight would set up the matchup for the NBA Finals. Oklahoma City won last night to get in. I'm Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Who needs the taco trade when you've got the court? Welcome to the Thursday edition as markets respond now to a federal court ruling we've been talking about all day on Bloomberg that blocks most of President Trump's proposed tariffs and those in place. We're going to get an update from Bloomberg's Tyler Kendall, who's at the White House today with more on the ruling from Bloomberg legal reporter Eric Larson with me here in New York. And we'll discuss the economic implications of all this with two experts, Bloomberg's Molly Smith and Stuart Paul, with us in studio to break it all down. And as Elon Musk winds it down, ending his tour of duty in Washington, we consider the impact of the Doge with our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the duration as we come to you live today from World Headquarters in New York. And an update on the markets with our friend Charlie Pellet. He's actually in the room. Charlie, what happened to our rally?
Part of the studio audience here. Fast-moving developments, a lot of it coming out of Washington. Precisely why you got to keep it locked into Bloomberg for the very latest. Early going, we were all cheering those solid results out of NVIDIA. Now investors have to face the harsh reality of slowing economic data, as well as legal uncertainties around President Trump's trade war. We'll have a whole lot more on that coming up right here on Balance of Power. But the headline moments ago, the U.S. says it may take the Trump tariff case to the U.S. Supreme Court on Friday. So right now we have got the S&P 500 index, yes, bouncing off session lows, but well off session highs. Right now the S&P down a point, little change there. The Dow down 177, a decline of 0.4%. NASDAQ, though, holding on to a gain of 36 points, up by about 0.2%. Your 10-year 4.42%, with the 2-year 3.94%. Gold up $38 the ounce, $33.25, up 1.2%, and West Texas Intermediate crude down 0.9%, $61.27 a barrel. Bitcoin now down 0.5%, just below $107,000. As for tariffs and the legal backdrop, Robert Kaplan is vice chairman at Goldman Sachs. He's also the former president of the Dallas Fed.
I think most clients are just now reacting, and we're actually at Goldman piecing this through, and I think our own judgment is the administration's more likely to find other authorizations to continue to do what they're looking to do. It's still our best guess that when this is all said and done, the tariffs will settle out in the low to mid-teens.
Former Dallas Fed President Robert Kaplan. Earnings news, NVIDIA up 4.2%. Shares of C3 AI surging by 25% after earnings. Salesforce.com down 6.2%. And shares of HP Inc. down by 7.8%. Balance of Power continues right now. Back we go to our New York studios. Here he is, Joe Matthew.
Yes, indeed. Nice to be in the fishbowl with the great Charlie Pellet. Thank you, sir. We'll be back to Charlie a little bit later on this hour as he watches Wall Street for us every day here on the fastest show in politics. We've lined up some important voices for you to deal with the news at hand as we watch Wall Street gyrate around the latest on tariffs here. A 3-judge panel at what now everyone knows to be the U.S. Court of International Trade, striking down the vast majority of Donald Trump's tariffs that we've been talking about every day here since January. Also, some of this money apparently has to be repaid to those firms who have already paid it. We're going to get into the details of the ruling with Eric Larson, who I'm lucky to say is with me here in New York. But we want to start at the White House, where this is quite the day here, and reaction from officials right here on Bloomberg. I don't know if the president has been on Truth in the last 5 minutes, but Bloomberg's Tyler Kendall knows. She's stationed on the North Lawn right now. Tyler, what do we know that's coming from the administration on this?
Yeah, hey, Joe. So really moments ago, the Justice Department, we learned, says that they're ready to take this fight to the Supreme Court if that's what it comes to. In a filing, they wrote, quote, absent at least interim relief from this court, the United States plans to seek emergency relief from the Supreme Court tomorrow, meaning Friday. So we're going to have to see how this ends up playing up. Now, keep in mind what happened here was this 3-judge panel ultimately ruled that the Trump administration wrongly invoked IEEPA, the International Emergency Economic Powers Act, when they imposed their so-called reciprocal tariff plan. The administration had been arguing that persistent trade imbalances amounted to a national emergency, but the court said that didn't really meet the definition of an extraordinary or unusual threat that's required as by the law in order to use these powers. In fact, you had the plaintiffs saying that really trade deficits have been persistent for decades as one example against it. Now, the White House really is pushing back on this. This extends to the so-called reciprocal tariff plans, but also other cases where IEEPA was invoked, including Mexico and Canada tariffs, as well as China tariffs over concerns about the U.S. border and fentanyl. But administration officials, including Peter Navarro, the senior trade advisor who was on Bloomberg television this morning, says that they have a pretty good argument going forward here.
We think we have a strong case, yes. We will immediately appeal and try to stay the ruling. But at the same time, the court, interestingly enough, basically said we were right, just use different rules and laws. So nothing has really changed here in that sense. We're still, as we speak, having countries call us and tell us they want a deal.
So, Joe, you hear Navarro there sort of allude to the fact that there's some other levers they can pull here when it comes to tariff policy. For example, Section 232. Those are those sector-specific tariffs. We're not expecting those to go away. Those were not impacted by this ruling. They're invoked on the basis of national security concerns, and there's a couple in the pipe, including pharmaceuticals as well as chips. Then also keep your eye on Section 301. That looks into unfair trade practices, but would require an investigation, so might not really last as long. And then lastly, Joe, I'd point you to Section 122. That's going to start coming up a lot. It allows the president to invoke tariffs for 150 days with a 15% ceiling, but it would require him essentially to declare a balance of payments crisis. And at the moment, it's not so clear if the White House would want to do that.
Wow. Listen to Tyler. Everybody's an expert on these rules now. Tyler, thank you so much. Live from the White House. Did you get all that? Section 122, the Trade Act of 1974, Section 232. Most people have never even heard of this court that we're talking about here, but I do turn to our friend Terry Haynes at Pangea Policy for the analysis that might explain what's turning into a blah reaction here on Wall Street. Terry says, on a practical level, well, I'll paraphrase, nothing changes here. Tariffs, as he writes, will continue unabated pending Trump's certain appeal, the CIT's summary judgment ruling. You just heard Peter Navarro. He said it right here on Bloomberg this morning. they're going to appeal this. They're going to try to stay this ruling. So as Terry says, nothing will change. And yeah, guess what? The tariffs will continue. Now, I'm not the expert on this. Eric Larson is. Can you imagine working for Bloomberg's legal team? You've got to cover everything from the handling of sensitive documents to an insurrection to now tariffs. Eric Larson here, who's an expert on everything, apparently. It's good to see you in New York. Thanks for coming on.
That's not quite.
You've helped us walk through a lot of complex cases. We've got another one here, and you just heard Tyler roll through any number of exceptions, exemptions, caveats that this White House is talking about. What does this stop, if anything, now?
Yeah, that's a really good question. And as we just heard, there are plenty of ways that a sitting president can implement tariffs, which normally, Congress handles. But there are ways for a president to do it. I think what this 3-judge panel at the Court of International Trade here in Manhattan is saying, you can't do that through the International Emergency Economic Powers Act of 1977. So that law doesn't even mention tariffs. And it had never been attempted to use it before to issue tariffs. So this was a new thing that Trump had tried. So far, it's not working out. The court, a 3-judge panel that included 2 appointees by Republicans, including one by Trump himself, decided that when Congress passed this law, this flat out is not how they intended it to be used. So there are ways that Trump can still do tariffs, but this law, essentially what the administration was saying is that a president can declare anything they want to be a national emergency and then invoke this law to impose tariffs on any country they want for any amount they want for any period of time. And that's how it was discussed in court. There was just a hearing in this court last week on these cases. So the plaintiffs were making it pretty clear they're overreaching, and this doesn't make sense.
Wow. Now, again, according to some of these rules like Section 232, Section 122, even if this ruling stays in place, the president might have some flexibility, but they want to stay. Is that likely to happen?
I know we have some some people are saying that this isn't a big deal, nothing to see here, there's other ways to do these tariffs, which is true, but on the other hand, they are filing documents with the Federal Appeals Court just recently, a few minutes ago, saying that the government faces irreparable harm if this decision isn't immediately stayed pending appeal, that it will have a devastating effect, that it would unwind months of foreign policy negotiations, this is quoting from the document, and at the expense of the nation's economic well-being and national security. That's how they described it, why they need to stay immediately for this. And they said that if they don't get it, then they will go to the Supreme Court to request an emergency stay tomorrow.
So we're going to spend the rest of our lives going to the Supreme Court here. Apparently, what if the administration just didn't abide by the ruling? What kind of authority does this court have to bring penalty?
Oh, that's a question for the ages. I think we don't really know that quite yet.
This is an administration that might test that.
Right, we're familiar with some of the immigration-related matters, and of course the famous case of the El Salvadoran man who was deported to that mega prison, and the Supreme Court said you need to facilitate his return, and TBD what happens with that. But so far we're not at a point where we are expecting the government to just ignore a decision. I would think that, as they've indicated, there are other ways to try to do tariffs, but you can see they're going to fight tooth and nail, clearly, for Trump to be able to use it through this law, which is pretty sweeping if it works.
Well, you mentioned that we have judges appointed by President Trump in one case, Obama, and Ronald Reagan.
Right.
Do these 3 judges tell us anything about what the SCOTUS would think?
It's impossible to really say. We know that these judges are sometimes unpredictable.
It's my job to ask you impossible questions.
But during the hearing, I will say that they did appear to be skeptical in some of the questions that they were asking the Justice Department lawyers on this matter. Kind of had me thinking that might be the way that they were leaning, and of course now we've seen that they were. But I guess the question boils down to a lot of these court cases that Trump is involved in over a lot of his executive orders on everything under the sun. How sweeping is the president's executive power? That's what a lot of these cases get down to, and this is certainly one of them. Can he declare anything to be a national emergency and then declare tariffs on top of that? One of the judges during the hearing asked, okay, so what if there's a peanut butter shortage? can the president declare that a national emergency and put tariffs on peanut butter? And basically the government was like, well, maybe. So,
anything's possible.
Yeah.
Wow, fascinating. If you like peanut butter, this is incredible, and it sounds like we're going to be talking again maybe when this reaches a higher court. Eric Larson, thank you so much. In the clutch, as always, Bloomberg's legal reporter, and thanks as well to Tyler Kendall at the White House as we try to put this together on the legal and political side. We'll do this next on the economic side. Molly Smith and Stuart Paul with me here at World Headquarters in New York on the economic implications of this ruling. Stay right where you are for more ahead on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Great day to keep it locked into Bloomberg. We got fast-moving markets here. The S&P 500 index back in the green right now, looking at an 11-point advance, 5,900 even, up now by about 0.2%. The Dow does remain lower, down 74, drop there of 0.2%. Nasdaq up 83, up 0.4%. So the S&P moving from a loss to a gain right now. Nasdaq 100 index up 0.2%, and the Bloomberg Mag 7 7 index ripping higher by 0.9% right now. NVIDIA up by 4%. The 10-year 4.42%. The 2-year 3.94%. Gold up $40 the ounce, up 1.2%. West Texas Intermediate crude now down by 1%, 61.22 a barrel on WTI. Lots of earnings. Best Buy is reducing its sales and profit outlook. Best Buy shares down now by 8.4%. Kohl's, the department store operator, reported better than expected comparable sales. The stock down 1.6%. Foot Locker's sales slump persists in the latest quarter. A potential headache for Dick's Sporting Goods as it prepares to acquire the struggling sneaker chain. Shares of Foot Locker up 0.1%, and Dick's Sporting Goods up now by 0.8%. And a headline from the Bloomberg: Ukraine's Vladimir Zelensky says Russia still has not handed over its peace memorandum. Recapping, S&P up 11 now, up 0.2%. Balance of power continues right now. Back we go to our New York studio. Here he is, Joe Matthew.
This is where it all happens. You know, they call it the fishbowl. I'm usually down in Washington. Charlie's here in New York. We gaze at each other through the cameras. But we're together here in the fishbowl, swimming around for the course of today and tomorrow. Kaylee Lyons will join us as well, of course, in our second hour here on Balance of Power. We have mobilized at World Headquarters in New York, and it's great to have you with us here. I'm Joe Matthew on Bloomberg Radio, Satellite Radio, Channel 121, on YouTube, where you can find us by searching Bloomberg Business News Live. We're on Bloomberg Originals now as well, and I haven't even talked about the podcast yet. So when we talk about the economy on this broadcast, we tend to reach out to Molly Smith and Stuart Paul. One of them can usually join us. But when we come to New York, we get to have them both. Think of this as like a little economic midday lunch party. We started by talking data, but then we got the ruling on tariffs, and I'm going to put them through the ringer on both of these things. They're good friends of the program, and they help to run our economic coverage on the terminal, online, and yes, on the air. Molly Smith, Bloomberg Economics editor. Stuart Paul, Bloomberg Economics U.S. economist. Nice to see you both in the flesh.
Good to be here.
I want to start with the data, but I really actually need to start by asking you about this tariff ruling, because now nothing matters again, right? Didn't we learn in the Fed minutes this week that nothing matters? Everything's backward looking until Donald Trump decides to speak around 12 o'clock in the afternoon. Now, he hasn't spoken yet today, so this could all change again. But Stuart, when you heard about this tariff ruling, does this bring us back to zero? Does it mean anything different for the economy? Or is the damage, as some would suggest, already done?
Well, the damage is already done when we're thinking in the rear view. If we're thinking like the Fed and we're trying to anticipate where the economy is going, it provides a little bit of relief. Now, the real question is going to be just how persuaded are businesses and consumers that a relatively low average effective tariff rate is going to stay in effect. That's to say, how persistent is the court's ruling going to prove, or is Trump going to try whatever other faculties are available to him to try to re-implement tariffs? And the reason why that matters so much is because the printed data are going to evolve according to how consumers are behaving. And if they think that Trump is still going to continue trying to implement tariffs using whatever other authorities are at his disposal, they're going to pull forward imports once again, as they did in the first quarter, and that's going to actually make the printed data a little bit worse. It's going to make growth a little bit worse. If they think that Trump is going to have to back off in light of the court's ruling, we could actually have a smoother GDP growth trajectory ahead, which puts the Fed a little bit at ease, and it allows the Fed to think maybe those inflation pressures are not going to materialize, and they can resume cutting, albeit at a slower pace in the second half of the year.
So, Molly, you guys are twisting yourselves into pretzels to cover data and bring some kind of perspective and context, knowing that most of the time it's backward looking, and the whole world has shifted under your feet. The Fed minutes, as I mentioned, were kind of the ultimate example of that. Like, well, policymakers are freaking out about tariffs, but that happened before the pause. So we crinkle that up and throw it away. What do you pay attention to?
I mean, I think like just building on what Stuart said here is that like the whole issue is that the uncertainty of where we go from here is still very much alive. Like, you know, is this trade court ruling the end all be all of what happens? Like, I tend to doubt it. I would think that Trump, like Stuart said, is going to try to do whatever he can to revive tariff policy to the extent that he's trying to. And that, remember, like, this is part of a whole bigger legislative agenda that he's trying to push through, and that with all of these things that are moving through with like the tax bill, a lot of this also depends on there being revenue from tariffs. And the ones right now that the court has blocked would be the ones that would generate the most revenue.
The baseline tariffs.
Those are the big ones.
Yes.
And the bigger reciprocal ones also, all of the ones that are paused right now. So I think right now, if just like you're looking at, you know, has uncertainty been absolved? I would say no. I think it's still very heightened, and who knows how businesses and consumers are going to respond then. So yes, the minutes, of course, incredibly backward looking. I mean, they came out before the pause on China. They came out before, obviously, this court ruling overnight. So who's to say where we go from here? But it certainly, I think, would vindicate the Fed. And like, we're staying on pause right now. That really is the best course of action.
Talk about data dependent here. Boy, Stuart, you know, it's interesting. It's like a damned if you do situation, right? The markets freak out. We've got tariffs. Do you know what that's going to mean for inflation? We could have a recession around here, stagflation. You take the tariffs away and the bond market's suddenly upset that we're not raising money to help pay for tax cuts. Which is worse?
I think that's probably a little bit worse to maintain tariffs in place. What's a little bit tricky is that you read op-eds from Navarro, or you read other sort of analysis that's put out by the West Wing, and they hope to have the big, beautiful bill scored in a way that for some reason incorporates tariff revenue that comes from the West Wing, not from Congress. But this is exactly why tariff revenue and policy from the West Wing, rather than legislation, is excluded from CBO scoring. These are things that can go away with a pen stroke, and whether that's from a trade court judge or the next administration. And when that's the case, the bond market should keep its eye on the legislation, and the legislation right now scores as expanding the deficit by a few $1 trillion. And for that reason, the bond market should be relatively upset, once again, that this revenue is going away. It should have always been of the mindset that this tariff revenue could just go away.
So, but Molly, we get Republican lawmakers here every day who say, yeah, but you don't get it. The CBO is wrong. They should have dynamic scoring and factor in the growth that will come from the tax cuts. They're not going to do that. But is there some truth to it?
I mean, look, there is like some truth to the idea of looking at the totality of the policies, sure. But I think when
does that elusive growth, though? That's always the argument for tax cuts. Is it real?
I mean, yeah, how can you really sit here right now and know what that's going to produce? And the tariff effect still is just so fluid. And, you know, even if you are going to get like some bit of revenue from this, I think the argument all along has just been that like it's not going to be sustaining, and that the bond market should rightly focus on that. That like, let's say that this court ruling didn't happen, that you're still going to have these punitive tariffs in place. At some point, people are going to be, you know, stop importing all of this stuff because it's just prohibitively expensive to do so. That revenue is as such going to fall, and they're going to have to find other sources of making these goods. So it's really just not a sustainable source of revenue for the administration to count on, or for the bond market to count on.
Well, you know what, I'm going to ask you after this big windup, now I'm going to ask you to look backward, because we do have data to talk about here. I'm pretty sure, Molly, you were on the air with us when we got the first swing at GDP showing the downturn in the quarter. What's new, if anything, in this number?
So the biggest revision to the number today was really just looking at consumer spending, and that accounts for roughly 2/3 of GDP. So that grew at a slower pace in the first quarter than originally reported. That was the biggest takeaway for me, as well as looking at that the trade deficit was actually, or the impact from trade rather to GDP was even bigger than what we initially had seen. Granted, there were some factors that mitigated this, that it ended up being that GDP shrank at a lesser rate than initially reported. But I think like what seems to be the focus more is like these downside revisions to consumer spending and the trade deficit.
So you have a downturn here, Stuart, and you know what the next question is, you know, are we in a recession? Is there one coming? Is this a one-off?
No, we're not in a recession. We are seeing some more precautionary savings on the part of consumers. Remember, though, that the savings rate is still exceptionally low. And so when there is going to be a retrenching of consumer spending, it's likely going to be more material than just a mere slowdown in PCE spending to a 1.2% annualized rate. I think that it is possible that we do see 2 quarters of negative GDP growth, but we still do have reasonably robust domestic final demand That's to say consumer spending and fixed investment growth. And I think that that's what's more important than the headline GDP figures. We just got jobless claims this morning. Initial jobless claims still tame at about 240,000 for the week that just ended. And even though the labor market is cooling, the unemployment rate remains low. So not quite in a recession, or at least not one that would be judged to be not in an economic environment that would be judged to be a recession by the famous National Bureau of Economic Research.
Yeah, we learned a lot about that when we had the 2 consecutive quarters in the Biden administration, right? And I was schooled. It's not as simple as that. You guys have like 12 boxes to check before this really becomes a recession. So what's on your radar, Molly? Is it the next jobs report? What's going to matter in the next couple of weeks?
Yeah, definitely. We've got the next jobs report due a week from tomorrow. And tomorrow we also get a look at April inflation-adjusted spending. So that's going to be a big one to look at, just looking, what's the early indication in the second quarter of how things are panning out. Yeah, I mean, it's, of course, GDP is such an all-encompassing natural gauge to look at for how are we going to talk about the overall health of the economy. But as Stuart's talking about here, rightfully so, the trade impact right now is just really, it's really just clouding what the underlying measures of consumer and business spending would tell you. And those are the right figures to look at right now.
Yeah, interesting. When are we going to see, Stuart, the impact in a jobs report of the DOGE, the federal worker layoffs, or is that not going to materialize in the hard data?
It's still pretty elusive. We are expecting to see a slowdown in the headline pace of hiring in the May jobs report. We're expecting to see about 90,000 jobs added, in part because of DOGE. When you look at the regional economic consequences of the pullback in government spending, the efficiency attempt, it does look to be the case that there are some regional consequences. At the national level, it's a little bit less material, but when it comes to the labor market, uncertainty is the name of the game right now, and we are seeing the consequences of uncertainty, likely with just 90,000 jobs added in May.
Yeah. What a fascinating dive here with you. I feel like we could make money on this, James. Power lunch with Molly and Stuart. We could take this, right? We could sell tickets for this. You guys up for that?
I'm up for it.
Move here and sign us up.
We could do this, absolutely, on the road. Starting at World Headquarters. Thank you both so much. Our 2 great minds on the economy, Molly Smith and Stuart Paul, helping us understand what's actually happening here in the world and the cross currents that we're all experiencing together. Thank you for a great conversation. Our panel is up next. And of course, we mean Rick and Jeannie when we say that. Bloomberg Politics contributors with a lot more to talk about here when it comes to not only the news from the White House, but who's leaving the White House. Elon Musk is winding it down. Friday, tomorrow, is it for the leader of the DOGE. We'll have that and a lot more coming up on the fastest show in politics. Thanks for being with us on Bloomberg Radio. Balance of Power. This is Bloomberg.